Selain itu, OJK Institute juga membangun knowledge management system sebagai media pembelajaran dan pertukaran knowledge secara digital yang dapat diakses oleh seluruh SDM sektor jasa keuangan. Indonesia saat ini telah menerapkan strategi pengembangan SDM berbasis kompetensi. OJK Institute bekerja sama dengan instansi-instansi terkait dalam menyusun suatu standarisasi kompetensi yang disebut dengan SKKNI yang kemudian diturunkan menjadi KKNI. SKKNI dan KKNI dimaksud digunakan oleh lembaga sertifikasi profesi atau LSP dalam penyusunan skema sertifikasi, pengajuan rekomendasi, dan pengajuan pendaftaran ke OJK. Selain 3 fungsi utama tersebut, OJK Institute juga berfungsi sebagai license officer, praktek kerja lapangan, visit OJK, penelitian mahasiswa. OJK Institute memfasilitasi program praktek kerja lapangan di lingkungan OJK bagi pelajar dan mahasiswa. OJK Institute juga menerima kunjungan lembaga pendidikan yang ingin memperluas wawasan bidang tugas dan fungsi OJK serta sektor jasa keuangan. Selain itu, OJK Institute senantiasa memfasilitasi mahasiswa dalam hal penyediaan data atau informasi terkait dengan tugas dan fungsi OJK. Dalam rangka mendukung pengembangan SDM sektor jasa keuangan, OJK telah menerbitkan Cetak Biru Pengembangan Sumber Daya Manusia Sektor Jasa Keuangan 2021-2025 pada 25 Mei 2021. Cetak Biru tersebut memiliki visi yaitu mewujudkan SDM sektor jasa keuangan yang profesional, berintegritas, dan berdaya saing global dalam rangka meningkatkan kinerja sektor jasa keuangan. Visi tersebut dijabarkan dalam 4 pilar misi, yaitu 1. Mengembangkan standarisasi kompetensi SDM. 2. Mengembangkan metode peningkatan kompetensi SDM. 3. Mengembangkan infrastruktur pendukung pengembangan SDM. 4. Mengembangkan SDM yang memiliki kompetensi digital. Implementasi Cetak Biru ini kemudian dituangkan ke dalam 21 program kerja yang akan dilakukan dalam kurun waktu 5 tahun dengan melibatkan peran aktif dari industri, akademisi, OJK, dan lembaga lainnya. OJK Institute memiliki komitmen yang kuat untuk melaksanakan Cetak Biru tersebut bersama-sama dengan pengawas, industri, akademisi, dan pemangku kepentingan lainnya. Cetak Biru tersebut diharapkan menjadi kerangka acuan dalam mendukung pengembangan SDM sektor jasa keuangan. OJK Institute, Center of Excellence. OJK memiliki visi dan komitmen yang kuat dalam pengembangan sumber daya manusia sektor jasa keuangan secara berkelanjutan, guna mendukung terwujudnya industri jasa keuangan yang stabil, kontributif, dan inklusif. Kami sadar, dalam mewujudkan visi tersebut, peran SDM yang unggul dan kompeten menjadi kunci utama. OJK Institute hadir untuk menjadi Center of Excellence, guna mendukung pengembangan sumber daya manusia sektor jasa keuangan dan melakukan riset-riset yang inovatif dan terkini. Pengembangan sumber daya manusia sektor jasa keuangan yang kompeten dan profesional menjadi salah satu faktor penting dalam mendukung keberhasilan kinerja lembaga jasa keuangan. OJK Institute memiliki 3 fungsi utama. 1. Mengembangkan kapasitas SDM sektor jasa keuangan melalui penyelenggaraan program pelatihan, seminar, dan workshop. 2. Melakukan riset yang inovatif dan visioner. 3. Merancang dan mengembangkan standar kompetensi SDM sektor jasa keuangan, serta melakukan penata laksanaan lembaga sertifikasi profesi. Dalam rangka meningkatkan kompetensi SDM di sektor jasa keuangan, OJK Institute menyelenggarakan berbagai program capacity building, baik dalam bentuk workshop ataupun webinar. Menghadirkan narasumber terbaik yang memiliki keahlian di bidangnya, antara lain bidang perbankan, pasar modal, IKNB, teknologi digital, dan lain-lain. Riset di OJK Institute berbasis akademik dengan memperhatikan perkembangan terkini. Penyusunan riset menghasilkan temuan dan rekomendasi yang mendukung kinerja sektor jasa keuangan. OJK Institute juga menyediakan perpustakaan digital e-library OJK yang mengelola koleksi buku digital, koleksi internal OJK, koleksi buku fisik, dan koleksi e-resources mitra OJK. Selain itu, manfaatkan juga aplikasi eLib OJK untuk membaca e-book melalui smartphone. Minisite OJK Institute tersedia sebagai portal media digital untuk mempermudah publik mengakses berbagai informasi kegiatan OJK Institute terkini. Selain itu, OJK Institute juga membangun knowledge management system sebagai media pembelajaran dan pertukaran knowledge secara digital yang dapat diakses oleh seluruh SDM sektor jasa keuangan. Indonesia saat ini telah menerapkan strategi pengembangan SDM berbasis kompetensi. OJK Institute bekerja sama dengan instansi-instansi terkait dalam menyusun suatu standarisasi kompetensi yang disebut dengan SKKNI, yang kemudian diturunkan menjadi KKNI. SKKNI dan KKNI dimaksud digunakan oleh lembaga sertifikasi profesi atau LSP dalam penyusunan skema sertifikasi, pengajuan rekomendasi, dan pengajuan pendaftaran ke OJK. Selain 3 fungsi utama tersebut, OJK Institute juga berfungsi sebagai license officer, praktek kerja lapangan, visit OJK, penelitian mahasiswa. OJK Institute memfasilitasi program praktek kerja lapangan di lingkungan OJK bagi pelajar dan mahasiswa. OJK Institute juga menerima kunjungan lembaga pendidikan yang ingin memperluas wawasan bidang tugas dan fungsi OJK serta sektor jasa keuangan. Selain itu, OJK Institute senantiasa memfasilitasi mahasiswa dalam hal penyediaan data atau informasi terkait dengan tugas dan fungsi OJK. Dalam rangka mendukung pengembangan SDM sektor jasa keuangan, OJK telah menerbitkan Cetak Biru Pengembangan Sumber Daya Manusia Sektor Jasa Keuangan 2021-2025 pada 25 Mei 2021. Cetak Biru tersebut memiliki visi yaitu mewujudkan SDM sektor jasa keuangan yang profesional, berintegritas, dan berdaya saing global dalam rangka meningkatkan kinerja sektor jasa keuangan. Visi tersebut dijabarkan dalam 4 pilar misi, yaitu 1. Mengembangkan standarisasi kompetensi SDM. 2. Mengembangkan metode peningkatan kompetensi SDM. 3. Mengembangkan infrastruktur pendukung pengembangan SDM. 4. Mengembangkan SDM yang memiliki kompetensi digital. Implementasi Cetak Biru ini kemudian dituangkan ke dalam 21 program kerja yang akan dilakukan dalam kurun waktu 5 tahun dengan melibatkan peran aktif dari industri, akademisi, OJK, dan lembaga lainnya. OJK Institute memiliki komitmen yang kuat untuk melaksanakan Cetak Biru tersebut bersama-sama dengan pengawas, industri, akademisi, dan pemangku kepentingan lainnya. Cetak Biru tersebut diharapkan menjadi kerangka acuan dalam mendukung pengembangan SDM sektor jasa keuangan. OJK Institute, Center of Excellence.
A very good morning, distinguished guests, ladies and gentlemen. We are about to commence our program for this morning. So for that, I would like to request everyone to please kindly join us inside of the ballroom and be seated. Once again, ladies and gentlemen, because we are about to start our program for today, we would like to request everyone to please kindly join us inside of the ballroom and be seated. Thank you.
Om Swastiastu. Assalamualaikum warahmatullahi wabarakatuh. Shalom, Namo Buddhaya, Salam Sejahtera. Welcome to Hilton Bali Resort and welcome to Paruman Ballroom Safety Briefing. Selamat datang di Hilton Bali Resort dan selamat datang pada pengarahan keselamatan Ballroom Paruman. You are currently in the Paruman Ballroom and we are not conducting training activities or performing alarm maintenance. If you hear an alarm, please stay calm and don't panic. Our emergency response team is currently looking for the alarm source. Saat ini Anda berada di Ballroom Paruman, dan saat ini kami tidak sedang melakukan kegiatan latihan ataupun sedang melakukan pemeliharaan alarm atau penggerak. Jika terdengar alarm atau penggerak, tetap tenang dan jangan panik. Tim tanggap darurat sedang mencari sumber alarm. In the event of fire, stay calm and don't panic. Please exit the ballroom and proceed to the assembly point. Our emergency response team will direct you to the assembly point in the parking lot. Jika terjadi kebakaran, tetap tenang dan jangan panik. Silahkan meninggalkan ballroom melalui pintu keluar terdekat menuju titik pertemuan. Selanjutnya Anda akan diarahkan oleh tim tanggap darurat ke titik pertemuan yang ada di lapangan parkir. In the event of earthquake, stay calm and don't panic. Utilize your desk and chair in the event of earthquake or stand in the corner of the building and protect your head from debris. After shaking stops, immediately exit the room to the assembly point. Jika terjadi gempa bumi, tetap tenang dan jangan panik. Gunakan meja dan kursi jika terjadi gempa bumi atau berdiri di pojok pilar. Lindungi kepala Anda dari reruntuhan karena guncangan saat gempa. Setelah guncangan berhenti, silahkan keluar dengan tenang melalui pintu keluar terdekat menuju titik pertemuan yang berada di lapangan parkir. In the event of tsunami, self-evacuation is possible to a predetermined assembly point. And our ballroom is located 40 meters high from the beach. Jika terjadi tsunami, evakuasi mandiri dapat dilakukan menuju titik pertemuan yang sudah ditentukan, dan ballroom kami terletak di ketinggian 40 meter dari pantai.
Ladies and gentlemen, a very good morning to all of you, and we would like to welcome everyone to the second OJK International Research Forum. And now, to begin our event on a patriotic note, we would like to kindly request everyone to please rise for the national anthem of the Republic of Indonesia. Hadirin dimohon berdiri. Menyanyikan lagu kebangsaan Indonesia Raya. Please be seated. Thank you. Dipersilahkan untuk duduk kembali. Assalamualaikum warahmatullahi wabarakatuh. Shalom, nama budaya, salam sejahtera untuk kita semua. Salam kebajikan, Om Swastiastu. Interpreted as may peace and happiness always upon us. A very good morning, distinguished guests, ladies and gentlemen. We would like to welcome everyone to the second OJK International Research Forum. May I have a big round of applause for all of us. Thank you. Thank you. It is an honor. My name is Putri Gorda to be the MC for this lovely morning. First and foremost, please allow me to convey my gratitude and warm welcome to the honorable members of Supervisory Board OJK, Mr. Divi Johansyah, Mr. Prasetyan Toko, Mr. Tito Sulistyo, Mr. M. Edi Purnawan, Mr. Didit Nurdiatmoko, Mr. M. Jufrin, and also Mr. Hernawan Bekti Sasongko. Welcome, gentlemen. And also to the members of Supervisory Board Bank Indonesia, Mr. Peter Abdullah, welcome. To the Deputy Commissioner of Human Resource and Information System, Mr. Irnal Fiskal Lutfi, selamat pagi Bapak. To the Senior Advisor OJK, Mr. Fahri Hilmi, Mr. Anung Herlianto, and also Mr. Anto Prabowo, welcome. To the head of OJK Institute, Mr. Agus Sugiarto, selamat pagi. And also we would like to extend our gratitude and warm welcome to our distinguished speakers. Welcome to Mr. John V. Owens, Mr. Karin Bunlert Fani, Ms. Ruo Jiao Janet Lee, Mr. Arif Perdana, Mr. Karim Indra Gupta Siregar, Mr. Kumar Ankit, Mr. Dong Shu, Mr. Dimitri Mahayana, and also Ms. J. Hyun An. Welcome to all distinguished speakers. Thank you for joining us. And also to Deputy Commissioners and Head of Departments, to the Head of OJK Office from various regions, to the Head of Governments Agencies, to the Directors of Financial Services Institutions, to the university professors and also academicians, and to esteemed guests, distinguished guests, ladies and gentlemen, once again, welcome to our very special event. And once again, I would like to feel your energy for this morning. May I have the biggest round of applause for all of us. Boleh tepuk tangan yang paling meriah untuk kita semua. Thank you very much. Distinguished guests, ladies and gentlemen, so the theme of our events today, this forum, is reflects our commitment to address the most pressing issues facing our society and finding innovative solutions through research and inquiry. And for your information, ladies and gentlemen, I would like to inform you about the participants and the audience for today's forum. So for your information, there are 1,531 people who registered to join this event online. You can see on the screen that we have already prepared for you. And the majority comes from the non-banking financial industry sectors, which is 33.6%, and the banking sectors, which is 27.4%, and from the academics, which is 15.8%, and the others are 10.8%, as you can see on the screen. Ladies and gentlemen, before we proceed to the next agenda, please allow me to run a little bit about today's event in details. That we are going to have the opening speech, followed by the presentations and the Q&A sessions, and the last one but not least, we are going to have the wrap-up and the closing. Distinguished guests, ladies and gentlemen, to commence our program for this morning, we would like to invite to please come up on the stage to deliver the committee report and welcoming speech, the head of OJK Institute. Ladies and gentlemen, please join me to welcome Mr. Agus Sugiarto.
Thank you, Ibu Putri Korda. The Honorable yang saya hormati, Member of Supervisory Board Otoritas Jasa Keuangan, Badan Supervisi Otoritas Jasa Keuangan, mungkin kami sapa dari sebelah kiri, yang kami hormati Pak Didit Nurdiat Moko, selamat pagi. Yang saya hormati Bapak Tito Sulistyo, terima kasih Pak. Yang saya hormati senior saya dan juga mentor saya, Bapak Edi Purnawan. Yang saya hormati juga senior saya juga, mentor saya juga, Pak Divi Johansa. Senior saya juga Bapak Hernawan Bektisa Songko. Dan guru saya juga Pak Agustinus Prasetentoko, terima kasih. Dan juga sahabat kami, Bapak Muhammad Jubrin, yang juga menjadi anggota Badan Supervisi OJK. Yang kami hormati, mungkin belum hadir, Bapak Peter Abdullah, anggota Badan Supervisi Bank Indonesia. Yang saya hormati, The Honorable Deputy Commissioner of Human Resource and Information System, Deputy Commissioner Sumber Daya Manusia dan Sistem Informasi, Bapak Irnal Fiska Lutfi. Yang saya hormati, Senior Advisor of OJK, Bapak Anung Herlianto, Bapak Farhilmi, Bapak Anto Prabowo. Yang saya hormati, Deputi Komisioner Pimpinan Kantor OJK, Bapak Iman Syah. Yang saya hormati, Ibu Yunita Lindasari, mohon maaf Bu, jadi lupa. Yang saya hormati, para pimpinan kepala kantor OJK seluruh Indonesia, dari level kepala departemen sampai deputi direktur. My honor to be here, 27 OJK Head of Regions. Yang saya hormati, Bapak Ibu pimpinan kantor OJK maupun pimpinan OJK di kantor pusat dan daerah. Yang saya hormati, Direksi, Komisaris, Pimpinan Industri Jasa Keuangan di kantor pusat maupun di OJK Bali, di IJK Bali. Yang saya hormati, University Professors and Academician yang jumlahnya cukup banyak hadir. Yang saya hormati juga para undangan lainnya. Assalamualaikum warahmatullahi wabarakatuh. Salam Om Swastiastu, Namo Buddhaya, salam kebajikan dan salam sejahtera buat kita semua. Ladies and gentlemen, it is very honor for me to have you here. We have a lot of distinguished guests here, from prominent speakers from various countries, also some VIP guests such as from TikTok. Thank you, Mr. Richard Su. Mr. Richard Su is Chief Risk Officer from Global Payment of TikTok. Thank you for coming. And the other guests. It is very honor to have you here, all of you gentlemen, ladies and gentlemen. First of all, I would like to extend a warm welcome to the second OJK International Research Forum held today in Bali. Last year, we have been successfully had the first International Forum of OJK in Jakarta, and at the time, the first research forum only attended by 250 people. Today, we have more than 350 participants offline, and more than 2,000 people watching online. I think the number here is still 1,500. Actually, the latest is 2,000 around the western part of Indonesia until the eastern part of Indonesia. Thank you, ladies and gentlemen, looking at watching the seminar from various places in Indonesia. Last year, besides we launched the first International Research Forum, we also launched the first ever OJK journal, what we call it the International Journal of Financial Systems. We have been trying to start the journal last year, and hopefully in the next 5–10 years, the journal of OJK will be in the Scopus. Please applause for us. Since launching last year, the journal already released 2 volumes, volumes 1 and volumes 2. And thank you very much for the support for all of you, ladies and gentlemen, for the release of the OJK journal. Following the success of the first research forum and the journal, we are very pleased to organize the second international forum today with the topic driving financial innovation to enhance a better financial life. This topic is very aligned with the OJK commitment, also OJK policy, to support digital financial innovation as well as to foster a dynamic and inclusive financial sector around the country. There are some reasons why we select the second research forum today with this topic of driving financial innovation to enhance better financial life. First, we would like to say that this topic is current emerging development around the world, who is raising the issue of digital innovation everywhere, regionally, internationally. Second, digital financial innovation has become the hot issue globally since the presence of digital technology. Third, financial sector has a huge opportunity to explore the advantages of the digital technologies as an integral part of financial innovation. Nowadays, we can see that the behavior of people everywhere has changed dramatically as a result from the presence of digital technology. The people want more everything in their life should be transformed into digitalization. And right now, more financial products as well as services are digitalized already. Consequently, the financial sector has been competing tightly in the market to provide the best digital innovation for customers. This reminds me about a quote from Steve Jobs. Steve Jobs says that, the founder of Apple, he says that innovation distinguishes between who is a leader and who is a follower. And therefore, again, we must be ready to face a new world of competition based on digital platform. Otherwise, the financial sector will be left by their customers. Digital financial innovation not only opens a huge opportunity for the financial sectors, but also brings some challenges and drawbacks that should be addressed properly and rightly. One of them is digital risk, who threats the sustainability of any digital application. Those risks including cyber attack risk, business continuity risk, third-party liability risk, as well as reputational risk. However, digital transformation, along with digital financial innovation, finally will enhance the quality of our life, drive up financial inclusion, create new hopes and jobs, and bring prosperity for the human being. Ladies and gentlemen, we are going to have a good discussion later that will be presented by the prominent speakers. For the first session this morning, we will have first Mr. John Owens. Please applause for him. He is a senior digital financial services advisor from Digital Finance Advisor, Miami, USA. Thank you, Pak, for coming. Mr. Karin Bun Hertvanik. He is Corporate Strategy and Innovation Division Head of Keuangan Bank, the second largest bank in Thailand. Thank you, Pak Adil. Ms. Ru Jiao Generally, General Manager from An International Singapore. Thank you for coming. Mr. Arif Perdana, Associate Professor of Monash University di Indonesia. In the second session, after lunch this afternoon, we will have Mr. Karim Indra Gupta Siregar, Chief Executive Officer from The Catalyst Indonesia. Thank you, Pak. Mr. Kumar Askit, Vice President of Paytm India, the first largest payment system in India. Mr. Dong Su, he is the co-founder of Advanced Intelligence Group and Chairman of Advanced AI Singapore. Mr. Dimitri Mahayana, Associate Professor from Bandung Institute of Technology. And last, Ms. Jai Yun An from Korea Inclusive Finance Agency. All the speakers will bring us various opinions and practices from different backgrounds that enrich our horizon on digital financial innovation. Ladies and gentlemen, the prominent speakers, in this event, we also highlight not only the importance of the research forum, but also the presence of the International Journal of Finance System owned by the OJK. The journal represents the important role of OJK as a center of excellence beside the primary task of OJK as a regulator and supervisor of financial sector. And henceforth, we would like to invite all of you who are interested on the area of research to support our international journal. We are very pleased to invite and to ask researchers, academicians, and practitioners from all around the world to contribute, to participate in this journal, to stimulate intellectual dialogue that will deepen our standing on the whole financial system. Ladies and gentlemen, again, we appreciate all of you everywhere who are attending this research today. We hope you will take your time until the end of the seminar later this afternoon. Last but not least, I would like to express my gratitude to all of the prominent speakers attending to the seminar from various countries, and every one of you who is attending the research forum. Terima kasih banyak. Also, my special gratitude directed to the research group within the OJK Institute, head by Ibu Ida Rumondang, who has prepared and organized this event very well. Also, thank you very much kepada Bapak Chandra Kusuma, who has been working with us to find out the best prominent speakers for today. Before adjourning the welcome speech, please allow me to say that the digital technology is an engine to create financial innovation nowadays. Ladies and gentlemen, thank you very much. Wassalamualaikum warahmatullahi wabarakatuh. Om Santi Santi Om. Selamat menikmati dan menyaksikan webinar ini. Selamat pagi, terima kasih.
Thank you very much, Mr. Agus Sugiarto. Distinguished guests, ladies and gentlemen, moving on to the next agenda, now I would like to invite the Deputy Commissioner of Human Resource and Information System of the Indonesia Financial Service Authority to please come up on the stage to deliver the keynote speech. Ladies and gentlemen, I present to you Mr. Irnal Fiskal Lutfi.
Thank you, Putri. Terima kasih. Your Excellency, Member of Supervisory Board of OJK, yang terhormat Pak Tito Sulistyo, Pak Agustinus Prastiantoko, Pak Divi Johansah, Pak Edi Purnawan, Pak Didit, pagi Pak, salam hormat Pak, Pak Jufrin, dan Pak Hernawan Bekti Sasongko, our senior. Member of Supervisory Board from Bank Indonesia, mungkin belum datang, Pak Peter Abdullah, Senior Advisor OJK, Bapak Fahri Hilmi, Bapak Anung Herlianto, and also Pak Anto Prabowo, Head of OJK Institute, Bapak Agus Sugiarto. Thank you, Pak, for your first speech. Head of OJK Office in Bali, belum datang mungkin, Ibu Kristianti Puji Rahayu. Our distinguished speakers, Mr. John P. Owens, Mr. Karin Bun Let Fani, Miss Janet Lee, Bapak Arif Perdana, salam hormat Pak, Bapak Karim Indra Gupta Siregar, Mr. Kumar Ankit, Mr. Dongshu, Pak Dimitri Mahayana, senior dan guru kami Pak, Miss Jae Hyun Han, Deputy Commissioner in OJK yang kami hormati Pak Iman Syah, Ibu Yunita, and our colleague from Head of Department in OJK, Head of OJK Office from various regions, Head of Government Agencies, Directors of Financial Services Institution, University Professors and Academicians, esteemed guests, ladies and gentlemen. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good morning, warm welcome to all present today. From the outside, I wish to take this opportunity to thank our college from the OJK Institute for hosting second OJK International Research Forum with participants from the governments, financial industries, and also academics. It is my great pleasure to join you today at the second OJK International Research Forum with the theme Driving Financial Innovation to Enhance a Better Financial Life. Distinguished guests, ladies and gentlemen, in today's rapidly evolving world, financial innovation are playing pivotal roles in shaping the financial sector, which strategically aligns with the OJK's roadmap for developing and strengthening financial sector technology innovation, digital financial asset, and also crypto assets 2024 until 2028. The OJK is taking proactive steps in financial innovation development due to the awareness of the important role of financial innovation in expanding financial services and enhancing financial inclusion, thus providing new opportunities for financial institutions to explore a wider market in channeling funds to unbanked and underbanked customers. In recent years, Indonesia has witnessed a remarkable surge in financial technology adoption, as seen from the Bank Indonesia report for Q3 2024, which shows that digital banking transactions were recorded at around 5,666 million transactions, or grew by 34.43% from the previous year. Again, electronic money transaction grew by 28.11% from the previous year to reach around 4,000 million transactions. And QRIS transaction grew rapidly by around 209.61% from the previous year, with the number of users reaching 53.3 million. The potential for increasing financial technology adoption is also seen from the SEA Economy 2023 report, which recorded the value of Indonesian digital economy at 82 million USD and is estimated to reach around 109 billion USD in the next year, 2025. Distinguished guests, ladies and gentlemen, the financial sector has experienced rapid technological advancements. The financial sector has begun to utilize AI, artificial intelligence, to improve efficiency, such as serving customers, assessing creditworthiness, and detecting potential defaults. Although offering many benefits and new opportunities, the use of AI also presents challenges and risks that require future mitigations. One of the primary challenges relates to data security and cyber security. In an increasingly digitally connected world and the use of AI, millions of confidential data and important information are stored in large databases and transmitted over the internet, making them vulnerable to cyber attack and data breaches if not properly secured. Furthermore, one of the prime targets for cyber criminal is the financial sector, which has a massive amount of sensitive customer data that can be misused. The next challenge is the threat of the workforce. The automation of routine tasks, which replace human roles, is causing shifts in the labor market and presents a serious threat to employment. Another important issue is the automation of decision-making process by AI algorithms in financial management, which leads to uncertainty regarding the accuracy and accountability of the outcomes. Therefore, it is crucial for us to revisit the question, how intelligent AI? Because at the end of the day, AI remains a machine, limited by its algorithm and the data, meaning that human involvement will still be necessary. As a result, to minimize risk and to take advantage of financial technology innovations, some areas need to be further developed, such as strengthening data and cyber security, navigating a complex technological landscape, clarifying regulatory frameworks, and also fostering public trust. Distinguished guests, ladies and gentlemen, in addition, another important area that needs to be encouraged at financial education and literacy, considering that there is still a gap between the literacy and inclusion indexes in Indonesia. As we know, which has a literacy index of 65.43 3% and an inclusion index of 75.02%. The gap results in risk, as some people use financial services without fully understanding the benefits and risks, making them vulnerable to fraud and involvement in illegal financial activities such as illegal investment and also online loans. Through financial education and literacy, people can become more prudent in utilizing financial products and services, fostering development of resilient financial ecosystem. Distinguished guests, ladies and gentlemen, to achieve these goals, collaborations from all parties is needed, including industry players, regulators, academics, and also other stakeholders. Therefore, one of the initiatives to explore and leverage opportunities from financial technology innovation is through the second OJK International Research Forum today. By facilitating the exchange of knowledge and ideas on frontier research and best practices in development of financial technology innovation, these events can build a strong knowledge base and actionable insights that can shape progressive policies and transformative practices. Through these events, we hope that all participants will enjoy the forum and gain valuable benefits from ideas, insights, experience shared by the speakers. Additionally, we trust these events will enhance our competencies and also capacities, enabling us together with other stakeholders to collaborate, to synergize, and contribute to shaping an innovative, inclusive, sustainable, and also resilient financial ecosystem. Thank you for being here today, and best wishes to all of us. I look forward to the productive and engaging discussion. Again, thank you very much. Wabillahi taufiq walhidayah. Assalamualaikum warahmatullahi wabarakatuh. Good morning.
Thank you very much, Mr. Irnal. Could you please remain on the stage? Mohon berkenan Bapak untuk tetap berada di atas panggung, because we are going to have the official opening of our event for today. And for that, I would like to also invite to please come up on the stage Mr. Fahri Hilmi, the Senior Advisor OJK Institute, and also Mr. Anung Herlianto as the Senior Advisor OJK Institute, along with Mr. Agus Sugiarto as the Head of OJK Institute, please. So ladies and gentlemen, we are going to have the opening ceremony that will be marked by touching the screen tab that we have already prepared for you. And for that, we would like to please Mr. Irnal Fiskal Lutfi to proceed by touching the tab screen in front of you. Please kindly take your position, gentlemen. Gentlemen, are you ready? Ladies and gentlemen, let's count together. In the count of 3, 2, 1. Give the biggest round of applause for the second OJK International Research Forum 2024 is now officially open. And now we will have the photo session together. For that, we would like to please the gentlemen to please kindly remain on the stage. Mohon tetap berada di atas panggung. And also we would like to invite the speakers to please come up on the stage to join the photo session. Mr. John, Mr. Karim, Ms. Ruo Jiao, Mr. Arif, Mr. Karim, Mr. Kumar, and also Mr. Dong Shu, Mr. Dimitri, and Ms. Jae Hyun. So please come up on the stage, please, to join us for the photo session. We would like to please all the speakers also to take the position on the stage. Official camera, please be ready in the center. Ladies and gentlemen, official camera in the center in the count of 1, 2, 3. One more time. 1, 2, 3. May I have a big round of applause, ladies and gentlemen. Thank you very much. And now we would like to please everyone to join on the floor for the photo session with all the participants in this forum, please. Kami persilakan Anda untuk mengambil tempat di depan panggung. We would like to please everyone to join us on the floor in front of the stage. We are going to have another photo session. And for that, we would like to request all the participants to please be upstanding. Boleh Bapak dan Ibu untuk dapat bangkit berdiri. Once again, please rise, ladies and gentlemen. We are going to have a photo session together. The official camera will take the photo from the stage. And I hope that everyone can get closer to each other, because it might be a little bit difficult to get everyone in a one frame. So could you please come closer to each other, ladies and gentlemen? A little bit closer. Mungkin boleh dipakai white ya, untuk fotografer kita ya. So please can you have a look. Official camera in the center. I'll have to count. Sudah masuk semuanya, Mas? Saya akan bantu itu. Sudah? Baik, masih di setting. Mungkin Bapak dan Ibu yang ada di belakang kalau tidak terlihat mungkin boleh diangkat tangannya ya, biar agak sedikit terlihat yang di belakang atau di samping ya. So everyone, let's have a photo session together. Official camera ready in the count of 1, 2, 3. One more time, could you please put your hands up, everyone, in the count of 1, 2, 3. May I have a big round of applause, ladies and gentlemen. Congratulations for the opening of the second OJK International Research Forum 2024, Driving Financial Innovations to Enhance a Better Financial Life. Terima kasih, dipersilakan duduk kembali. We would like to please everyone to be seated. Thank you very much. Distinguished guests, ladies and gentlemen, as the regulator of the financial services sector in Indonesia, OJK aims to promote inclusive financial innovations and enhance financial well-being through the development of innovative financial products and services. And as we all know that in today's rapidly evolving world, financial innovations are playing pivotal roles in shaping the financial sector. From fintech startup to established financial institutions, the focus is to create financial solutions that are more accessible, efficient, and tailored to individual needs to promote a stable, contributive, inclusive, and sustainable digital financial sector in Indonesia. The primary objective of this research of the conference is to facilitate a comprehensive understanding of how financial innovations can be driven to enhance a better financial life. By examining emerging trends, innovative strategies, and regulatory framework, we aspire to build a robust knowledge based on the actionable insight that can shape progressive policies and transformative practices. And distinguished guests, ladies and gentlemen, today we are going to continue with our first session for today with the topic of opportunities and challenges of digital financial innovations. And we are going to have 4 speakers for this session that will be talking about promoting digital financial innovation, what does it mean for us, and also the latest development on digital financial innovation, case study of Keuangan Bank. And also we will have the topic of creating an inclusive financial world through digital innovation, and also ethics in the age of digital finance, the dark side of digital financial transformation. And for this session, ladies and gentlemen, we would like to invite the moderator to please come up on stage. Ladies and gentlemen, please Give the biggest round of applause to Mr. Anung Herlianto.
Okay, ladies and gentlemen, and all participants of this seminar whom I respect, very good morning to you all. Om Swastiastu, and welcome to Bali, the island of God. Thank you for being here at this important event where we will discuss a very relevant and exciting topic, I promise. Namely opportunities and challenges of digital financial innovations. This advancement of digital technology has brought significant changes in the financial industry, and today we will explore deeper into these innovations create opportunities as well as challenges across various sectors. My name is Anung Herlianto, Deputy Commissioner, Senior Advisor for Research and Education's OJK Institute, and I have to tell you that I'm truly excited to guide this morning discussion, which I believe will be interesting and insightful. As a moderator, I will guide to this discussion and ensure that the sessions proceed smoothly. Before we begin, allow me to introduce and invite our esteemed speakers who has extensive experience and deep insight in the field of digital financial innovations. First, I invite Mr. John Owens to the stage. He is a Senior Digital Financial Services Advisor of Digital Finance Advisory Services based in Miami. Very good morning, John. The second one is Mr. Karin Bunle Vanik. I hope I correctly pronounce your name. He is an Executive Vice President, Corporate Strategy and Innovation Division of Kasikorn Bank. As we understand that Kasikorn, following the step of the Bangkok Bank, acquired the Maspion Bank based in Surabaya. Bangkok Bank already acquired the Permata. Kasikorn is one of the largest banks in Thailand. And the third one, we have one of the most beautiful speakers, because she is the only ladies among the speakers in this morning's sessions, Ms. Janet Lee. She is a General Manager, Indonesia and Japan Credit Tech Partner Services of Ant International Singapore. She commute from China, Indonesia, Singapore, and also Japan. And then last but not least is Mr. Arif Perdana. Please, Mr. Arif. He is an Associate Professor of Monash University, Indonesia. Good morning.
Good morning.
Okay, our discussion will be divided into two parts. First, the speaker will present various opportunities created by digital innovations in the financial sector. And then the second one, we will discuss the challenges that arise, such as the security risk, regulatory issues, and socioeconomic impact. Each speaker will have 30 minutes, gentlemen, lady, for their presentations. After the presentation, we will open the Q&A sessions where participants can ask questions to our speaker. Has to be concise and please, tough questions. This is a cooler seat, and the other is the hot seat. Okay. So before we begin, without further ado, let us begin the session by listening to the presentations of Mr. John Owens. John, 30 minutes, and the floor is yours.
Thank you. Good morning, everyone. I'd like to thank OJK for organizing the second OJK International Research Forum here in Bali. It's a privilege to speak alongside my esteemed colleagues, along with leaders, policymakers, and innovators. I'd like to express my sincere appreciation to the OJK Institute team for their dedication and vision in creating this platform of knowledge sharing. I think this is one of the most important things I've always seen in Indonesia is your ability to learn, to reach out, to share. A special thanks as well to our moderator today, and Ms. Ibu Aida for being so patient to bring me all the way from Miami. I think I get the award for coming the furthest here today. Today, we explore the transformative role of digital financial innovation, how it can enhance lives, bridge gaps in financial inclusion, and address persistent challenges. My presentation will focus not only on kind of the digital financial landscape, but Indonesia's evolving financial innovation landscape, highlighting key opportunities, challenges, and practical solutions that can drive sustainable growth. Let's discuss not only what these innovations mean for us as an industry, but also what they mean for individuals, communities, economies, and financial inclusion as a whole. When we look at the landscape of digital finance, it's been changing. I myself have been working in the space of digital finance from the last 20 years and in financial inclusion for the last 30. I've been coming in and out of Indonesia since 2010, so almost 15 years now. And it's been amazing to see the progress and the transformation in terms of where Indonesia came at the time. E-money was just beginning to get started. There were discussions of it. And then we saw the role of agent banking, and all the progress that has happened since then. I've had the honor of working with OJK on its first roadmap, digital financial inclusion roadmap, back in 2000 to 2024, and then also working with the fintech industry on a code of conduct and OJK on the rules for P2P lending. And then lately, with the omnibus law, I was very much involved with the Ministry of Finance. And so it's been an honor to watch the progress and to see the achievements and the proactive steps that you've taken. You know, again, the landscape continues to evolve, and there are many things that have happened along the way. So in Indonesia, we look at some of the areas. Of course, digital payments have had a big role. Digital credit, particularly the use of alternative credit. The P2P lenders have risen. We saw the important role they played during COVID. I saw many that were providing financing when others were unable to provide financing, and even especially to SME financing. You know, we've had the role of now, and I was very concerned with the rise of crypto in the market in Indonesia years ago when I saw how many people were investing in crypto. I thought it was very important, and I'm pleased to see now that OJK is responsible for overseeing it, because I think the rise of crypto will continue to be an important factor to look at, particularly with the large number of Indonesians that are investing in cryptocurrency. And of course, we've seen the role of the proactive role that you played in consumer protection, the use of things like InsurTech, but also RegTech, supervisory technology, so adapting and taking a proactive role. So when we look at financial inclusion in Indonesia, you've had a major growth in financial inclusion, and of course most of this is through digital means. You know, as of last year, 78% of adults were covered with access to an account, and 88% were active accounts. This has grown tremendously over time, and I'm sure you're now well over 80%, maybe approaching your target of 90% coverage. And so we've got an inflection point we see in Indonesia where it's, for many people, it's not so much an issue of access, but financial deepening, the quality of the financial services. So having an account, what does that mean? Responsible digital finance. In fintech, in the P2P lending, We saw cases of people with as many as 50 individual loans when I was working with OJK on the lending, the FinTech Lending Association. So again, I think we got, and I'll talk a little bit about some of the consumer protection. So that there's an issue now of making sure that financial literacy is strengthened, and that we understand, responsible digital financial development. But again, most of it, while there are challenges, I think we've seen many more opportunities, and the evolution is evolving. Women's World Banking, for example, recently talked about how innovative financial services, particularly in Indonesia, have helped with the gender gap. Women here rapidly have adopted to the use of digital financial services. So basically on par with men. So that's been a tremendous driver for also digital finance for women. Reaching that last mile, we had discussions just before this event about the importance of how do we get to the last mile. Connectivity issues are still a problem. There are wet markets, as we discussed, that don't have access to a mobile phone. How do we deal with, or mobile phone coverage, I should say, how do we deal with those areas? It's still a role for government to play in terms of supporting connectivity. That's very important for reaching that last mile. But there are ways around that. As we've seen, the use of agents have helped people even where they may not have access. So these are getting that digital access and that connectivity will continue to be very important. When we look, another area that I see a lot of opportunity in is when we discuss open banking and ultimately open finance. So open banking is basically empowering consumers to be able to share the information that they have. Before we closed banks, basically the bank owned your data, your transactional data. Today, that's been expanding with rules around ability to share the information in your bank account. And when we go beyond open banking to open finance, we see the aspect, as Ant will talk about, of embedded financial services, the whole ability to be able to use your transactional history, control who it goes to, and get much better products and services than we've been able to do. It's important, I think, for this development to, as I've seen, and I was very much involved in the Philippines also in the open finance framework, and I know there's a lot of collaboration here that needs to occur between OJK and BI with regard to the open finance, the standards that need to be developed. And again, this is an area where discussions with the private sector will be very important, because rather than creating rules and then giving them to the private sector, oftentimes I've seen it better where the regulators actually throw out the challenge, crowdsource the ideas from the private sector, having veto power, of course, but making the private sector come up with reasonable standards that could be enforced, and OJK playing the role of, along with BI, of ensuring that those are in place. So open finance offers all kinds of opportunities for people to customize and increase access to financial services. The other area, and I think this is the one of the most important that we've seen, not only in Indonesia, but around the world, has been digital payments and e-wallets. Here, when I first came, we used to talk about mobile money and mobile financial services. In the early days, when I first presented on mobile money, I remember going to China in 2008 and presenting in Beijing. The Chinese looked at me when I showed them that I could send money from the Philippines through GCash and send it back again. The Chinese told me, you don't know us Chinese. We will only trust the feel of paper money. We'll never trust a phone to send money. Just 3 years later, WeChat Pay grew, then Alipay, and of course, China today, it's exactly the opposite. It's hard to find people that wouldn't transact without a phone. So it's very interesting to see that transformation. Even when I came here originally to talk about mobile financial services, we wouldn't have believed that you know, again, that's why we changed from mobile to digital, and when I've gone around the world, is that many of the players that provide or massified the services were not necessarily mobile phone companies. Of course, here was a delivery company, Gojek, with GoPay, Ovo, and now Dana. You know, these are companies that have massified their user bases to be able to provide services that we never imagined possible just years earlier. So I think, you know, when we've seen digital payments, the use of QR codes, I remember when that was being discussed. I remember the original days when I came here and there were all these incentives. People will remember probably with Ovo and GoPay, they went back and forth and getting the rebates to be able to buy things in a store. That drove a lot of that. That created that tipping point. So it's been exciting to see how that, I think that drove more account ownership than any other single area. There are challenges, but it's opened up an opportunity for people that we couldn't do with physical cash. And of course, during COVID, it drove the whole use of digital cash worldwide at levels that we hadn't seen before. In other countries, you know, China, it happened, but it was that COVID time where money could be dirty, where it could spread a virus, or where people just couldn't leave their homes, and it was the only way of being able to offer services. This is what drove countries like the Philippines to go from 4% to 70, 80% coverage with e-money. The other area, you know, we talk about the opportunities, and there are of course challenges of crypto assets or virtual assets. We don't usually refer to them as currencies. They may not be a currency issued by a government, but they are a virtual asset that people are using to trade and exchange with one another. There's also the blockchain and distributed ledger technology. See, we've seen opportunities that have been created for things like smart contracting, where you could be paid almost automatically instead of waiting. So this supports trade finance and other things. And of course, there's a lot of discussion now within Southeast Asia of being able to connect across markets and to offer a better trade. I think, you know, for better or for worse, as we all know, the U.S. just held an election, and we have a change in our president. And the politics or policies around crypto will also change quite a bit. It's what's driving, I think, worldwide crypto prices to new highs that we haven't seen ever before, and will continue to drive them. So I think that will only, and the U.S. now most likely taking a much more proactive stance in terms of supporting crypto, I think it's going to see a much larger adoption. There will be challenges and issues with that. From a regulatory standpoint, I've worked with the regulators before. It's very important to make sure that one nice thing about some cryptocurrencies, such as Bitcoin, is the ability to be able to trace where those funds came from. So trying to ensure that illicit money is not coming into the market and it can be done. Not with all, but this is a challenge for the regulators where subtech comes in, the tools that need to be done to be able to look at knowing your transaction as opposed to just knowing your client. So there's a lot of opportunities, and I see a lot of challenges with doing it, but it's very important. I think the last figure I read was 28 million people using a crypto here, and it's only going to continue to grow. So I see that as very, very important. Another area I'm very excited in Indonesia, and I read about this in the new roadmap, is the accreditation of aggregators, financial aggregators. I think this is extremely important, particularly in a market like Indonesia. And I'll explain. When I first came here, you know, we saw the high interest rates, and I'll talk about the challenges on high interest rates, and people were not able to compare one product against another. There wasn't a place to go to compare products. Aggregators now have the opportunity to offer comparison shopping, so I can look at and standardize what the interest rates are and know effectively what I'm paying. Something I couldn't do before. A lot of other markets require truth in lending with an APR standardized that all institutions have to follow. Here it's been a little bit more challenging. That And this is where aggregators can play a role. We can empower consumers to know better the products and services they offer and to comparison shop. This will force greater competition and transparency, which I think especially in the P2P lending is needed in this market, and it offers great opportunities. I'm very excited to see that aggregators are growing and that they're a big part of the regulatory sandbox here in Indonesia. So excited about better products, better pricing, and the opportunities. Of course, the challenges for aggregators are going to be, as we'll discuss, data privacy and security, aligning with regulators, and helping to reach out market penetration, especially providing those services in rural areas. So again, I'm very pleased to see this progress, and I think it's a tremendous opportunity that's unique. And I think you'll also serve as a model to other markets across ASEAN. Now, the challenges we discussed for fintech lending, especially, is the high costs. I remember looking at the very high effective interest rates that were being charged by the P2P lenders. And this is also, with the ease of P2P lending, this happened a little we saw it in China as well, where the market got overheated and there were lots of challenges with multiple people who were borrowing. Same thing, Indonesia, I think, was the fastest growing P2P market in the world. At one point you had over 800 when I first started working with OJK. Now I believe it's down to below 100. And it was always a challenge to stop the illicit ones who kept popping up again and again, offering people money. Some people, as I said, had as many as 50 loans that they were borrowing because it was so easy to lend. So this was creating over-indebtedness. Some of the collection practices, I remember working with the Legal Aid Society in Jakarta, and there were over 10,000 cases, just Jakarta alone, of complaints. So it's an area, and I think OJK did a great job of improving some of the consumer protection practices, what can and can't be done, working with the industry to develop a code of conduct so they could also self-police themselves. We saw a little bit of this in China as well, so when we were studying that, working on it, there's a lot that needs to be done. I'm not saying that that has been resolved, but there's tremendous progress, and again, I'm very pleased to say that you offer an opportunity for the region to learn from the examples of what this means and how to address. I think over-indebtedness is something still credit bureaus need to be better utilized and expanded to include alternative credit providers. And then, we talk about regulation and supervision. There are complexities. We have a lot of neobanks and fintech startups who are a bit confused, particularly because there are two regulatory sandboxes with BI and OJK, sometimes requiring institutions to go through both of them. And I know part of the reasoning behind the Omnibus Law was to look at better collaboration between BI and OJK so that we could better facilitate regulatory sandbox and licensing, so speed up the innovation and not creating an impediment. I think OJK has done a great job, and I think the dialogue with BI, I know it's not has been a challenge, but I think it is improving. I think the whole thing of being proactive with supervision, especially when it comes to virtual assets or crypto assets, will be extremely important. And again, the constant dialogue between the industry and OJK and events like this to share knowledge, I think are really, really important. And I really want to acknowledge what you've done here. And again, your regulatory sandbox, which I think is expanding in ways that it hadn't before COVID. So it's really good to see that progress. Consumer protection in the digital age. We're going to discuss more, and I won't get into it. But a lot of the concerns are around data privacy, cybersecurity, and fraud when we talk about digital. There's also the importance of dispute resolution mechanisms. We spent a lot of time working with the P2P lenders on looking at alternative dispute resolution so that when people were responding, they could follow up. I know that in the Philippines, they developed a chatbot that would allow people through Facebook to file complaints with the regulator, and it was called Bob, and the chatbot would then follow up and find out whether or not the issue has been resolved. But it was an automated way of doing it. We'll talk a little bit more about that. The importance of financial literacy programs continue to be very important, and using digital tools, again, we'll talk about chatbots, I think are very, very useful in terms of the future of providing information to consumers and financial literacy efforts. I saw this in Myanmar with Mr. Finance, where we could provide training to tens of thousands of people, way beyond anything we could do with structured, paper books and classroom settings, because people could do it when they wanted to, where they needed to, and today's, and I'll talk next about this, today's efforts around AI are also helping quite a bit. So when we talk about AI for financial services, there's been a whole shift. I think when I started working, the use of, we talked about big data, data analytics. A lot of the AI were structured chatbots where we had to write everything that the chatbot, and you had to text everything. It wasn't using any natural language abilities. Today, I think the interactive predictive AI, we'll talk a little bit more of that, generative AI, moving beyond from just the predictive AI, has created a whole opportunity of being able, particularly now that it's available in Bahasa, people can communicate, could just talk, they don't have to text, and they can ask questions, they can learn. You could use all kinds of ability for a chatbot to be your advisor. Somebody who can help you, make better choices. These can be guided and structured to help, from dawn to dusk, where should I go for this? Where can I go? Where can I buy? Again, with the shopping tools, the comparison, and also to help with reminders when you have a payment due. Oh, you've got a payment coming up. You might want to make sure you set aside money. Don't spend your money because you have certain payments coming up. There are going to be ethical challenges, which we'll talk about, considerations such as bias, discriminatory practices, transparency in AI. But I think these can be addressed, again, with the regulator staying on top of it, working with these industries. As I said, a lot of things will happen, just like we did with the P2P. Everybody was lending. We talked about this with Ant Financial. This was all prior to data privacy, and now we have to go back and look at things, because previously we used people's data, and now oh, wait a minute, we have to use consent, we have to explain to people, we have to tell them why we're using their data. This was something that we didn't have to do early on. I think this is the same thing when we look at AI. Some of the things right now will be rudimentary when we look 5 years from now, basically, but it's being proactive and staying on top of it. So I think, the other thing, so the chatbots for financial literacy, really, really important. I have seen this, I think to me, in my experience, I travel around the world, the use of AI chatbots that can work, particularly through social media platforms. Countries like Indonesia, where WhatsApp and Facebook are so important, but it could be Viber or Telegram and other markets where people can ask and get responses to information. This will continue to be very important, and you can take the data, you can structure it, you can make sure that it's not just going out to the internet and getting random ideas, but more controlled. So today's chatbots are, I believe, are only going to get better, and this is one of the best ways, I think, of providing financial literacy. So, yeah. Again, this whole generative AI is going to be very useful for credit scoring as well. So we're looking at making use of AI, looking at not only structured but unstructured data, being able to help institutions to better develop credit scores in ways that we couldn't. Traditionally, we've only looked at financial transactions, or previously, but today we can use all kinds of data. Somebody may have a Facebook site and they're doing sales, or they're using TikTok, and we know through TikTok what their sales volume is. Or we can look at their phone and how many messages they're getting, how they organize themselves, how busy they are. So very, very exciting about the use of AI as well from the financial perspective in terms of doing credit scoring. So this is an important development. So I'd like to say, in closing, the collaborative effort between financial regulators, financial institutions, and tech companies is extremely important. This is something that we all, and I think, as I said, OJK has done a great job of doing this. We need to look at a holistic approach to innovation that prioritizes financial inclusion, develops trust, sustainability, but also ensure that it's done in a responsible way. So I'd like to, again, thank everybody for inviting me today. I'm here to answer any questions, and excited to see the continuing progress. I'll be coming back to work with Indonesia in the near future through a program with ASEAN that will be starting this coming week. So I'm very excited to continue to see the progress, and excited to get any questions that you have via email as well. Thank you.
Okay.
Terima kasih.
Thank you, John. Very good observations and insightful on the Indonesian development of digital accelerations. Yes, you're right that one of the main concerns of using the AI, which is now emerging in our financial industry, in terms of bias, transparency, discriminative, and also the potential of moral hazard in the algorithms. Okay, great. And then we continue to Karin from the Kasikorn Banks. The time is yours, another 20 or 30 minutes.
Yeah, thank you. Good morning, everyone. Let's start on my section about the case of Kasikorn Bank. We are players, we are not regulators, and then we are part of the ecosystem of the financial systems. So I think before we move on into the details of the use cases that we have done, I think the first one is I would like to address the question of what would be the future of finance. If someone asks you about that, you may have mentioned some of the name of the technologies. We talk about the generative AI, we talk about the blockchain, things like that. But I think for the future of finance, it's not about what are they or what should we do, but it's about why. What will be the pathway of doing that? So before that, I think looking at the overall banking system, but we would like to portray the future of finance. Maybe it's better to think about how have we done for the past 10 years, 20 years, 30 years. Think about these 4 boxes there. It mimics the pictures of what we have done before. The first one is that for the future of finance, there will be 4 pathways. The first pathway is we go deeper. Think about the first box on the top left. In the past, banks take deposit from maybe the rich people. It's easier to acquire money from those, and then we lend to the big players, the big corporate. And then it happens for many, many years that we go down deeper. Go down deeper meaning that we try to reach the smaller customers, whether it's from the deposit side, that we can take deposit from the smaller pocket customers efficiently, profitably. And then we can lend to the smaller size customers like SMEs, for example. It's easy to say, but think about that. Why we need to have a mobile banking app? Because we want to reach those small pocket retails efficiently, cheaply, so that it's still profitable to serve them. Why we need to have generative AI implemented? Because we would like to serve the smaller size customers more efficiently. Or maybe we want to lend to the SME or smaller size customer more efficiently. So on these pathways mean that we will not see the technologies or the use of technology as itself, but we would like to measure the use of that based on how deeper, how far we can reach the smaller size customers better. I think that is the first part of it. That's why you can see a lot of things on the first front. For example, for the case of Bank, we developed our mobile apps many, many years back, and then we are now, I think, #1 in the mobile banking apps in Thailand. We have about like 23 million customers now. And also we have different platforms as well, not just about the financial mobile banking app. We have what we call on the bottom, the Make app. It means that for those who are the young generations, they would like to have different pockets for different type of or objective of savings. We have that. We launched that a few years, and then we have now almost like 3 million customers. We joined with Line, the chat app, to create a Line BK there to lend to the smaller size customers through the social lending app. Think about that. So the technologies is for the use to reach the smaller size customers. For the SMEs lending, we have created, I think it's more like a web-based portal to lend to the SMEs more efficiently. It's like one-stop service for lending to the customers. So that is the first way, going down. How can we reach to the smaller size customers more efficiently, profitably? Then the other bank can select the second pathway, which meaning that from the typical traditional banks to the left, to the right, which is intermediary business. When we heard about the universal banking model in the past, when we talk about bank assurance, mutual funds, securities, leasings, investment banking, those kind of things, it means that the bank will not use their own monies or deposit to lend only. Not only, they will not use their balance sheet alone. We are just intermediaries. For example, on the left side of the pictures, we are intermediaries to transfer the funds to the invested securities, which is the business of Keuangan asset management on the top. And we are #1 on that mutual funds business. We have joined with JP Morgan, asset management, or Lombard Odier, something like that. We have securities house to transfer the funds from the needs to the use of funds there. And then the private banking business there. Or we talk about the social banking. Or even earlier, we have talked about the peer-to-peer lending. That means that we will not use our own balance sheet to lend, but we are doing the intermediary business. That is the second pathway of the banking that people have seen. Now, if we think, what will be next? We have seen banking business going down deeper, going wider, from 1 to 2 and from 1 to 3. Then, for upcoming futures, we think that it will be #4. It means democratizing intermediary business. How can we do the intermediary business for the smaller size customers? For example, if in Thailand you would like to create a REIT funds, real estate investment trust funds, typical size is about like $1 billion to be profitable, to cover the cost. If you would like to create a REIT funds with the size of just $30 million, can you do it possible? Now, some new technologies can help doing that. And then people have talked about the blockchain financing, talk about the geo asset. Those are the technologies to enable us to democratize intermediary business. Think about that. In the past, banks always be where people are. For example, we used to have like physical branches there, and then we move into like department store, we have ATMs, we have mobile apps. Those are the tools so that we will be in the place where our customers are. And then if we look forward, where are they? They may be online, on the apps, using Web3 technologies, using Web3's applications, those kind of things. So how can we have our financial services embedded there? Looking at the ecosystem of capital markets on the left, if you're looking at typical stock issuance, you will have the primary market on the top left there, right? From the issuers to the investors. And then once the stock has been printed out, you list it in the secondary market. In Thailand, we call the Stock Exchange of Thailand, or SEC. You have many other companies below, like the custodians, the clearing house, and things. The investor can invest that stock in the secondary market through the security brokers or through the mutual funds. In the digital asset world ecosystem in Thailand, we have a lot of license on digital asset license. For Keuangan, we have the Cubics, which is what in Thailand we call the ICO portal, to help launch the, I would say, the investment token or the crypto tokens in the primary market. We have launched the first project finance for movie creations. It's just about like $10 million US. But efficiently, we can help the movie makers finance their movies, let's say that, efficiently, cheaply. That is through the blockchain technologies. And then we also have the digital asset exchange. We just create and then launch the digital asset exchange under our own subsidiaries called the OBIX Exchange. We have the custodian business. We have the digital asset fund management. So under the Thai SEC for Keuangan now, we have the full license to operate first the primary and all of the secondary markets. And then you can see on the bottom left, we have created our own blockchain. We call the Quarix blockchain there. These blockchain technologies will help eliminate those behind the scene, those custodian, those clearing house out. So it is the way to democratize the intermediate business of the capital markets. Looking at that, that will be the last pathway. Think about the green box in the back. It means that we can do the first. Some banks select that they are going from 1 to the 5 or the 5th behind. It means they do just typical commercial banking, but they would like to transform their business to the greener model. That's fine. You may do the intermediate business, the universal banking, but you want to do it greener. For example, your mutual fund business, we have more of the ESG funds, so kind of thing, should be fine. Or any of those 4 boxes can go greener. That is the last pathway or the 4th pathways. So these are the direction that if you are taking care of your corporate strategy, you need to know which pathway you are going or moving towards and what are the key milestones or the objective you want to achieve. I would like to get to the detail of the first one about the blockchain finance. For us, we create our own blockchain called the Quarix blockchain. We have, it was like the key ingredient in the middle, 3 things. We are real money, real asset, and real identities. Why? Because first, to utilize the blockchain technologies so that you can do what we call the atomic swap between the 2 legs. You need to have 1 leg of that to be money. Because under Thailand law, actually, if on Ethereum blockchain, for example, I transfer ETH to my friend, and then she transfer USDT to me. Under the Thai law, both legs are considered as asset transfer on chain. So we have to pay VAT or tax on both legs. There is no payment leg of the transfer. That's why we as a bank, we have to create money on chain. Under the regulated environment, I mean the money that is regulated. So we are the only one blockchain and the only one money type on blockchain in Thailand now that we have money on chain. Because on the blockchain technologies, you cannot fully utilize the blockchain technology without having 1 leg of it to be money and the other leg as asset. In the past, you have seen a lot of asset transfer and then you make a payment outside or you use traditional banking payment whatsoever outside. You cannot fully utilize the technologies. The second is what we call the real asset, which means that all the things inside our blockchains, but things has been printed, has to be governed under the Thai SECs. And lastly, real identities. I'm sure that some of you may have used or subscribed to the Web3 wallet. Talk about MetaMask or many of those, that one person can create as much as you want. And then you have no need to reveal your identities. We don't like that. We think that to create a future of finance, we need to have real identities. So our blockchains, all of the wallet has to be KYC or KYBs. Why? If you're looking at the far right of the pictures, I highlight some of those stakeholders as a blue. For example, now when we talk about crypto, digital assets, mostly are retail investors speculating on price. They're saying that. We have not seen the real use of that for the corporate. If you talk about the corporate customers, big corporate, small corporate, how can or do you want or do they want to create a Web3 wallet? They say no. Why? because of tax issue, because of identity issues. That's why we want to serve those blue highlighted icons there, the corporate, the financial institutions to play in the digital asset world, and then also the regulators. So these are the things or the stakeholders that has been left out in the past. We would like to bring them in. So we have these three things: real money, real asset, and real identities. For our real monies, we create what we call the Q money. You may have heard that some countries, some banks may create what they call the programmable monies, smart transfer monies, those kind of things. But most of them, those money are not what we call the money on chain. Some of them are just the miller of the money. The data of those transfer may be stored on the blockchain, but the asset itself is not in the blockchain, so it's not primitive in the blockchain. For us, we create the monies on chain as a primitive asset on chain there. Why we need to do that? Because we quite certain that for the near futures, the activities that will be used for the blockchain, using blockchain will be more and more. We have talked with Thai SEC, and they will launch the new law on the tokenized securities. So bonds, stocks, things will be tokenized out. So once you have asset on chain, now you need money on chain to complete the transactions efficiently. That's why we create this money on chain. We have launched a Q bonds there. Is the first bond on blockchain for the case of Thailand a few months ago, so that the two legs of the asset, both the bonds and the money payments, will be done on chain. That is the first one that we have done. So we launched our blockchain last year in Singapore FinTech Festival. We launched our money on chains in the beginning of this year. We joined with JP Morgan so that our Quarix blockchain joined with the Onyx blockchain of JP Morgan, so that Thai baht money on chain can be transferred to the linkage of the true blockchain to the US, the JP Morgan coin in the US. Because of that, the customer can transfer money 24/7. No need to wait for holidays, Saturdays, Sundays, Thai holidays, US holidays. Things can be done within less than 5 seconds. We have launched a bond on the far right with the PTT, the Thai corporate there. And lastly, just a few weeks ago, actually, we joined with StraightX in Singapore so that we link between our own blockchain, the money, Thai baht money on our own blockchain. With StraightX is a fintech company in Singapore. They use Avalanche network or Avalanche blockchain, so connect to each other so that Thai people, when they travel in Singapore, they can convert their cryptos into Thai baht, tokenized Thai baht money, and then that money gets through the link of the blockchain and get into the Sing dollars and can pay the QR payment in Singapore. And all of these processes can be done within seconds, instantly. So we can, this is the picture of that between the Quarix blockchain linked with the Avalanche blockchain there. So all in this digital asset world, you can think that there will be the green one, which are what we call the intermediaries entities. Talk about the ICO portal, digital asset exchange, digital asset fund management, custodian things. These are the asset ecosystem. And then we have the traditional real world asset that we have earlier, the blue one. And inside those, actually, we have to have what we call the Q monies circulating within the blockchain, so that it's complete all the whole technologies or the use of that. So that is the first one. If you would like to democratize intermediary business using blockchain technology, these are the infrastructure or the ecosystem we have to build. The second one is, what if we want to go greener? Talk about the sustainable finance things, and then I will combine that with the last use case on carbon credit. For the sustainable finance, in the middle of that, we talk about green lending, sustainable lending, and so on. For us, we create, we not only just do lending, we have customer issue green bonds as well, or we have our own venture capitals firms under Keuangan to invest, equity investment in the greens or climate tech companies. That is the middle. Why? Because if some of you may have heard about the Paris Agreement, under Article number 2 of the Paris Agreement, it asks bank not to just measure the scope 1 and 2 of carbon emission of our own emissions. It asks us to include the carbon emission from our lending portfolio. So think about K-Bank. We emit about 80,000 tons of carbon per year, very small. It's just about air conditioning, transportation. But if we include the carbon emission in our loan portfolio, it's 40 million tons carbon, equal to Switzerland, the whole country of Switzerland. Because of that, we need to transfer or transitions financing our customers in the middle. But that's not enough. Think about the other, I would say, peripheral technologies. On the left, we talk about the blockchain technologies. How can we use blockchain technologies to tokenize carbon credit, to do the investment tokens linked with carbon credit tokens for customers who would like to planting trees, for example. On the right, we create small companies as well to help customers. We have the tools like carbon credit accounting. We have carbon emission accounting, and we have tools for learning, knowledge sharing, something like that, research center. For us, we have lent the green lendings or transition lendings or investment bonds up to almost like 100 billion Thai bahts already. And we target to reach 200 billion within a few years. And for decarbonizing the lending portfolios, it's easy to say, and then many banks have set their target of carbon neutrality, net zeros. Very easy to say that, because some of the banks may have the target of 2050, for example. None of us will be there. So it's easy to set the target, but how? How can you make sure that you can reach the target? For us, we prioritize our lending portfolio into many waves. For example, the first wave, we're looking at power generation, oil and gas, coal, something like that. And we have what we call the glide path. How much carbon emission that has to be reduced in each year towards 2030, 2040, and 2050s. And we have to track that year by year so that the emission of our lending portfolio can be controlled and reach our target. We do the first wave, I think, a few years ago, and then the second wave in the second group of industry like automotive, aluminum, cement, and so on. So for each bank and the country as well, in order to transition toward carbon neutrality or net zero, you have to do it by sector, by sectors, and then have the glide path of the carbon emission of the lending portfolio. The tools that are available, think about the green loans, green bonds, social bond, transitional loans, social bond, something like that. We have helped customers, for example, like this one is a Thai Union, this is a frozen seafood product companies. They have the sustainability linked loans. We lend to them with the target to reduce the carbon emissions, with the target to be included in the DJSI index, something like that. So that is sustainability linked loan. We help customers issue bonds, like sustainability linked bonds, for example, like that. And also like green loans, use our own money to lend to the customers as well. There are many choices for the large corporate. For the SMEs, normally the other banks, and including us, we have what we call the product-based lending. For example, we lend to the customers to install the solar roof, lend to the customers to do the energy saving product or redecoration, remodeling, something like that. Lend to the customer to install the EV chargers. Every bank has that. And then promotion on EV cars, green home loan, that should be fine. Now, we have done that for the past many years until we reach about 100 billion lending already. For the next step, it's not just product-based lending. We have just announced with the Bank of Thailand as well that we change that to be industry-based. There are 4 industries, the 4 circles there. For example, like food and beverage, hotel, packaging, something like that. The customers in that industry, they may need a package of lending to transition. For example, the food and beverage, they may need the lending to revamp their process of waste management. So there is no longer be like a single product lending anymore. We have to think in the view of the customer of the industry and what are the mix or combination of loans that they want to transition their operations, which will be different for each different industry, like the package of lending for the food and beverage will be totally different from those packaging companies, for example. So we have done that. And not only about lending, we have to help them do the transitions through the network. K-Bank have created what we call the Thai Climate Business Network. We join force with universities, research centers, government agencies, large corporates, have a consortium together because we think that if we would like to transition the operation of the SME directly, very difficult. SME, they don't have time to learn, don't have time to understand what are the greens, whatever. So we think that the way to transition the whole country is to let the big guys help the smaller company, help their supply chain first. That's why we create this consortium together. And then, for example, like the big real estate developer, join together with us. And then instead of just lending to the big guys, we create what we call the transitional supply chain financing. It means that in the past, we have traditional supply chain financing, but now we want to create transitional supply chain financing such that the whole supply chain reduce the carbon emission of the whole supply chain. We give special interest to them. But the big guys have to help their supply chain, whether their supplier or distributor reduce carbon emissions. These are the things that we create. And then we can have like derivative as well, social link derivative. Lastly is about the carbon credit, which is one of the ingredients to help create the values for those who do the transitions. In the past, I think in Thailand, Thailand have created carbon credit market since 2018. And since the beginning of that, we came back. We buy about 80% of the available carbon credit in Thailand. Why? Because we know that the market is just start. It needs participants, and we get there to buy. It's just voluntary, but we want to help the market see the price and help to anchor the price such that the price of the carbon credit keep increasing for years. We buy about 80% of the market for the first, I think, 3 years, and then now the market have been developed, and our market share of buying the carbon credit reduced down to less than 10% because the market price has been stabilized and established, something like that. Then we act as a matchmaker. Our customer who need to buy carbon credit or who want to sell it, we match together so that they create a market later. Then the third landmark is just a few months ago, we helped the customer issue bonds where the bonds not only give interest but give carbon credit as a return as well. That is the third one. And then the upcoming, soon we will have the carbon credit tokenized as digital asset there so that it can be easier to transfer and easier to distribute to the customer in a wider group of customers. And lastly, we will have what we call the investment token with carbon credit return. It means that for those who would like to plant trees, forests, they need money to do that. So they create investment tokens, collect money, and then planting trees, planting forests, they get carbon credit as a return. And all these has been done through the blockchain technologies for transparencies and efficiencies. So these are the things that are going to come out later.
Yeah, 4 minutes.
Yeah. And then these are not just our innovations. We have looking at the ecosystem of carbon credit in the world. You have the demand and supply. You have the market in the middle. You have the role of facilitators, like derivative, forward price, forward contract, tokenizations, investment insurance, and below are the service providers. You can see that many of the global banks participate in some of the activities already. And for us, we try to see for our conglomerates or for our groups, which are the parts that we can help the customers, help build the ecosystem there. Whether we help tokenizations, whether we help creating derivatives on that, or we do the knowledge sharing in the bottom, that should be fine. So we're looking at the whole ecosystem of the carbon credit and see how can banks help that. And this has to be enabled or allowed by Bank of Thailand. The regulators have to know that, okay, banks can help customers and countries. They have to allow us to do so, something like that. For example, like we create tools called the K-Climate 1.5, is a carbon emission reporting tools for the customers, so that because you cannot decarbonize your lending portfolio without having your customer know how much carbon that they are emitting right now. They need tools to collect the data, and we create this tool. We have, this I talked earlier, we help customers launch the bond plus carbon credit earlier. Lastly is that markets still keep evolving. In Thailand, there will be what we call the Climate Change Act. They're going to be come out officially next year. And then inside that, they are in the middle of discussion whether the carbon credit, the derivative of carbon credits, and the carbon credit tokens, these who will be the governing bodies, what are the ecosystems that need to be created and controlled, something like that. So we are in the middle of that, and then you will see that later. And I hope that banks will play more roles in those kind of activities as well. So hopefully it's useful. Thank you.
Okay, thank you, Kun Karin. It's a very detailed descriptions on how the banks could utilize and empower technologies into their innovative product and services. Okay, now let's come to we're gonna hear the different tone and of sound, yeah, which I believe more relaxing but inspiring. Yeah, we invite Janet. Janet, you could stretch your leg, stand up or go around, it's up to you. The time is yours for the next 20 or 30 minutes. Time is yours.
I feel
okay,
I'm obligated to stand up and do something different now, so I'm just going to do it. Oh, sorry. Just give me 1 second. Okay, so first of all, thank you very much, as well as good morning. It's a great honor as well as a pleasure to be here, be part of this very exciting event. And today I'm going to talk about inclusive finance, as well as how continuous digital innovation is going to be supporting it and making it happen. But since I'm going to do something different, other than standing up, I'm going to be a little bit more storytelling. I'm going to start with my first job. So when I started to work, my employer for my first job really encouraged innovation. I was a risk manager, right? So I remember vividly, there was a period of time I would stay after work at my desk, scratching my head, thinking, gosh, what am I going to do with my innovation target? Where is that next shiny object? And if I'm chasing it, maybe everyone else is actually chasing it. So I went on for a couple months, right? Until my leader realized I was sitting at my desk after work and scratching my head constantly. So he came up to me and basically said, what are you thinking? So I said, look, this innovation thing really bothers me. I don't know. I don't know what I can do to become the next shiny object. Then he said something, enlightened me, also stuck with me for many, many years. He said, have you thought about innovation? Maybe that's not the diamond star that everyone's actually chasing after. Maybe it's tiny or small things that just right next to what you have been working on. It could be really looking at the data that you've been using and just using it in a very different angle. It could be really thinking about a process which is offline and how you're going to start to bring your first customer online. It also could be something that has worked, but elsewhere, and think about a way to localize it in the work you're actually doing in a very different field. So that's the innovation I'm going to be talking about today. So first of all, I want to start with Keuangan International. So a lot of people in the past couple of days actually asked me, are you Keuangan Group? Are you Keuangan Financial? Right? So we are actually a spin-off. We're the international arm under Keuangan Group. But what do we do, right? It's an interesting question. Think about people's question, Ant Group and financial. A lot of you guys have heard how Taobao has succeeded, how Alipay has been creating a super app environment in China and succeeded, right? How riding on the ecosystem, we started BNPL and cash loan products, serving the underserved. The way I look at international is really, looking at a different angle to bring the innovations has been tested and perhaps worked to the local markets with a localization spin. So with that, we have created 4 different pillars. And what we're actually envisioning to do is 3 things. We want to serve the underserved. We want to become digitalized and help our customers to become digitalized. And we want to be trusted. So how do we do that? First of all, we have the A+ pillar. For instance, bring the story closer to home, Dana. That's one of our key players and partnership on the A+ network. So A+ is actually looking to connect broadly hundreds of partners, making sure our customers on the network can actually use e-wallet, promote digital transactions. And with the e-wallet, usually you come to think about, secondly, where are we going to spend? Where are our customers going to spend? There's Anthem, actually bring the merchants globally online to serve our customers. And these customers could be consumers or could be SMEs. Then we have merchants. We think about, what do? They do treats, a lot of them, cross-border treats. Then there's World First. And then lastly, that's where my pillar actually comes in, embodied financing. Because we have customers, they're consumers, they're merchants, they're looking to run their business, they're actually looking to run their daily lives. What do they need? Financing. But what's actually supporting it is really the underlying foundation. We have wallet tech, we have payment tech, we have risk tech, we have platform tech, and lastly, my pillar, credit tech. So what have we done when we actually talk about innovation and being very inclusive? A lot of people actually talk about inclusive finance. We actually call it inclusive growth. And allow me to explain what it actually really means. Let's start with China. Our mission as part of credit tech partner services for international space, we're really looking to power affordable and inclusive financing with the AI-driven credit services solution. And when we actually look at the customers we served, as you recall on the previous page, I talk about we serve the underserved. That's our target segment, right? So starting from China, starting within our own ecosystem, gradually growing outside the ecosystem, expanding into the international space, we've served over 53 million merchants, and most of them are actually micro merchants, right? A lot of them are actually online merchants. A lot of them are actually mom and pop shops. Some of them are actually supply chain truck drivers. And some of them are actually food delivery riders. The common challenges we've seen when we actually talk about financial inclusion or driving financial growth is, well, they don't have credit to start with. Then where are we going to start? When an individual doesn't have a solid credit, that basically means the traditional way, Mr. Owen actually alluded to this, right? The traditional way of assessing their credibility is missing, right? Usually, a lender will be looking at financial records, your credit bureau information, right? But it's not there for the unserved segment we are trying to serve. So what we actually did is to look at what are some of the digital ways or alternative ways we can actually find other data to actually assess their creditworthiness compared to the traditional way. And hence, within our ecosystem, we actually started to look at their digital footprints. we actually look at their transaction data. And gradually, when we actually had enough database, we actually expanded to outside our ecosystem. But supporting that is what we actually call a 310 experience. What does it mean? 3 minutes application process, 1 second loan disbursement, 0 human intervention. And that's actually supported by our technology foundation, as well as the belief that we will continuously drive innovation by innovating our technology. And let's look at some of the results we actually have, right? 53 million ever served SMEs, around 80% approval rate. And 90% of these people is first time to credit. And with that, we helped over 100 of our partners. They could be e-commerce platforms. They could be digital wallets to increase their sales, to increase their eligibility population for lending offers. But at the same time, also Mr. Owen actually mentioned this, being responsible from a lending perspective. So if you look at the results, we actually gave credit to a lot of people. The approval rate is actually high. But at the same time, we're able to reduce the delinquency rate on average by 20 to 30%, right? Which basically means we actually control the risk. We're being very mindful in terms of who we're actually lending to. But we're also giving a lot of first time to credit customers being unserved and giving them the first lending facility to use. So let me talk about a couple of examples, right? Since I stood up and said, I'm a storyteller. So I believe, it doesn't matter what I say, what I present. It's always the vivid, close to life examples will actually matter to people and will help people to understand. First of all, food delivery riders. There's over 10 million food delivery riders in China. These are only food delivery riders. We also have parcel riders, we have taxi drivers, we have grocery delivery riders, right? But only looking at food delivery riders, there are 10 million plus. So when we thought about financial inclusion and driving growth and making sure we serve the underserved, that's one of the target segments we actually thought about, right? And the challenge we realized was these people usually don't have the traditional income verification. They don't have bank statement. And when you look at a credit bureau, they're traditionally pretty thin, right? So when we first started this journey, only about less than 30% of this 10 million plus riders actually had traditional credit coverage. If you look at whether or not they actually have credit cards, right? And then within that less than 30% population, there's only 10 to 20% of them had ever been able to get a loan from a traditional FI, right? So we thought about if offline data doesn't work, how are we going to leverage the digital footprint? That's where we started to think, right? And please join me in the thinking process. It doesn't matter what data we actually end up using. It's the process we actually went through to think about who we're actually targeting, what are they actually doing, and then I think it's the thought process actually matters, right? So when we embark on this process, we thought about, okay, if you're a food delivery rider, right, and you don't have a bank statement, what do you have? Okay, you probably have Alipay, right? And how are you using your Alipay? You're probably paying utility, or maybe not. But if you're paying, we probably know how much you're actually paying on a monthly basis. High or low, what does it mean? It tells me how big your place is, right? And then we can also look at what device data you actually have, right? Or we can actually look at what are the third-party data you have. If you're a writer, you have to register yourself on a platform. Can we actually collaborate with the platform to get your identity information, right? So with that train of thought, we actually created a data network which actually provides above 80% of the coverage using their digital footprint. But then the next challenge comes, right? And a lot of people, if you've been looking at big data, risk analytics, modeling, a challenge with the data I actually talk about and the digital footprint is it's very sparse. What does that mean? It means it's large in volume, it's very diversified in forms, and then when you look at the data, you go, oh my God, I don't know what the data is actually telling me because it's just everywhere, right? And coming back to the food delivery story, if you think about, well, I could be getting the platform information in CSV, I could be getting your transaction information from a different platform within our ecosystem, but it's with an API connection. And sometimes these food delivery guys will actually take pictures of the package, or of the food package they're actually delivering, right? And that's maybe in PDF, right? So the data actually exists in various forms. And the innovation we actually created in the digital way is using relationship network to look at the sparse data, to draw the connections amongst the dots to understand what it actually means, right? So coming back, again, it's the thought process actually matters. When we think about the delivery people, right? Or, I'll use a life example. Every morning when I go to work, I stand at a cross street. 5 out of 1 riders might be a food delivery guy. So the question is, well, you have all this data, but how do you know they're actually delivering food? And even if you can actually tell if they're delivering food, how do you know if they're actually creditworthy, right? So think about that question for a second. Then it comes to the original footprint. If I go to work on my notepad, right? Chances are my route is, I go to the office, I come back. I might stop at the grocery store. That's it. But we were able to create a heat map of the delivery guy's behavior. Because if you think about the delivery people, right? They are usually very busy at 8 o'clock in the morning, during lunchtime, and at dinner time, right? How do they actually behave differently from the parcel delivery people? The parcel delivery people is everywhere, within the working hours. The grocery delivery people usually busy 2 hours before your meal time. Well, because people buy grocery and then you have a couple hours to prepare, right? So the heat map, first of all, actually guides us to identify who they are. And then secondly, overlaying location information as well as the image information, we can actually identify where they're actually delivering to, right? Whether or not it's a premium restaurant, whether or not it's a suburb area, right? So with that, we essentially can create different segmentation even within people who are actually writing a notepad on a daily basis. And we're able to use these alternative data to tell whether or not they're actually creditworthy, right? So the results you actually see on 3 screens, like I've got 30 million here. This is actually within as well as outside the ecosystem. We're able to use relationship network to really separate, including the food delivery riders, parcel riders, taxi drivers, blue-collar workers who are actually creditworthy. And combining with our technology to provide the 310 experience, they can actually get their first credit or revolving credit within seconds. The second example is restaurants. I think restaurants in a lot of countries remain as a underserved or severely underserved segment. So what we actually did there, which I think it's very similar to what Curious is actually trying to do in Indonesia as well, right? Look at this mom and pop shop. It's very similar to the mom and pop shops that you can actually find anywhere on the street in Indonesia. And what we actually did was we actually placed a QR, the same as Curious QR. That's the first step to create a digital footprint. We're bringing the transaction, a cash transaction, from online to offline. With the QR, you have an official transaction record, same as Curious, right? And that transaction record with accumulation will become part of our assessment of whether or not your store is actually creditworthy. Then you probably say, okay, do you have social security, right? You know, welfare information? Yes, less than 10% for this population we're actually looking at. So again, a very classic example of the data is not there, they're severely underserved. But the way we're actually solving it is very different from the riders, right? So we look at the transactions that we actually accumulated online through the status QR. But then if you understand China, right, you probably heard, well, there's Alipay, there's WeChat. Now, how do you know, right? A lot of shops will still use cash. A lot of shops might have more WeChat transactions than the Alipay transactions. They don't have a full picture to assess their credibility. Then what are you going to do, right? So this is an interesting part. I wonder how many of you guys in the audience would guess what the chart actually means, right? I think this technique or the thinking has been applied in a lot of markets, in a lot of different scenarios, right? But I'm going to talk it through. So graphic profiling for restaurant is actually very important. I might not know your total transaction volume, but I might know operationally where you're actually getting your supplies from. Also, I can have data to understand geographically where's your location. If you're in Roppongi, Tokyo, versus a suburb of Tokyo, rental is going to be different. Your food is going to be priced different, right? Density is going to be different. And I also have a way to find out who are actually visiting your store. Is there traffic? Do you have a website, right? However, I think the tiny small innovation we actually created by looking at the data differently is we created an index looking at the taste of the restaurant versus the preferred taste of the city. So let me give you an example, right? If you're in Sichuan province, that's a province in China known for loving spicy food, right? So if you open a hot pot place, well, chances are, like, you know, there's a lot of hot pot places, but you will survive. Why? Because people literally eat hot pot every other day. However, if you open a Cantonese restaurant, seafoody, a bit bland, mild in taste, right? That's not preferred taste of the city. Not saying that your restaurant isn't going to survive, but it's a consideration when we think about we don't have the restaurant's income estimation, right, or reported income. I have to project the sustainability of the business somehow. So the taste of the restaurant as well as the preferred taste of the city is one of the index we actually created to support our credit scoring or the credit assessment process to look at the future sustainability of the restaurants. And lastly, I want to talk about the so what, right? You see the examples, and then you start to see, okay, you know, you have these fancy ideas, right? You have a lot of data, but how are you going to put everything together? Coming back again to my first job, I was a risk manager, right? So I also vividly remember, right, you know, I was doing the 3x3 grid, you know, I look at, well, you know, I have 50 rules. The next year I had, like, you know, 200 rules. If I'm going to change this rule and modify this threshold, you know, is my performance due rank ordering, what am I going to do, right? So when we think about, we have ideas, we want to run fast to support the underserved, to drive innovation. We also need to talk about what's powering it, what's the engine behind it. Right? So one of the small innovations we actually did was also to create what we actually call ACE, the Ant credit engine. It's pretty easy, drag and drop, zero coding. But what it does is like, one of the beautiful feature it actually has is it actually mimics a lot of risk analysis behavior. It actually does a lot of different combinations in testing environment in terms of the rules as well as the cutoffs. It basically optimizes the speed of you actually identify the best risk management rule for this segment to implement. So that's one of the small innovations when we actually talk about ideas, when we talk about speed. We also need to look at system-wise, capability-wise, how we're actually leveraging AI to bring tiny steps forward so we can actually go to market faster, serving the customers where they actually have demand. And then, I think my fellow speaker, Karen, actually talked about sustainable finance, right? I want to put a different spin for the innovation piece to talk about what do we think is sustainable innovation, right? Sustainable innovation means you have to be open, you have to collaborate, you have to share, right? So Ant International actually has done a lot with the authorities, with the regulators to promote sharing. Not only our best practices in China, but also our technologies as well as our failures where we think it hasn't worked and what are our lessons learned. And also since 2023, we have created an international foundation and it has been supporting a lot of national fintech events. So I think one of the ways to sustain innovation is really to promote sharing and open collaboration. And lastly, and this is the ESG spring to innovation as well, right? If you think about who's actually driving the innovation, to start with, it's not the technology, it's us. It's the talents we're actually looking for. So also to promote innovation, we have created local programs. So for instance, in Indonesia, we have a program called Sister Budaya. And this year, we're actually adding Disbudaya. So this program is specifically dedicated to women entrepreneurs. Their stories are touching, how they're actually uplifting their lives, how they're actually impacting the people surrounding them, how they're actually creating innovations in their daily lives, right? The program by far has served over 1,800 women entrepreneurs here. These are our future. These are the people actually powering the digital innovation behind the scene. And this year, we're actually adding to the program, powering the women entrepreneurs with disability. And lastly, we have created a tech program called 10 times 1,000. That's basically creating a seeding effect, right? We're committed to train and develop at least 1,000 tech leaders within a year. We have far succeeded exceeding that target. However, if you think about the seeding effect, the program is really created to sustain innovation by training our talents. It could be entrepreneurs, it could be our future tech leaders. But what we actually believe is inclusive finance cannot be done without these future talents, as well as the collaboration across different organizations. And lastly, again, I'm going to end my session with a story. My most recent job is with Ant International. I'm responsible for Indonesia as well as Japan's credit tech services market development. And when I first joined, I was like, oh, I'm going to do a great job, show my power. And my boss is like, there's no rush. Go to Indonesia. Go look at the market, go understand. So I've spent the past 6 months visiting the mom and pop shops on the street, visiting palm tree farmers, visiting ice cream sellers, visiting bottled water distributors to understand what they're actually looking for, what their pain points is. So I'm going to end with this. This is our vision. We will continue on the journey on digital innovation to drive financial growth. But what we believe is it might not be the next shining object that everyone's chasing. It's about bringing small and beautiful changes to the world, to Indonesia.
Great, thank you, Janet. Janet already presenting a noble task of the International Credit Tech by innovating products and services to empower the underserved and high-risk users. Really appreciate that. Thank you, Janet. And last but not least, Pak Arif. Pak Arif, silakan mau jalan, mau ini, tetapi di ruangan ini saja ya, Pak. Silakan saja. Yeah. Okay, please. Yeah.
Good day, everyone. I would like to start my speech by saying that every innovation has consequences, whether it's negative or positive. We don't need to be scary of the innovation, but we need to be aware of the risks and mitigate the potential risks. So previous speakers talk about the bright side of digital finance. I was asked to speak about the dark side of digital finance. But let's start looking at the promise of digital finance first. So when we travel to Indonesia in some city, big cities, so it's easy for us to see this QR code. So the quick response code Indonesian standard, what we call as QRIS. So it's easy for us to pay for the street vendors, to the traditional markets, right? And also it's easy for us to put our money into the smartphone. So now we can transfer even for the remittance just a few minutes. But then back then, 10 years ago, it takes few days. And Pak Irnal mentioned about the growing ecosystem of digital finance, about the e-wallet, about the electronic payments. That's part of the digital finance. And here, digital finance is actually improve the accessibility, speed, and convenience. So there is no more waiting in the bank lines, and it's easy for us to do the digital bankings. And as the survey from the World Bank, 76% of the global population now has access to the digital financial services. That's the dream of the financial inclusion. But is that the reality? So let's look at the hidden costs of the financial innovation. So there are two most pressing things that I would like to say here. So the first one is the financial crime and financial fraud. So the global coalition to fight financial crime, so here estimates that global losses from scams could be between $50 billion to $177 billion. And then the average loss per victim is $12,000. You can imagine how big is it. And the second one, in Indonesia, we haven't seen the news about digital discrimination, but it may not be published yet. But in the US, in other countries, it happens. So you may remember about the case of Apple Card, where female were often rejected, or they were often offered credit limits less than their male counterpart. So Apple doesn't use protected labels. So in data science, the privacy data, we call it as protected labels, like gender, race, and so on and so forth. They don't use it in Apple. But what do they use it is the proxy labels. What is these proxy labels? Like length of experience, salary. So that could potentially, because it has a high correlation with the protected labels, and then it can potentially discriminate between male and females. That's what happened. So that's the digital discrimination. So people from minority ethnic groups face more significant exclusion. Like in the US, for example, we witnessed like black people versus white people, and then they're having a significant exclusion from the financial systems. So then the question here, the rise of digital finance here, whether it accelerates the financial inclusion or it just exposes people with the debt trap. So let's move on. So we look at the reality check here. Dark patterns in fintech apps. So if you have your trading apps, I have my own too. So for example, it's easy for us to buy stock just via our smartphone, just with few touches and few clicks. They provide us with the financial ratios. They help us to easily compare the financial cues between years. They do also have the social media that can trigger our fear of missing out. So that's the psychological things behind these financial technology apps. There are psychology behind this digital spending. And some of the fintech apps, they also use predatory lending algorithms, which sometimes lacks of transparency. And you can see now, buy now, pay later. It happens in Indonesia, in Singapore. That's actually a big problem. It seems that harmless for people, let's say, spending 1 million rupiahs for, let's say, 10 installments. It seems harmless. But then we need to be aware of that we just don't pay the 1,000 million, but also the interest rates. So this buy now, pay later is actually used the psychological to nudge people to behave that benefit the financial apps. And then credit scoring, right? In China, they have a social credit score, which they can keep track of your financial behavior, your login to the applications, every transaction, they keep track on it. And then that social credit score can determine whether you are eligible for certain types of services. And in the US, for example, this credit scoring can also determine whether you can land a job in a financial position or not. And I just read the news last few days in Jakarta Post. This has happened in Indonesia. The problem in Indonesia's digital finance revolution is about online gambling and also predatory digital lending. As John mentioned about the over-indebtedness, that's one of the pressing problems. I had a collaboration with one of the P2P lending companies in Indonesia, and then we had a survey. Unfortunately, the customers of P2P lending is those that have lacked financial literacy. Because the fintech apps, the online lending, is just enticing them with the easy loan application compared to the traditional bank, which you have to submit many paperwork. But with the online lending, it's easy. It's just one day, it's just you can get the money. But the problem is the interest rate is high. Another thing is the invisible strings here. You see that in 30 digital finance apps, so they requested access to the user's context, but they did not mention this in their privacy policy. So you see that if I ask you where you buy coffee last month or last 2 months, you may forget. But if the financial apps keep tracks of your purchasing, so they do know where you buy the coffee, what day, what time, how frequent you go to certain coffee shop, they exactly know that. Just easy using the data analytics. So the data harvesting in financial apps is really massive. Because you see that in financial apps, it's one of the apps that collect more data other than apps in your phone. So this keeps tracks your behavior. Every click, every login, every transaction that you do with your financial apps or the apps that links to your banking application, they do know your behavior. So the data that they are harvesting is actually shapes your digital identity. And it can also create digital discrimination too. While some people, they are tech savvy, they do use financial apps frequently, every day, but there is a great divide here. For example, elderly people. So they don't tech savvy, they have wealth, but they don't tech savvy, and it's a problem for them to access these digital financial apps. And in Indonesia, we need to be aware of this geographic inequality. So in some places, we still have the frequent electricity blackouts. Like, I'm from Pontianak. So even until now, we still have frequent blackout. Even within months, there are several electricity blackout. And the infrastructure is not uniform as well across Indonesia. If you see in Kalimantan, there are several borders close to Malaysia. And that's difficult for us to get the signal. Even we need to go to the higher places just to get the signals. And even in Java Islands as well, like in Sampang, in Madura, they still have lack of infrastructure about this internet. So the internet access, the connectivity is different, is varied from place to places in Indonesia. This is what we call as geographic inequality. And then we need to be aware of the digital literacies as well. Not all of us understand about this digital finance, about the finance concept, about the use of the digital applications as well. Like elderly people that I mentioned before, women, people that lives in the village, in the remote places, in the rural areas. And this digital finance as well, it may create the technology dependencies. You remember that several months ago, where our national data centers has disrupted, and most of public services get disrupted as well. So that creates the technological dependencies. So the technology can sometimes create easy life, but then when it happens, sometimes it can create complex lives to our daily activities as well. Another thing that we need to be aware of is the privacy paradox. So we are concerned of our privacy data. But because of the apps that entice us with the features, we are willing to sacrifice our privacy data as well. And if the company that collect this data, if they are not responsible of our data, it can be disaster for us and also for the company. So this can be misused as a surveillance tool. And it can be surveillance for cross-border data flows as well. And as I mentioned before about the credit scoring, about the financial apps that keeping track of your data, so it tells the story of your life. So I'm here not just painting a black picture about the financial or digital financial revolution, but I'm going to offer the solutions as well, the way forward. So the first is the ethical design principles. So suppose that just the simple example, when you register to the Netflix, so they ask you what genre that you are prefer to watch. So it's the same like in the financial apps. It asks you the financial preference, risk appetite. So that's important because by understanding what the user's preference, that's also create the ethic landscape for these financial ecosystems. The next is privacy by design. So the company needs to provide, let's say, the consent, and then the consent must be understandable, simple, unlike the current consent which is lengthy. Sometimes we don't read it, we just click agree. So how about we just create like a consent form which is easy to understand, simple, concise, with a bullet pointer, and then people can read through of it. And then the next thing is providing the consent, and then providing the regular audit for companies that use technology, especially if they are using algorithmic decision making. So there should be a way for the customers to challenge. For example, if they are rejected by the financial institution, so why I'm being rejected for not getting a loan? What's the problem, even though I have a good credit score? So we don't need to just rely 100% on the AI or technology because it can be disaster. So the ethical principle here is keeping human in the loop. And the next, we need regulatory frameworks. So we need to balance the regulatory frameworks. So in some way, we need to protect users, minimize the potential risks. In other ways, we need to regulate the innovation. So there has to be a balance. So we already have a Personal Data Protection Act in Indonesia, even though we're still waiting for the Data Protection Authority to be formed. The shift now is about not just protecting the data, but also the responsible use of the technology. For example, previous speakers talk about the use of AI, predictive AI, generative AI. It can create biases. It can amplify the biases that already happen in the social ecosystems, in our social landscape. So if we just leave that automated decision-making by AI left unchecked, and then it can be disaster. Because AI, which we perceive neutral, they are not neutral. So they can be biased based on the data. They can be biased based on the model, based on the algorithms that train on the data. So we need to be cautious on the data that already have the biases and the model itself, which use the data to produce outcome. The next thing is digital literacy. This is what OJK is doing well to improve the digital literacy. But we also need to touch the marginalized community, disabled people, women. So that can make a difference when we improve their digital literacy. As I mentioned before, right? So the saddest thing is those that use the P2P lending is actually those that have lack of financial literacy. Because if, let's say, those people have lack of financial literacy, they will be enticing by this easy and then speed and no more paperwork compared to the traditional bank. So it's easy for them to get loan from the P2P lending. And we need to, company and government need to collaborate in this digital literacy to improve how they understand the financial concept and how they do use of the digital finance. So for example, we don't want people to use or to drive cars without license and lessons. So the same thing happened with the digital financial apps as well. We need to ensure that people use the digital financial apps with fully understanding the financial concept. They do understand the financial literacy. So my concern is always about this digital literacy and also how to disseminate my research in algorithm trust and also how to avoid financial scam and fraud. For example, I work with Bank Indonesia. So we propose algorithmic trust and regulation. So we propose a framework that comprises of governance, ethics, legal, and social implications. So how actually Bank Indonesia could govern the banking institution so that they ensure that when the banking institution work with AI, so they have these measures for governance, ethical, legal, and social implication. And I do some study on the financial scams as well. So we look at the context of cryptocurrencies. So in the United States, they have the Department of Financial Protection and Innovation, DFPI. So they do collect report from people that have exposed by scams. And we do analyze hundreds of reports, thousands of texts and words. And we do analyze. And then we come up with the model so that can be applicable to other scams as well, not just crypto scams. So these scams is actually have 3 layers. The psychological layers, cognitive layers, and then social engineering layers, and also technological layers. So for example, people can use like romance scam, using the social engineering, enticing people to invest in cryptocurrency or other types of investment, and also they try to manipulate your cognitive using like fear of missing out, FOMO, so that it will trigger you to do the investment. And then another thing, we look at how people trust with the crowd lending or P2P lending. So in Indonesia, we do have many types of crowd lending with the products, let's say, for farmers, fishery, and other types. So what actually the factors that improve trusts for investors to fund the money, and also for the company, for the P2P lending company, to improve the trust? So we look at here. So actually, when the crowd lending companies provide, let's say, borrower's queues, and then provide the technological convenience, and provide more transparent services, and then it will improve the trust from the investors. So that also part of my work that related to the digital financial literacy, and also how to make this digital finance much, much better. And here is my closing remark. The future of money shouldn't cost our humanity. So the future of digital financial transformation should empower, not enslave us, should protect, not exploit us, and should include, not divide us. So you know that in finance, trust is really the key. So simple tech can open the doors, changing how we all make our money, spend money, purchase things. With smart rules, right? So we can ensure that this helps everyone, building trust and including more people in the economy. So then let's use the technology to bring everyone on board and move forward together. Thank you.
Thank you, Pak Arif. Pak Arif is a fair man. Yeah. He has already reminded us that despite the benefit from the innovations, there always a dark side, the other coin, the other side of the coin. For example, the unknown risks or the emerging risks. And he also mentioned about the regulator role. Innovation is always invite what we call it diabolical dilemma for the regulator. Whether we are going to embrace the risk, spoil the risk that emerging into the industry. That's the DNA of the regulator as a risk averse. Or we allow the industry to take the benefit, to be more competitive. However, that means we spoil the industry to engage the unknown risk, the emerging risk that we don't know. Yeah? Let's see. Okay, now it's come to the Q&A. Thank you very much for the speakers ready to take the questions from the other side. Identify yourself, state your name, your affiliated, the company. Please, from my left-hand side first. No? No question from there? Okay, I take the other, Pak Divi, and then gentleman in the backs, and Pak Roberto. 4, yeah, 4 gentlemen. Ladies? That's 5, okay. First, Pak Divi, please. Yeah, you can stand up, Pak.
We call it the Badan Supervisi OJK. So my job is quite unique. We are supervising the supervisors. So I think I have sometimes some unique perspective of what we are talking today. We are talking about driving financial innovations and artificial intelligence and financial literacy, financial inclusions, which actually I have been experienced in central bank for 32 years. Actually, with all of these driving forces, there are 3 outcomes of this. First is the one that people with a good credit scoring, which is financial services they love about these people, good record, good health, and they love to give finance, whatever financial access to them. This is the first class. The second class is the one that potentially can be can have access to the financial services, like the young generation, something like that. Which is the solution is quite easy. Financial education, financial literacy to them. Hopefully they can get the be the one of the first class. The third class is the one that Pak Anung, I don't know what the English of this translation. We have the people that like to ekonomi pasang badan. I don't know, maybe you can translate it. Ekonomi pasang badan.
Yeah.
They just use one opportunity in their life and just don't think about the future.
A kind of hit and run theaters.
Yeah. Ekonomi pasang badan. This is very Indonesian.
Impulsive.
So not impulsive actually. They don't think about the future.
Okay.
I have a hypothesis in Indonesia that the people high rising indebtedness in the peer-to-peer lending actually the one that rejected by the banking because of they have the bad score there and they move to another financial services. So my question is whether all of these driving digital innovations will create something like a death penalty for this third class. Forever, they will not able to get access to financial services. And perhaps in US or in Singapore, in modern countries, it is not quite a big proportion of the populations. But maybe in Indonesia, it's quite large proportions, which can create the social impact to the government. If they forever until, what I don't know, they cannot act, because of this digital scoring, they cannot have access at all. There is no second life for them. So I'm just thinking about what will, because the consequences, especially if we implement the artificial intelligence. You know, in the economy there is an adverse selections, leave a lot of people with good health, good credit rating, but the poor one. And no one will help the poor one, poor credit rating. So I just want to know about your perspective on this. How do we cope with this situation in the future? Because it will create some social, also some social responsibilities for the government. Thank you.
Great, thank you, Pak Divi. Pak Divi is questioning the next one is a gentleman in the back.
Thank you. I'm Bruli from Papua University. Papua University. Yes.
Must be in Papua.
Yes, Papua. Okay, this the question for the all presentations. The first for Mr. Jones. How can we ensure that digital financial innovation contributes to the sustainable development goals? Yes, to contribute to sustainable development, SDGs.
Sorry,
I'll say it again, sorry.
How can we ensure that digital financial innovation contributes to SDGs?
SDGs.
Yes.
SDGs.
Okay.
SDGs.
Then the second for Mr. Karin, how can Kasikom measure and report on the environmental and social impact of its sustainable financial products? Okay, then the third, yes, for Ms. Chen, how can we promote responsible innovation that prioritizes the needs and well-being of underserved populations. And the last for Mr. Arif, how can we promote sustainable financial innovation that minimize environmental harm? Okay, this. Oh, thank you.
Okay, thank you. Fair enough. One for all for one, for each speakers. And then Pak, silakan Pak. Pak saya.
Halo, terima kasih Pak atas kesempatannya. Thank you very much for opportunity. My name is Hotman Simbolons. I represent International Banks Association in Indonesia. I just read the theme of this event, driving financial innovations to enhance a better financial life. From all the presentations, look like I don't see that there is a presentation to enhance a better life or financial life. You just promote your product. So there is no base. If you see enhance, it means there is a baseline. You enhance it. Could you please to share with us, especially from, how you call it, Jennifer Lee and also Karim. That's the question for you, both of you. My next question is for John. John, you mentioned about digital money, cryptocurrency, and all the things. So my questions to you is how the regulator to adapt with these innovations in monetary policy and also fiscal policy. How we measure the, how you call it, the indicator of economic in the future. If all the digital is, used by Indonesia people, because M1, M2, MM3 will be wiped out. And how you monitor velocity of money in the future will be impacted to the price if you see PT equal to MNV. The next questions for Jane, especially, I have a lot of questions actually, because we're facing a lot of problems on financial, as mentioned, in financial, P2P and pinjol. I just mentioned before that one people's just arrested in the airport because these people want to sell the king to India because of pinjol. So my question is, gently, you just share with us that you monitor all the expense of the people. You monitor where the restaurants they buy, where they have to go. But you didn't mention the source of income, because this will impact to MUE, maximum unsecured exposure, then lead to NPL. As you mentioned that your NPL reduced 20% to 30% before. What is the base? How your NPL rate? Let's say your NPL rate 20% and you reduce 20%, it's still 50%. It's still high. As mentioned by OJK before in the DPR, the pinjol NPL is still high, 5% in 21 days. Could you please to share with us? Next, I say thank you to Pak Arif. This is what we need to share, because this is not beauty one, but a lot of risk there. Thank you very much for your presentation. That's all, thank you.
Okay. Thank you, gentlemen. I think I have to stop for these three questionnaire, because it's very complicated. From Pak Divi, it's very tough questions, I think. Pak Divi is a central bankers alumni, which is now engaged into a new profession as the supervisor of supervisory authority. Okay, please, gentlemen, start from you, John.
Okay. I think there were, I don't know how much time we have, but there were 3 points that were brought up. And to review, I guess the one was really, how are we really enhancing digital financial inclusion and avoiding this issue of over-indebtedness, particularly from the P2P lending. And the other was on crypto impact, and I'm trying to remember the other one was on from the university.
Papua University.
Yeah.
Yeah.
The question that he had asked?
But if he questioning the capability of digital scoring.
Oh.
Yeah. So there's a leveling of the data, and some of them is like when I got the credit and I cannot pay, just, you know, it's me. It's up to you how you're going to treat me. That's,
right.
Yeah, it's a kind of hit and runs, stubborn debtors. I cannot pay. It's up to you, banks, how you treat me.
Right.
Yeah. From the Papua, for John is how can the SCD. How can the digital innovations
sustainable development
sustainable
development goals. Yeah. Okay. Yes. Yes, I remember. All right. You know, the crypto one is a very complicated matter. I think the way I view it, people are, you know, as I said, there's a lot of aspects to crypto. We can look at, you know, the aspects of blockchain, distributed ledger technology, as Keuangan Bank is doing, to enhance how we transact, and that is a good thing. And again, a lot of it is possible because of the blockchain. From the crypto asset standpoint, and again, I don't usually refer to it as a currency because it really isn't a currency. It's more of a virtual asset or virtual good, and how FATF classifies it. You know, I think it's like any other thing that people are trading. We have issues about fraud. Of course, there's a long history of potentials of illicit funds that are still circling around the world. And I think the importance of making sure that Indonesia is not used for the purposes of supporting things like money lending, either directly or indirectly, and the people as well. So I think that's where the challenge lies. There are a lot of tools, there are a lot of experiences around the world about how to manage it, how to protect people. Again, it's an asset. I don't think it's going to really affect dramatically money supply. We're not talking about the creation. You know, there was a long talk before when Facebook wanted to do Project Yem, where they were going to create a whole new currency that was going to be created based on a basket of currencies. Regulators around the world decided that was not a good thing because it could affect money supply. A lot of people in a country like Indonesia could have just flocked over to this new e-currency that was backed by a whole flock, as opposed to something that's based on current currencies. I don't think you're going to have a point where everybody's going to jump into it. Again, it's an asset class, and the important thing, I think, for the regulators, when that touches fiat money, so once I have to use it, I'm going to be oftentimes having to convert it. And it's those exchanges and those changes. So it's a more complicated area, but I think from a regulatory standpoint, it's looking at the FATF guidelines and ensuring that the regulator has the ability to do it, and that the population is educated about the risks, because there are substantial risks with a lot of the virtual assets that are out there. In terms of the discussion with regard to over-indebtedness and particularly the fintech lending and this one group that sort of you know, doesn't seem to care about the future, those that are having the major issues. And believe me, I spent a large part back at, 4 years ago working with the Fintech Lender Association and OJK about how can we improve responsible lending? How can we develop better codes of conduct? So you actually have some good standards. Not all of them have been equally enforced or followed. You have problems with illicit lenders that have popped up. But I think for the most part, you offer a lens into what happens when this kind of goes widespread. We've had these credit bubbles in other markets. Korea's had it with the credit cards for a while. India's had it. We've known about people in Andhra Pradesh where over-indebtedness became a huge issue when people just went, and this was prior to digital lending, but when people provided large amounts of money. So I think you're not the only country where this has happened. It's how you deal with that over-indebtedness situation, and this is where financial education literacy is not just the responsibility of the government and others, but also the industry. And as I said, today we have better tools. We have tools that can help with the financial health and planning. AI can offer that. On the SDGs, to answer the other question, the Sustainable Development Goals, you know, when we look at financial inclusion, it is already supporting a lot of the Sustainable Development Goals in terms of providing, you know, when we talk about just the whole ability to provide the rails, you know, the payment rails, to access anything like better education, better health care, better economic opportunities. We talk about e-commerce and how e-commerce has revolutionized people's ability to improve their economic growth, and how financing can, you know, play a role in that. So a lot is written about the role that digital financial inclusion plays in the Sustainable Development Goals. And, you know, as I said, Indonesia is benefiting. There are these negative sides. We've talked about it with the data. We've talked about it with the over-indebtedness. And it's a constant balancing act. It's never going to, you know, you're always going to have to be dealing with those issues. But I think you're moving in the right direction, and these discussions are useful. Thank you.
Okay. Karin?
Yeah, please. Thank you. Let me answer these three questions. If I understand correctly, the first one is about the financial inclusions, and also talking about the lendings, and then the three group of customers, something like that. First, on the financial inclusions, let me explain that it's not just about who you get money or who can get money from lending. The financial inclusion starting from who has the access or easy access to banking account. Whether you can have the customers in the rural areas can have self registrations, mobile registration, online KYC, for example. These require a lot of technologies so that they can save their time. Because if you're looking at those in the rural areas, what they have very limited is their time. Because each minute, each hour that they need to leave their work to get to the bank branches or whatsoever, it means that they may be loss of their income. Because of that, the financial inclusion meaning that you let them have access. Maybe open deposit account is fine. Second that we have done is, for example, the case of Thailand, for the retail real-time payment is free almost for all, actually, for any type of transactions. That is, in our definition, is also financial inclusions, because you not only be able to let them open banking account, but the transfer of the money across banks or across platform or whether peer-to-peer is free. Now get to the third one about lending. Now this is the tricky part, and technology can come in. The lending, if we get back to our statistic class, I'm not sure each of you remember or not, we have learned about what we call the type 1 and type 2 error. It means that the type 1 error is we select not to lend to the person that actually we should lend to them. And the type 2 error is we avoid lending to the person that actually we should lend to them because it's good credit. The technology and data that Financial have talked and many one have talked is that how can we make those, if you remember in statistics class, those two curves separate as much as possible such that the type 1 and type 2 error can be minimized. And that is the duty of us, the banking, to include new technologies, new data, such that we can minimize those type 1 and type 2 error on selecting customers. But there's still some customer that actually they are not or should not get the money. And that's the new, I would say, the new initiative from many central banks on the responsible lending. We should not, as a bank, we should not just looking at customers and just throw money to them, knowing that they may not be able to pay the principal back. We just want to charge higher interest. That is not responsible lending. So if they are not ready, I was saying that, we keep them in our customer base, know their transactions, know them more, and we start to see if there is any other products that may be better suiting them. So I think this is a question on that, on financial inclusion. The second one on the ESG reporting and the financial reporting on the green, we think that it will take a long time for each country to come up with the, I would say, the world standard. But for the case of Thailand, we have done a few things, or even the K-Bank. The first one is that we have to create the same taxonomies on ESG. The Bank of Thailand, the banks, and actually K-Bank is one of the key players on creating the Thailand taxonomies on green. What can be considered as green loans? What are the criteria? It's not subjective anymore now. You have to have a very concrete definitions, because otherwise we have talked with our customers, they want cheaper interest, they want green loans, but actually what they are doing is not considered as green, but they say they are green. So we don't want that. So that is the first foundation on taxonomies. On reportings, depends on your institutions, but for us, for example, there are another two layers, what we call the standards of reporting and the framework of reporting. On the standards, you can select FASBs, you can select GRI standards on reporting, that's in detail. In a more broader sense of the framework, you may use, for example, us, we use TCFD and the PCAF framework to govern. So, depends on the voluntary manner of the bank or the regulators, whether you want to adopt which standard and which framework on reporting. But we have to have that as a framework for reporting, such that there is no greenwashing or anything on reporting. The last one, I think the other gentleman talking about that maybe myself or some of our colleagues here seem to present like advertisement of our products. Actually, it's not our intention. You can imagine that we K-Bank here in the front of regulators in this room, there is no need to advertise anything. What I try to tell about what we have done is to let you see that we are not just keep talking. We are practitioners. Why I talk about what we have done is because I want to show that we walk the talk. We do what we believe. But getting back to your questions now about the happier or the more, I would say, the better financial life. In our philosophies, there are three prongs of that. The first one is wider. How can we make sure that we can reach wider group of customers? The digital banking, the platforms, many things. The aim of that is to reach wider group of customers. Whether it's payment, it's deposit account, it's lending, that's fine. It's just wider. The second one is better connectivities. You can see that on digital world, what we need is about the connectivities between platform to platforms, country to countries, currency to currencies. Those are the things that we have to ensure that as a players, they have better connectivities. And the last one is greener. And that's why I talk that we have lent almost 100 billion Thai bahts already on transitional loan, green loans. So these are the things that we hope that we can help customers and customers decarbonize their operation. And at the end, the countries and the world can be a better place. We have lower PM 2.5, get lower carbon emission, those kind of things. So I think wider, better connectivities and greeners are our duties to deliver to the people. Thank you.
Okay. Thank you, Karin. Pak Hotman already raised the naughty questions. You only promoting your product, which one is enhancing the better life of a better financial life, Pak Hotman. So basically, Karin already presenting the product, so that represent how the Keuangan Bank enhance through the benefiting the digital innovations to have a better financial life. I think Janet will have some more to respond to Pak Hutmat's questions on that.
Okay, so perhaps I'll go backwards and circle back.
Pak Hutman is from Citibankers. He is Citibankers and chairman of the Association of Foreign Banks in Indonesia. He would like to learn from you all how to enhance the, digital innovation for better financial life. Please, Janet.
Definitely. I think part of your question you mentioned baseline, right? I think baseline can be anything. It could be something that we've already started. For instance, in a lot of our markets, or what do we actually touch upon today, we talk about SME lending, right? And even after a lot of work has been done for SME lending, you can still call that baseline. Because today, when I look at the developing countries, even with the well-penetrated financial countries, the SME segment is still largely underserved. I'm just using that as an example, right? Looking at Indonesia, collectively, I think the banks, the authorities, the regulators have done a lot of great work. But I think every time you made an innovative move forward, you created a new baseline. So that's how I will look at it, right? So every time when we actually talk about there's a new product, there's a new way to assess credit awareness, there is a new way to perhaps drive financial inclusion. We're probably looking at today, right? And what we're actually calling today as a baseline because we want to do a better job tomorrow. So that's how I will actually classify baseline. I think for the very same reason, I won't talk about, well, my NPL is 5%, 10%, or it's 20%, right? Everyone has a baseline. Every lender, every institution, every market has a baseline, right? So when I talk about the reduction, and also I think it's very important as we're collectively sitting together, is the thought process actually matters, right? It doesn't matter if it's 20% or 30%. I think what matters is what we actually talk about, responsive lending, driving inclusive growth, right? So you have to balance innovation, being very mindful of privacy, right? As well as being very mindful of what are you actually trying to deliver to what segment, but well looking at what data and control points I actually have. Right? So that's a balanced, inclusive growth, being a responsible lender in any market. So I think that's probably what I'll supplement, looking at a baseline, looking at enhancing a better financial life, and looking at what I believe is actually more important to drive a better life as well as to drive inclusive finance. And perhaps I can address one of the questions I can remember. I think is the first question. I'll probably take the first question from a pure risk management perspective, right? What you actually described is a mixture of issues. In traditional risk management, we look at risk in 3 different categories. The first one is what we traditionally call credit risk, which basically, as a borrower, you actually have a good intent. You're really in financing a financial need, and you are taking out a credit to finance whatever you actually need in life or your business operation. The second is actually fraud, right? I'm stealing someone's identity. I'm using falsified information to get credit. The last one usually actually blurs the line. Where I came from, we call it credit bust out. That's what we're actually describing, right? I come in with a bad intent to game you. I'm gonna run away, hit and run, right? But what you actually describe is like, you used credit scoring, right? This is where I think problem solving becomes very precise and segmented. what are we actually trying to deal with? The typical credit scoring usually predicts the credit behavior based on the credit cycle we actually see. Based on the segment of people, they actually came in with a good intent, with time, perhaps get into financial difficulty, hence become a delinquent user, right? However, the hit and runs, they're very different. So it takes a very different data set to train the rules as well as the model. So I think the reason for why I wanted to share that is like, I think when we actually think about responsible lending and social responsibility, it's end to end. It takes the lenders or the financial institutions to understand the risks precisely and having the right scores to predict the right behavior, making the right decisions, type 1, type 2 error, right? But also, it also takes the entire society from very top down to create that necessary education, right? So the people who are really in need with a good intent, over time will actually understand that building a clean credit history is very important. It goes far and beyond, right? And lastly is really technology, right? Making sure we use the necessary skill sets as well as the technical capabilities to identify early, to catch the hit and runs early, and to have the right treatments for the different segments, for the different risk types we're actually trying to address.
Okay, thank you, Janet. You can continue discussion during the lunchtime, Pak Divi, with Janet. Pak Arif, your part, please.
I just want to emphasize what Janet and Karen says about the digital credit scoring. I would say that the most important thing is not about technology, but about risk management. So whether bank or financial institution willing to take risks for those that already left on this digital credit scoring. I had a consultation with one of the bank in Singapore. There is an interesting thing. It's not just about the technology. There is a hidden layer of the heuristic decision making. For example, in Singapore, there are 3 big races. So if I ask them whether you just rely on 100% of what the outcome from the automated decision making, they say that no. Because from the experience, there are differences from these 3 races actually. But then I question them. This is actually it's not allowed. It's unethical. But then the question is, we don't want our risk is high because of neglecting what we already experienced before. So there has to be a hidden another layer of human decision making. So then, if the senior management in the bank decide, or these consumers, this group of people have a good credit scoring, not just because of they look at the technology, but also there are human decision makings as well. Because if something happens, AI cannot be sued in the court because they don't have intent. But us as a human, we have intention. Intention is actually the critical things in law actually. So that's what I respond to your question, Pak Divi. And then for Bapak from University of Papua, I had a work with one of the ministries in Indonesia as well. This is really a tough question. For predictive analytics, it doesn't harm the environment because we can just use like existing model. The problem is about the generative AI. Generative AI is really harmful to the environment. So we are trying to use open sources, but then we end up with, let's say, poor outcome. So we use open sources, and then we compare with, let's say, Llama or OpenAI and Gemini, and they do very well because they have resources. They have big cloud services. And then they train their generative AI model with a huge amount of data. But then the open source, we have lack of this training data. We can build the open sources, generative AI, but the problem is we still lag behind with the existing that is produced by the big companies. So I don't know how to respond to this, but this is really a big and tough questions. And we are still relying on the generative AI model that is produced by the big tech companies.
Okay, thank you, Parif. Yes, I have to read 2 questions from online, but I promise there are 2 gentlemen here. Oh, Pak Roberto, and then the lady behind there, and then the other 2 from online. We still have much time because the session will end until midnight. Okay. Pak Roberto, please.
Thank you, Pak Anu. My name is Roberto, the head of OJK Representative Office for Jakarta, Bogor, Depok, Bekasi, and Banten Province. In my understanding, these days, more intensive large-scale banks and non-bank financial institutions utilizing the regulatory technology. And more supervisors in the world also begin to implement the supervisory technology regarding its huge roles and benefits. So my question is very short. I want to know your perspective about timing or momentum to implement the regulatory technology and supervisory technology. Whether it's urgent to implement it now or let's say for coming years. Thank you, Pak Anu.
Pak Roberto, that's very concise question. So the lady in the back.
Thank you for the opportunities. My name is Nia Amelia. I'm from OJK Bali and Udayana University. Thank you for the success story from Kasikorn Bank. I work as a banking supervisor. As we all know in Bali that we have so many rural banks, around 140 rural banks. My question is, are there any opportunities or how these rural banks can compete with other financial institutions in digital innovations? Thank you very much.
Okay, great. Thank you from the OJK Bali. Now I invite from the online participants. Name Khoirudin, institution. This is a Bandung Technology, a kind of university institute. Yeah. ITB AD from Riau. Sorry. Okay. Okay. Okay, questions. What solution can be implemented to overcome the challenges of high cost and excessive debt in fintech lending? Give the example, thank you. And the second one? From the Indonesian University, Nawar, addressed to speaker Janet Lee. Thank you for bringing up on how to tackle financial inclusion and international. Previously, you elaborated that to identify credit-worthy blue collars, the company uses fintech evaluations, which includes digital device and third-party data to support that. So I was wondering, what is your opinion regarding the use of social media activities, for example, TikTok comments, to achieve the diverse yet accurate data to identify a credit-worthy persons or SMEs? Thanks. Okay, from the Pak Roberto, any idea that when is the right time to implement the subtech and RegTech?
I can answer.
Yeah, Pak Arif, please.
So I think now is the right time to implement regulatory technology and supervisory technology. So we have PDP Act. So actually the works about the data governance in many industries just tick, everything. So it can be done using the regulatory technology, because if it is used manually, that will be tedious and time consuming. And then it creates the compliance costs. So if we use regulatory technology and supervisory technology, it will ease the company to comply with the PDP Act, which is so many admin things and so many ticks that they need to comply on.
Okay, I think the second, you want to respond, Jones? Okay, please.
I worked very closely with OJK years ago to join the Global Financial Innovation Network, GFIN, which was based in the UK, of regulators from around the world. And this is where FCA, the Financial Conduct Authority of the UK, was sharing what they were learning in a variety of areas in terms of innovation. One of the areas, so they were looking at kind of a global regulatory sandbox, but the one area that was of the most interest to OJK at the time was looking at RegTech and supervisory technology solutions. Singapore also has been supporting regional dialogue on those type of solutions, what's working, what's not working. So again, and within ASEAN, there is a working committee that works on these solutions. I think, as I said, I agree the time is right now. RegTech can be developed locally by local institutions. You could put out a challenge fund to say we'd like to be able to facilitate how people report and make it better. You can actually crowdsource that from the private sector to further spur that on. It could be run through your regulatory sandbox. But on the supervisory technologies, a lot of experience around the world. Particularly, we talked about looking at crypto. You need supervisory technology for looking at crypto. You can't do it manually. You need to have that supervisory technology. You need those advanced and analytical tools to help you monitor that. It's the only way it can be done. So I think where you're at now, you need to invest in it. It needs to be a part, and I believe it is a part of your innovation roadmap. So I would say now is the time.
Anything else you want to respond from the online? Could you please display again the questions? Or probably Karin and Janet can respond to the question from the lady that you are responsible for the incompetitiveness of the rural banks because of your presence. Yeah? Rural banks are like a sandwich. From the government point of view, government also has the government programs like what we call KUR, is subsidized loans. And then on the bottoms, the presentations of like fintech and also the digital bank that's strike right away to the rural banks' market share. Okay, could you please to respond how to empower them so they can live together in peace?
Yeah, I think
Mike, please. Oh,
here, use this one.
Okay, I can use this one. On the competition of the rural banks, I think it's the same analogy as whether we are big bank in Thailand, but we are very small, tiny banks in the other countries. Same thing. We have our subsidiaries in China. Same thing. Or even in the global scale, we are very small. But think about it this way: for any smaller, I would say, competitor, you have something that the bigger one they do not have. You have the closer reach to the customers. Yeah. You know them even better, something like that. So think about this way. If I turn this question a little bit, think about how can bank compete with a tech companies, for example, on implementing generative AI. Cannot. Can think Kasikorn Bank can compete with ChatGPT? Cannot. But we have created our own generative AI on financial literacies, so that this generative AI no more in Thai language and focusing on financial knowledge, such that this generative AI can pass the CFA test. We will use that to help support our customers. We will use that to help our private bankers to give advice to the customers. What I try to say is that if you are a small player, you cannot be broad, do everything. You have to be really focused on what is your core strength and what is the objective of your business, the main one. Second, you cannot do it alone. You have to do it in groups. Think about our Malaysian bank that we acquired.
Maybe if you are a smaller bank, have good relationship with our mass bank, maybe instead of, if you want to do trade finance or your customer want to do trade finance, you have no need to open nostro account with many banks in the other countries. How about you channels the funds, the foreign currency through mass bank, for example, and we do things for you. You may get lower, I would say, profitabilities, but you can have broader access. You can serve your customer right now. So it's just two things for the smaller competitors that you have to be really focused on. What is your core strength? And second is you have to team up with the others so that you can compete. I think this is the advice on that. I would like to add a little bit on the RegTech and the preparation. I have seen many others talk about it now, whatever. It's easier to be said than done. We need to address the question of why first before we address on what and when. Because the question asks about when, people say now. I think we need to prioritize on why first. For example, many years back in Thailand, we have problems about mis-selling, market conduct. So we do a lot of things and focusing on that. But now, in the current situations, maybe priority have changed. We may focus on cyber securities, the fraud on cybers, and the responsible lending because of the higher household debt in Thailand. So the RegTech or whatever things that we will implement dependent on the objective why of that RegTech first. And then why of different countries has different priorities. And then after that, we talk about what and then when. And the top 3, top 5 priorities can do it right now. But those below the risk, we can do it later, next 3 years, 5 years. I think that's the answer. Yeah.
Okay, Janet, please. And also responding the online questions for you, addressing to you.
Okay. I'll respond probably just to add on the rural banking piece by sharing a recent story I heard. So recently I heard a story. It's one of the companies actually doing cross-border payment facilitation, right? And the guy actually told me 5 years ago when he actually embarked on this journey, he had a lot of other competitors. And what he heard from his team is like, well, you know, our rate wasn't good, our system was not great, and our product actually sucks, nothing actually works. So the challenge he was facing was he had very limited investment fund. He actually had to decide how to allocate it to make an impact. And amongst the competitions, he probably had a shot. That was it. So why am I actually saying this? It's probably an analogy as well, right? I think rural banks actually have the agility compared to the larger banks. However, sometimes when you think about it, you're a bank by the end of the day. You're not as agile as some of the fintech lenders or some of the fintech players. So the reason for why I actually want to share that story is twofold. One, I think you should start with your customers. In the region where you actually play, who are your customers? What are their pain points? What exactly they're looking for? You're probably thinking, well, I've got all those other competitors offering the same products or the similar set of products, but are they really addressing their pain points? Or is there a pain point that they're actually not addressing well? In the story that I was actually just telling now, this guy actually figured out he's going to be all in FX. Why? He was doing cross-border trade. He basically analyzed his competitors, right? Someone's great in terms of fee, right? Someone's great in terms of the system capability. Someone else is great in servicing. Well, he could have said, like, you know, let me put $5 here, $10 there, another $20 to make sure my products are actually revamp. But he actually focused on FX because he figured when he was actually dealing with the cross-border trade owners, that's exactly what the finance people are actually looking for. Right? So I think my thinking is very similar but probably from a different angle. Look at your customers, look at your strength, look at your single shot, and what exactly you can actually do to make an impact to address your customer's pain point. Maybe that's a way out or a differentiation to stand out and to really upplay the agility that you actually have as a rural bank. So coming back to the online question, I think it's a very interesting question. It's going to probably answer the question in 3 different layers. First of all, regulatory compliance is above everything, right? So before we talk about using any information in any market, China is not an exception. We start by asking what's actually allowed from a privacy and regulatory compliance perspective, right? So that's the first and foremost layer that I want to make clear and address. That's always the baseline and the starting point. The second layer is then what are we actually trying to assess? I think coming back to my risk management background, creditworthiness is very much generalized a lot of times. And when people think about creditworthiness, people think about a single score, perhaps, right? Your score is above this, you're good. It's below this, you're not great, right? So I want to talk about what are we actually really trying to address. I earlier actually talked about the different risk types, right? But also in risk management, we look at the positives, or what do we actually call blacklist, right? So a lot of times there's a rank ordering in terms of the information you can actually select and use, right? Usually we actually go with the traditional information. If not, with the right consent as well as the privacy guardrails, we go down the list to actually assess third parties. However, specifically going back to social media, right? What exactly we're actually trying to assess and trying to build as a relationship network, right? I think in a lot of negative case, maybe, right? You know, if I, you know, talk about like debt collections a lot online, right? You know, that sometimes does give a prediction in terms of like, you know, the situation you're actually in. But what I actually want to address is really the parity as well as the order in terms of selecting data under the regulatory guidelines as well as the guardrails we actually have. Right? That's the importance in terms of like, you know, making sure you exhaust all the necessary data sources and select the traditional data to start with, and then towards the end, look at some of the long tail data sources of whether or not it adds value, specifically to identify the blacklist or the negative ones. So that's probably how I will address the online question.
Okay, thanks, Janet. So everything has been elaborated. Could you please once again display the question from online? It's already addressing?
Yes, she answered.
Ah, okay, great. Panitia, still have times? Oh, that's, you know, right, no time. 0, 0, 0. Okay, we come to the end of the discussions. I saw many people start leaning on the chairs, starving. Okay. As we conclude our discussion on financial innovations, I'd like to thank our esteemed speakers, Mr. John Owens, Mr. Kun Karin Punlafarnik, Ms. Janet Lee, and Mr. Arif Badana. Big applause and make a noise for them. Thanks for your valuable insight. I'm not trying to conclude, as everything has been elaborated clearly by the speakers. I'm not pretending to know everything, okay? So we hope this discussion has provided you valuable insight, and thank you. Have a wonderful day. If I may suggest, if you want to enjoy out there, don't go to the beach, because it's too hot, yeah? Okay, thanks. I would like to delegate it back to the MC, Ms. Putri.
Thank you very much,
okay, great.
Mr. Arno. Thank you. May I have a big round of applause, ladies and gentlemen, to all the panelists, along with the moderator. Please kindly remain on. to receive the token of appreciation. Once again, please kindly remain on stage, and would like to invite, please come up on the stage to present the token of appreciation to Mr. Irnal. Once again, would like to invite Mr. Irnal Fiskal Lutfi to present the token of appreciation to Mr. John, Mr. Karin, Ms. Rojau, and also Mr. Arif. For the first token of appreciation, I'd like to give it to Mr. John Owens. And after that, we'd like to extend our gratitude also to Mr. Karin Bunlert Fani. And also to Ms. Rojau Janet Lee, and also Mr. Arif Pardana. And after this, we'll have photo session together. Once again, I'd like to extend our gratitude. Thank you very much to all the speakers for the valuable insight and also for the fruitful discussion. Thank you very much. And after this, we'd like to invite Mr. Irnal and also Mr. Ranu to have photo session together along with the panelists before we end our session for today. And before we are going to have the lunch time, as Mr. Ranu already mentioned earlier. Could you please take the position, Mr. Irnal and also Mr. Anu? And to all the panelists, please come closer. Official camera ready in the center. Ladies and gentlemen, please allow me to count in a count of 1, 2, 3. One more time. 1, 2, 3. May I have a big round of applause, ladies and gentlemen. Thank you very much to all our panelists. Thank you. And we would like to please you to return to your seat. Thank you very much. Thank you very much, ladies and gentlemen. As we listened earlier, that digital financial innovations offer great opportunities to enhance the inclusion and efficiency. But they also bring the challenges like the use of AI, cybersecurity risks, and also regulatory concerns as well. And to maximize their benefits, collaboration and a balanced approach are essential to create a secure and inclusive and also sustainable financial ecosystem. So once again, thank you very much for the session. And ladies and gentlemen, after this, we'd like to please everyone to enjoy our delicacy buffet lunch that we have already prepared for you in the foyer area. And we are expecting you to be back here at 1:40 p.m. local time because we're about to continue our next session for today. So once again, ladies and gentlemen, please kindly join us one more time in this ballroom at 1:40 p.m. local time. Jadi Bapak dan Ibu, jangan lupa untuk dapat kembali lagi ke ruangan ini pada pukul 1.40 waktu Indonesia bagian tengah. Dan sekali lagi Bapak dan Ibu, kami persilakan Anda untuk dapat menikmati santap siang yang telah sediakan. Langsung saja Anda langsung boleh menuju ke foyer area, dan sekali lagi jangan lupa kembali lagi ke ruangan ini pada pukul 1.40 waktu Indonesia bagian tengah. So once again, thank you very much ladies and gentlemen. As Indonesian said, selamat menikmati. Thank you.
OJK memiliki visi dan komitmen yang kuat dalam pengembangan sumber daya manusia sektor jasa keuangan secara berkelanjutan, guna mendukung terwujudnya industri jasa keuangan yang stabil, kontributif, dan inklusif. Kami sadar, dalam mewujudkan visi tersebut, peran SDM yang unggul dan kompeten menjadi kunci utama. OJK Institute hadir untuk menjadi Center of Excellence, guna mendukung pengembangan sumber daya manusia sektor jasa keuangan dan melakukan riset-riset yang inovatif dan terkini. Pengembangan sumber daya manusia sektor jasa keuangan yang kompeten dan profesional menjadi salah satu faktor penting dalam mendukung keberhasilan kinerja lembaga jasa keuangan. OJK Institute memiliki 3 fungsi utama. 1. Mengembangkan kapasitas SDM sektor jasa keuangan melalui penyelenggaraan program pelatihan, seminar, dan workshop. 2. Melakukan riset yang inovatif dan visioner. 3. Merancang dan mengembangkan standar kompetensi SDM sektor jasa keuangan.
Yeah, it says actually, it has. Yes.
Ladies and gentlemen, we are about to present you Tari Legong Condong. Legong is a traditional Balinese dance that tells the story of an angel who came down to the world. This dance has meaning related to Balinese religious and cultural values. Without further ado, please welcome Tari Legong Condong. Ladies and gentlemen, give the biggest round of applause. And moving on to the next performance of the day, I would like to present to you another dance, which is Janger dance. This is one of the traditional Balinese dance where young women and young men are dancing together with gamelan music plus singing. Also, it is a symbol of a friendship and harmony. Without further ado, would like to present to you, this is Tari Janger.
Thank you.
Well, good afternoon, distinguished guests, ladies and gentlemen. Welcome back. We are still in the second OJK International Research Forum. May I have a big round of applause for all of us, ladies and gentlemen? Apa kabarnya Bapak dan Ibu setelah makan siang? I know it's a very crucial time, I guess, because some of you might feel a little bit sleepy, but I hope that everyone's are still exciting to follow all the sessions for today, because we still have the second session for today. But before that, ladies and gentlemen, I want to feel the energy from each and every one of you. So now, since you are in the island of God and Goddesses Bali, please allow me to greet you in Bahasa Bali or Balinese language. May I do that? Can we try it together? I can't hear the energy. May I do that? Yes. Distinguished guests, ladies and gentlemen, if Putri asks you, Punapi Gatra, which means, how are you today? Please answer me with Bece Bece, which means, I'm good, I'm fine. Can we try? Yes, Bece Bece. Okay, are you ready? Are you ready? Distinguished guests, ladies and gentlemen, Punapi Gatra. Thank you. We have a big round of applause for all of you. Thank you very much. Well, distinguished guests, ladies and gentlemen, now as I mentioned before that we are going to enter the second session for our session today with the topic of lesson learned from financial innovation development. And for this session, we are going to have five different speakers that will be talking about navigating risk arising from digital financial innovation. And then we have the learning from success of digital payments in India to drive financial inclusion in Indonesia. And also we are going to listen to unleashing the power of AI to revolutionize the financial innovation, and continued by the importance of trust and awareness to encourage the development of digital assets. And the last one but not least, we are going to listen to the topic of enhancing innovative financial products and services to fostering socio-economic welfare. And for this session, ladies and gentlemen, I would like to invite the moderator to please come up on the stage. Please join me to welcome Mr. Fahri Hilmi.
Welcome back, everyone. Welcome back to the second session of today's OJK Second International Research Forum. This morning we have a lively discussion about opportunities and challenges of digital financial innovation. Colleagues from consumer banks and internationals provide you with examples of opportunities that we can explore in financial innovation. One of the quotes that stuck with my head is from Janet this morning, that your golden opportunity might not be the shiny object that out of reach somewhere. It might be that it's just everyday objects that within your reach. It's a really good quote. Yeah. Today's, in the second session, we continue with different topics. We have lesson learned from financial development, financial innovation development. And with us, we have 5 different speakers. And please allow me to invite all these 5 different speakers to come on stage. First, we have Mr. Karim Indra Gupta Siragar, Chief Executive Officer of the Catalyst. Please come on stage. Then we have Mr. Kumar Ankit, the Vice President of PayTM. Please come on stage. Then we have Mr. Dong Su, co-founder of Advanced Intelligence Group and Chief Executive Officer of Advanced AI. Please come on stage. And then we have Mr. Dimitri Mahayana, a lecturer from Institute Teknologi Bandung. Silakan, Pak. And last we have Ms. Jae Young Han. She is the head of Southern Gyeonggi Province Regional Division of Korea Inclusive Finance Agency. Please come on stage. All right, we're going to run this discussion like we did this morning. So we'll have each of you to present your presentation. But because we have more presenters than we have this morning, so we might start with maybe 20 minutes each, probably 20 minutes to 25 minutes each for presentations. And after that, we follow up with question and answers. And if we can finish on time. So without further ado, I'd like to start with Mr. Karim Indra Gupta Siregar. He is the CEO of the Catalyst. Mr. Karim Indra Gupta Siregar is CEO of the Catalyst from 2020. He was the President Director of Bank Jago from 2020 and 2023. He attended training program from INSEAD Singapore and Harvard Business School, and he also holds a bachelor degree from INTB Bandung in 1993. Mr. Karim, the stage is yours.
Okay. Sorry. Yang terhormat Pak Irman Firkuluvi, selamat siang Pak. Yang terhormat Pak Marhilmi, selamat siang. Yang terhormat Pak Agus Egarto, selamat siang. Distinguished guest, good afternoon everybody. Assalamualaikum warahmatullahi wabarakatuh. My name is Karim Siregar. So I am the CEO of the Catalyst. I will be sharing today navigating risk arising from digital financial innovation. But before I do that, I think I have a more difficult task, which is actually navigating, presenting to an audience after lunch. So I hope it all goes well. There's also a technical glitch already, so my slide is not shown there. So forgive me if I need to go around. So first of all, let me share who is Bank Jago. Bank Jago is essentially a tech-based bank embedded in digital ecosystems where we are focusing on providing life-centric digital financial solutions for the Indonesian segment. So the Catalyst is actually the strategic partner, which is the engineering arm of Bank Jago, who together we are creating all these solutions for the Indonesian segment. So our segment is mostly on the retail and the mass market. Now, why exactly, what's all behind this? Why are we actually addressing this market? There are actually three main areas. First of all, we see that the consuming market is actually expanding throughout the years, and this has created a huge opportunity for digital banking in Indonesia, where Bank Jago, together with the Catalyst, is actually creating a full digital bank and services where we do not have any branches, but all our services are through the mobile. So that is number one. The second one is the Indonesian GDP keeps on increasing. If we listen to our president now, he wants to have like 8% for this year. Hopefully, cross fingers, we can do that. But this has an effect that if you read there, Pak Mahendra is always saying that the digital economy is also a potential market. And according to Pak Hendra, it's about 330 billion by 2030. And this also is coupled with the readiness that we see of the Indonesian market, that they are now very open to do transactions through fully digital, either opening account or doing purchasing, doing payments, etc., etc. So these three areas essentially makes Indonesia very ripe, so to speak, for us to introduce a fully digital bank service. Now, so we need a full banking license, and we are what we call fully embedded in digital ecosystems. I'll get back to that later. And then thirdly is we are a tech-based bank. And therefore, throughout my presentation, I will sort of like use Jago and the Catalyst sort of like alternatively, because essentially Jago and DK are sort of like one and the same, depending on where you see it from the bank side or from the technology side. regardless of that, three main fundamentals as a bank is absolutely important. Number one, clearly we need to have good balance sheet management because at the end of the day we are a bank. We are dealing with third-party liabilities, funds. And then second is actually risk management. Being a bank is very, very important. At the beginning, risk has to be really on top of mind of we as banks. And thirdly is the regulatory management. Now, if you see on the left, on the right, is actually, I would say that Jago and the Catalyst creates a very good symbiosis, so to speak, of technology and banking, where there is the technology and engineering team, and there's also a group of professional bankers. And on the other side is actually, the other scale is actually on the age. So we have young team, talents in the engineering, and well, I wouldn't say old, but the older banker, because unfortunately I'm the oldest in my organization. So yeah, I now have to, every day discuss with all this Gen Z, etc. So it creates a very good a combination of views and inputs on what is actually the digital bank here. So this is actually the Jago app. We keep on innovating. Among the things that we have innovated, one of the things what we call the shared pocket. Previously, because banks had to be delivered through physical means, you cannot share your funds, so to speak. But once we introduced digital banking, we introduced the concept of what we call the shared pocket, where my I share with my wife and my daughter. So they have access to the same funds that I have. And like say in the office, I also have a share pocket where I share with my colleagues. And always if we go out for lunch, it's always the problem, okay, who pays for who? But now it's easy. So I do not have to chase everybody, okay, everybody pays so much. So they also know what the funds are used for and how much is actually each one is spending. So we also have this concept of pockets where you can divide your balances for what it is actually the means that you want to do. But in the top left, you see it's Jago app. I always say to the team that actually Jago app is not an app. What do I mean actually? The Jago app is actually the bank, because outside of the app, there is nothing else. The bank is in the app. And this is very important for the whole team to understand that building the app is really done through the engineering delivery. Everything has to be done through the technology. Previously in my previous banks, when you introduce a product, obviously, you have to talk to the branches, you have to talk to the business, etc. But now as a digital bank, it's not there anymore. You have to plan everything from the beginning. Once it's there, then it's there. Now we also are introducing this as a Sharia app, and this is also very interesting, so that all the functionality that we provide in the conventional bank, we also provide as a Sharia product. I mentioned that before we are embedded in digital ecosystems. If you look at conventional banks, we open branches in where all the people are going, right? In the malls, in markets, etc., because that's where the foot traffic is. So as a digital bank, we don't have branches, so where do we need to be present? So that's why we say we need to be embedded in digital ecosystems where we are where the digital users are present, which is in, let's say, ride-hailing app, in e-commerce app, and travel app. And therefore, we work closely together with Gojek and GoPay. And what I say embedded is the collaboration is to such extent that we can open the Jago app services through the Gojek app, or through, in this case, through the Bibit app. And they can open it from those other apps. And if they would like to have more complete banking services, then they can download the Jago app and add the additional services from there. So it really is a seamless integration. Even to such extent, so that we actually combine our product. As we know, only banks can have like savings product handling third-party liabilities, but GoPay has what we call the GoPay GoPay e-wallet, where it's actually only for payments. It has it's easy to open, but it also has its drawbacks. And we then combine this, we link it in the back, becoming GoPay Tabungan, where you as a GoPay wallet can link it to your Tabungan and therefore seamlessly switch between your e-wallet and your bank savings. Yeah. So over the 3 years, we have shown good traction. We have run almost 15 million customers. We launched the app back in 2021. Our asset now is around 20 trillion something. Our loans is about 17.5 trillion and 3.5% of CASA, because most of our accounts is obviously current account and savings. We have a lot of partners that we work with, Goto, Credit Pintar, Dong. I've been working with Dong here since, I don't know, 8 years ago. Yeah, so we collaborate a lot with our partners. And we are now from zero, well, not zero, we started maybe with a handful of team. Now we are 900, of which almost 50-50. Half it is in the bank, and half of it is in the Catalyst. So now, let's move on to navigating the risk. I'd just like to do some sharing here, what we have experienced during our 3 years building Jago up until it is now, into a couple of areas that we feel is the most relevant one. Number one is obviously the product development, the product life cycle, because product development in digital is very, very fast and high speed. Number two, it is inevitable if you are present in the digital world, cybersecurity is your number one concern. Yeah, so cybersecurity is very, very important for us. Since we also do ecosystem partnership with digital players, this also brings with it a specific kind of risk, which is the ecosystem partnership. And fourth is the customer engagement. How do we actually engage customer in only a fully digital delivery as a digital bank? The fifth one is actually not a risk per se, but it may become a risk, but what we call it a digital talent. And lastly, also it's not a risk in itself, but clearly as a digital bank who keeps on innovating, compliance is very, very important. Let me sort of like go through each of one by one. So product cycle. Product cycle has to be run really, really fast, right? We do have the benefit that in 2021, when we actually started 2022, we launched in 2021, we are able to start from scratch. So we just had a bank license and built the technology from the ground up. And therefore, we knew that to be able to be working with digital ecosystems, we need to have a very strong technology in ourselves. And therefore, we are able to sort of like implement the latest technologies. And when I say the latest technologies at the time, right, because even back in 2020, we didn't even hear anything of Gen AI, large language models, etc. But in any case, so we have a modern tech stack. And in the beginning, we already ensured that between the development, the security, and the operations, there is a seamless sort of like feedback. Yeah? So we call it the DevSecOps. There's continuous integration. Also, since we didn't have anything at the time, and being a bank which has nothing, zero asset, there is no way for us to actually invest in capital investment. And therefore, we do 100% cloud-based bank. Yeah? And this comes with obviously its own risk and challenges. Stability and security to the faster deployment. How do we ensure that now I believe every day we launch 2 deployments into production. How do we make sure that it's stable and secure? And then the complexity of the modern tech stack. In the beginning, it was easier. Now we have 15 million customers. When you build something for 5 million, and now we become 15 million, and we also have plans, obviously, to grow, your complexity grows with it, right? And therefore, also the stability of the system with potential service disruption. Now, in the beginning, we focus on delivering functions and new products, but now we're more shifting into making sure that the stability of the system is very high, almost 99.9%, also because the partner demands us to be have high throughput and good response times. The strategy, like I mentioned, we do continuous integrated development, so to speak, so that development, security, and operations is seen as one. And to be able to do that, we monitor closely the end-to-end process. And we leverage on the cloud services, meaning that all the infrastructure, we give it to the experts, which is the cloud providers, and we just really focusing on the functionality and product and services that we give to the customers. Cybersecurity. Cybersecurity with it brings two things, obviously, cyber attack and social engineering, because it opens your, so to speak, your footprint, right? Once you're digital, you cannot have a limit on who want to access your services, yes or no. So you can actually open an account from all over the world, but for us, obviously, this is for Indonesia. As long as you have a KTP or a KITAS, you can actually open it. And therefore, it sort of like opens us across. Yes, you might say that you can limit our services, it cannot be accessed abroad, but more and more our customers are mobile, right? Some go overseas, et cetera, and therefore you have to have your services globally. So this brings us up, obviously, challenges. The controls, like I mentioned, has been there since the beginning. Secure development practice, secure deployment. But the key actually for all the secure is that we need to closely work and sit with the security team, but it actually works vice versa. The security team also needs to understand that they cannot sort of like secure 100% so that actually we cannot do anything. And this is a continuous sort of like balance that we do during the product development processes. Yeah. Currently, we adopt something what is called NIST, which is actually a global standard where we can actually identify, detect, implement, and monitor anything with the secure related to security. And obviously, we work very close together with OJK. OJK also has its own SA-OJK, which governs us banks to be fully compliant on security-related areas. And this is we must all the time fulfill and take into account in all our services. But mostly is that we need to embed trust in all the digital, so to speak, services that we provide to our customers, because once we fail into certain things, then it becomes sort of like a reputational risk. And this is really at all times we need to be very, very careful and know that it is like that. Yeah. The third one is the ecosystem partnership. Like I mentioned, ecosystem partnership gives us access to the customers of the partners, and immediately we are exposed to multiple millions of customers, which is good for acquisition, but it brings also obviously the considerations. The synergy, like I mentioned, expand our capabilities. We have the great opportunity also to be able to address our product to the partners, but again, we need to make sure, it has mentioned already before, that the data privacy is very, very, very important. As we know now, Indonesia already has a data privacy law, so we are very, very clear with our partners about how we actually exchange data. Definitely no PII can be involved. Yeah. And also the third one, managing relationship is third one from the left. Managing relationship, because each partner demands different things. Some partners demand speed, some partners demand being able to have a very wide bandwidth of the customer, etc. So all this we have to continuously maintain. Due diligence of your partners, very, very important. And partners also understand, because we are all financial institutions. One of the things that we can manage easier, because we really are API first, so we do everything on API, so that it's very easy to sort of like monitor the communication from the bank and the partners. And lastly is, of course, the continuously regulatory assessment, because even from the bank point of view, new regulations comes in, etc. So we need to continuously sit down with our partners, ensuring the compliance. Customer engagement. Yes, customer always demands more. We need to do everything really fast, right? Effective delivery. And one thing is also what we noticed in the beginning. If you deal with an app, your personal touch is not there. There's no, usually, at least banks, is able to focus on good customer service because their customer team provides this human touch. But with an app, you cannot do that. So this is why how we can actually do hyper-personalization to make as if your app can know you. So that is a journey. We are definitely not there yet, but we're starting to be into that to make personalization for our customers. Social media is another thing. Social media, we very much do actively market on social media, but the downside, or I won't say downside, but the risk is that if something immediately goes wrong, everything you are on the social media immediately, be it the Instagram, etc. And therefore, our team, we have a very active, what we call Tanya Jago, which is our customer listening. We listen to all our social media. If there is a negative news related to Bank Jago, to be able to immediately then address these issues. A part, obviously, that our Tanya Jago is also handling the actual customer complaints. Yeah. On the digital talent, like I mentioned, this is not a risk in itself, but as we grow, you can see, just now you see now, bank has 450, DK has another 450. If the bank keeps on expanding, we have to expand ourselves. And the amount of digital talent is very scarce. The Catalyst itself actually has a team in Indonesia. Majority of it, I think, is Indonesia. Outside of Indonesia, we have a team around 60. But we see that this is going to be a challenge going forward, and therefore we, Jago and DK just launched what we call the Jago Digital Academy, where we actually have university students working with us in a digital academy, and this is actually a formal collaboration with the universities. So we do with Universitas Indonesia, with ITS, I think we have with BINUS, we have some with ITB, where what they gain from the Jago Digital Academy can be actually acknowledged as a credit point in their education. So now I believe we have published around 411 certificates already for those who are attended the Jago Digital Academy. And I think this is going forward. We want to expand it more and more so that we keep on, building the skills and the talent of our team. And the last one is actually compliance. This is a bit of a Star Trek thing, to go where no one has ever gone before, which is true. And even then, even if we actually come to a new frontier, there's another frontier. Like I mentioned, back in 2020, there was no AI, there was no LLM. So now we now are in the new frontier again. And with this, we have to navigate the challenges. We create our internal, what we call RegTech chatbot for our team, because these are all engineers. When they build product, they can easily access and ask the bot what is the relevant regulation related to that. Not just obviously from OJK, but definitely also from Bank Indonesia, and other relevant regulations is there. Yeah. And embedding compliance into digital processes, we really have a team that is assigned to what we call we call it clients, yeah, to help when you create and define product and services. In the beginning, already the compliance team is involved. And definitely, we thank OJK also, because on this journey, we wouldn't be here without really multiple consultations and the help of OJK in launching our products. So in summary, digital financial innovation drives growth and acceleration, but it's a must to always balance it with strong risk management. It is a must. Why? Because banking is a trust-based activity. Risk, if it falls down, then you lose your trust. And that, once you lose your trust, then immediately then you cannot establish your customer loyalty. And these are just the areas that we continue focusing on: effective risk management, building a risk culture. And the challenge is building a risk culture to the engineering team, because engineers are by trade and by default not sort of like educated into banking regulations. So we need to continuously discuss with the engineering team. So with that, that is essentially our experience in building a digital bank. Going forward, we see that there will be more challenges coming ahead, but hopefully with the sharing, I believe we can do a lot of other things, and focusing also on the new risk that's coming by introducing new product and services. Thank you.
Thank you. Thank you, Pak Karim. Pak Karim has mentioned about development and financial innovation in Bank Jago. Pak Karim has further alluded about challenges in digital banks, such as product cycle, cybersecurity, ecosystem partnership, and also customer engagement and compliance. Now we move on to our second speakers, Mr. Kumar Ankit. Mr. Kumar Ankit is a Vice President of PayTM from 2022 to now. He is also He was a management consultant in McKinsey & Company, 2022, from 2020 to 2022. He holds Master of Public Administration from Harvard Kennedy School. He also holds MBA Postgraduate Diploma in Business Management, Marketing and Strategy at Jamshedpur, 2009 and 2011. And he also holds Bachelor of Engineering at Computer Science and Engineering at Jabalpur Engineering College from 2005 and 2009. Mr. Kumar, the stage is yours.
Thank you. Can we have the presentation?
Yes, it's up there, yeah.
Okay, thank you. First of all, thanks a lot to OJK for inviting us and kind of sharing a bit more about India and what we have done as part of Paytm. Really privileged to hear all the speakers in the morning session also now. So lots of learnings. What I'm here to kind of talk about is learnings from India and how that can potentially help further drive financial inclusion in Indonesia. So this is a stat. India has become the world leader in digital payments, wherein out of 100 real-time transactions which happen across the world, close to 50% happen in India. I would like you to see the bottom right number. There has been 75% drop in cash transactions. So 4 years back, the share of cash was 71% at a POS point in merchants. It has now dropped to 18%. So that is the transformation which India has taken place. And that has been built on a lot of investments by government on the public infrastructure side of things. So right from the digital ID, which is Aadhaar, to setting up the Universal Bank Account campaign, to Digital India campaigns, and then setting up the real-time payment rails, which is called UPI, which really helped us propel payments in India. Like if you see like broad numbers, we're doing like 18 million transactions per year, which has now gone to 130 billion transactions. So that's the size and scale of growth which has happened in India. And a lot of this is A, very good infrastructure which has been set up by the government. B, it's also like companies like us who have continued to innovate and offer good services to customer. And the third is also investments in government. So like UPI, like payments in India comes at 0 MDR. Like say for example, like Qris in Indonesia comes at like 0.7% MDR. So like small merchants have to pay like 0.7% MDR in Indonesia, but in India, merchants don't pay anything. So you can now build models and build business models wherein you have 0% MDR. So how do you build those things? Some of the things I'll talk about. And how do we kind of take those learnings to really further enhance financial inclusion and digital payments in Indonesia? Just to give you a brief sense of Paytm, the size and scale, so we operate both in India and Japan as two key markets. In India, we have close to 100 million monthly transacting users on our app. We serve more than 40 million merchants, provide them payment solutions. But then we also use our distribution, the data science, insights, and technology to then offer various distribution of financial services, ranging from credit to insurance to stock to mutual fund, and we hold licenses across all of this in India. So we are the largest payment player in India, we're the largest digital bank in India, we're the largest BNPL player in India. So a lot of things has been built grounds up. We are now a 25-year-old company in India. Similarly, we got great success of building this in Japan, wherein we built the technology, wherein now PayPay is again the largest payment player in Japan, has close to 64 million users, 70% market share. We kind of build it grounds up from India. And again, the learning was there. Try and make MDR 0. When you make MDR 0, small merchants feel that when I pay you 100 rupiah, I get 100 rupiah. I don't have to pay 1 rupiah, 2 rupiah for MDR, and that is the key success of how do you build a great financial inclusion story. And the other thing which also are really proud, that we want to believe in the philosophy of Gotong Royong. So we work with partners. So like India, we work with all the major banks, all the major NBFCs. So it's not about trying to take market share. It's about expanding the market and growing together in the geography. Now I'll talk about switch gears to Indonesia. So this, everyone will be knowing, very high population, very strong merchant base. E-wallet, consumer side things have really grown up. So like imagine like every second Indonesian is already using an e-wallet player. but the share of cash remains very high. As high as 40% cash is still in the economy when you're doing any transaction. While the government has set up, again, great infrastructure, both on QRIS side as BI Fast side, to actually create the real-time payments network. But I think what is lacking is sometimes how do you kind of further democratize this? How do you make sure small merchants don't have to pay a MDR, they don't have to pay a high rental for the devices, and for them, cash is equal to digital. When you really make cash is equal to digital, then that real expansion and revolution happens. The other thing is about the vision, it's taken from the document, is support the national digital economy, drive inclusive finance, support the banking industry, wherein the digitization is the key. So when I talk to OJK, when I talk to people, there are so many rural banks, but they don't have the digital infrastructure to really offer services. So how do we kind of bring in technology to make all of the banks become digital? And it's not just Java Bank becoming digital, it's what many more banks in Indonesia becoming digital and offering services, and kind of bringing the technology home to them. The third thing is safeguarding the interlinkage. We talked about that, how when you work with ecosystems, our friend Kareem talked about that you need that strong interaction, but also you need to manage risk with them. And then we have to kind of manage between risk protection and also cross-border risk kind of increasing. Just to give you a sense of Indonesia, it's a very large market on the payment side of things, more than $600 billion of market, but like close to 40% is cash. So you can see that large market, but still a lot of room to further digitization in the economy. And I'll switch gears now from payments to banking and credit. Again, it's large population, but close to 100 million population don't have access to formal financial services. They're underbanked. And then the challenge is large banks are not able to serve rural communities. Rural banks are not able to serve rural communities because they don't have the technology to do that. Similarly, on the credit side of things, credit to GDP ratio is 31% in Indonesia. If you talk about your neighbors in Philippines, that is like 48%. In Malaysia and Singapore, much more higher. So that access to credit is also a challenge for MSMEs. And what we've seen that there has been predatory P2P lending has come up in Indonesia, but the small merchants are not able to get credit because traditional financial institutions shy away from giving credit to them because they don't have mortgage and assets. So how do you kind of build a platform where you can reduce the cost of banking services, build the network of banking correspondents to offer banking to remote geographies, and kind of use technology to further drive financial inclusion? So some of the key challenges on the merchant payment side. So we know about fraud. We talked about unaffordability. I talked about the high cost of MDR, the high cost of rentals. We talked about the infrastructure issues. Many places still in Indonesia suffer from inadequate internet. So that's why real-time payments are not able to scale up. General knowledge and literacy is also a challenge. On the banking sector side of things, there's low trust. Again, unaffordable. Many banks ask you to have a minimum deposit, while in India you have zero deposit savings account for every Indian, which kind of makes it banking very, very seamless that I don't have to hold an X balance. Banks will not deduct X fees for giving you banking services, for card services, all of that. So how do you make it universal is first make it low cost. And then the issues is in terms of access to loans. Unsecured loans are not easily available to merchants. In India, the government launched credit guarantee schemes for small merchants. So banks are now willing to offer them because the government is also pecking on them. And we use alternate data. Our friend Janet talked about from AND, the learnings of how to kind of use alternate data to do underwriting and credit scoring as well. Fraud and chargeback, again, huge issues because as digital payments evolve, we saw in the morning, our friend from Monash University talked about like fraud has really grown up and how do you kind of manage increased registration but also arresting fraud. We talked about yesterday, this gambling apps have really grown up in Indonesia. How do you solve that? Those are challenges we should be mindful of. And that's why we need like new age business models wherein we are able to acquire customers and merchants on the payment use case. So that's the Paytm's business model. So we don't make money when you're acquiring customers on the payment use case. Both payments for consumers is free, payments for merchant is free. But we are able to cross-sell them by understanding data, insights, and distribution to offer them both financial services and commerce services. And that's why we are able to monetize. But payments, which is universal, is everything free for everyone. And then we innovate. We talked about UPI, but Paytm's QR innovation was happening even before UPI was there. So we're the first in India to innovate on QR, first in India to bring in Soundbox. Soundbox is also great innovation because once you make a payment on a QR, people were showing fake screens that a payment has been made. Merchant was not receiving an SMS, merchant was not receiving a notification, so we were not able to verify the payment has been made. So that's why we introduced Soundbox. We get an instant sound notification. So that's how you're able to reduce frauds. Similarly, on the lending side of things, we introduced something called an EDI, which is equated daily installment. So if a merchant is, say, accepting 1 million rupiah every day, we say that, okay, I'll underwrite your loan, and you just have to pay 1,000 rupiah every day. That's how we're able to kind of make it more affordable, but also ensuring that we are able to manage risk because we are able to underwrite their payment receivables. And the second thing which is also interesting, in many geographies I go around, there's either you have QR on the one hand and you have a POS device, but there's nothing in between. So even if I go and see places in Jakarta or in broader Indonesia, you have QRIS, but on the other hand, you have a POS terminal. But you don't have anything in between because QRIS is obviously universal, but in Indonesia, even QRIS is, you pay like 0.8%, 0.7% as MDR. But on the other hand, EDC is like the POS device, you pay like $20, $30 a month. But you don't have solutions which are customized for various other category of merchants. So that's why we need solutions which are customized for every tier of merchants. And this is what we have learning in India. Like you can't have just a QR and a POS terminal serving all merchant base. You need to constantly innovate, bring in new kind of solutions, and ensure you're able to serve merchants to serve their needs and not just bring a plain vanilla solution. So with that, we work with more than 40 million merchants, process close to $20 billion of GMV, have more than 40% market share in India. The other thing which is very critical, we also talked in the morning session, in terms of how to reduce fraud. And fraud occurs at various levels. So there is social engineering fraud. A friend again from Monash University, because of digital adoption, people are able to fake your identity and kind of create personas and able to kind of fraud you. So how do you manage social engineering frauds? In this, we again need to work a lot with government. So like I'll give you an example, in India, we worked with the telecom operators. And there is a regulatory body called TRAI, which kind of manages all the telecom operators. We ensured that every telecom operator will not send any phishing message, will not send any SMS spoofing, and that was mandated by government. So that's how we are able to now reduce. There's no SMS spoofing anymore in India. There's no SMS phishing anymore in India. And that's why we're able to work across regulators to kind of create the next transformation on digital payments. Similarly, we have built our own AI-led fraud engine, wherein we evaluate close to 11 billion rules, process more than 150 million transactions, operate at a latency of less than 50 milliseconds. And the last thing is merchant onboarding is very critical. We talked about gambling, I'll give an example. So in India, P2P lending and gambling had become a huge issue. Hundreds of people had done suicide because they were getting interest at like 2%, 3%. So what we did along with the government is that we ensured that if you're not an authorized lending app, if you're not an authorized gambling app, no payment gateway will provide you payment services. And if you're not able to provide payment services, then these lending apps, these gambling apps will not be able to provide any kind of payment solution. And then what was happening, we stopped saying no merchant which has lending, no merchant which has gambling will be allowed to take payment gateway. What people are doing, they were saying, I'm an education merchant. So they start to get payment gateway that I provide merchant as education services. And tomorrow they used to change their website and offer gambling services. So that's why you continuously need innovation, that you need website monitoring, you need web scrolling, you need URL binding, so that if you are giving a PG link to a merchant for one specific use case, he is not able to illegitimately use that for other use cases. So that's why you need continuous monitoring of merchants and then review cases which are flagged by the engine. Then we are talking about switching gears to lending. So I'm kind of covering topics across the board. So we talked about fraud. Now we'll talk about like how are we able to use alternate data to do SME financing. And our friend Janet talked about that in the morning. But we are able to use multiple data parameters in our ecosystem. So we use the merchant GMV, which is payment we are receiving from the merchant. But merchant is also a consumer. So when merchant behaves as a consumer, we are able to see what kind of transactions he's doing as a consumer, what kind of electricity bill he's paying. That's the proxy for us to understand what kind of house he lives in, what's the kind of income profile he has. And then similarly, we use geographic data, we use the profile data, we use device details. If you're using an iOS mobile, you probably have better income estimation. If you're using an Android version, which is upgraded, then you would also know. So we use various other data. We also use bureau. So these 1, 2, 3, 4, 5 helps us to underwriting. And then we also understand, because it's easy to give loans, it's difficult to collect. So then we also manage collections in-house. So that's why we're able to understand the repayment behavior. We have built a strategy builder, which helps us understand that, okay, if you have to collect the loans, then what's the best channel for you to engage which customer type? What's the kind of content you need to say? What's the type of messaging you should say? All of those is something we are able to kind of do that. And then I'll talk about digital bank, and this is something would be useful for OJK, especially with rural banks. You need to have like strong internal controls. So obviously KYC, AML is predominant. Set up lean operations, which can be done when you're able to build a digital bank. Should be adaptable to regulation. Should have very high customer trust. Should be able to personalize services to your customer bases. And then what we really proud ourselves is kind of building in-house technologies. So all of the technology which we have used in our banking platform is kind of built in-house, wherein we have the best-in-class mobile application, authentication, identity access management helps us kind of ensure that no bad actors are coming to the system. Then the middleware engine, the digital onboarding, the data warehouse, the fraud management, and then connections with the payment system and the core banking. This kind of helps us kind of build a very strong technology platform to offer banking in India. So we are the largest digital bank in India. So yeah, that's it. I had the last thing I'll say is that it's good to have technology and it's good to be very strong on digital, but you also need fleet on street. You need people on the street to actually work with small merchants. You need people on the street to go to the last mile. So this is where we strongly believe that digital alone can't serve everything. You need the collaboration between digital and last mile reach to actually offer both payments and banking services. So if you see, we service like fruit vendors to grocery stores, to distributor, to supermarkets, to auto rickshaws, to cab drivers, to quick commerce. So we need that fleet on street presence also to offer solutions to small merchants. And I think a good mix of both digital technology first, but also having fleet on street really helps drive financial inclusion. Yeah, that's it. Thank you so much for the platform and the opportunity, and look forward.
Thank you. Thank you, Mr. Kumar. Mr. Kumar has explained to us payment and financial services in India, as well as key challenges and merchant payment in Indonesia. He also touched upon how to support cashless society in Indonesia, as well as risk management and fraud control. All right, so far so good. We have both speakers speaking under 25 minutes. Now we move on to our third speaker, Mr. Dong Xu. Mr. Dong Xu is a co-founder of Advanced Intelligence Group and CEO of Advanced AI. He was also partner and VP of engineering in WeCash. He has double master from Penn State University and Tsinghua University. Mr. Dong Xu, the stage is yours.
Good afternoon. My name is Dong. I feel very honored to stand on this desk to share my vision about AI and especially its application in the financial industry. So without further ado, let me start. So this is my agenda. So I will briefly talk about who we are, why we are today, what is our mission and vision. And then I will cover about some core basics of AI. And then I'll talk about AI benefits in the financial industry. And then lastly, cover about challenges and how can we solve these challenges by building some capacities for the AI. So our story literally started 8 years ago. So this is our 8th year. So time really flies. So this picture was taken in the Gojek office. At that time, Gojek, was still Gojek. So So the reason being in the Gojek office that time was to really help Gojek to investigate the fraud cases caused by their drivers. And it turns out like we developed some AI algorithms to catch those fraudsters. And that actually laid the foundation for the whole business for advanced AI, which is actually doing the credit underwriting, the fraud detection, and the financial services as well, in the past 8 years. So with that, we actually got quite big support from the top PE firms in the world. For example, SoftBank Vision Fund and Warburg Pincus, those are the regional ones, and also North Star coming from Indonesia. We also got quite strong support from Singapore sovereign funds, for example, GIC and Temasek. Raised a bunch of capitals to really fuel the growth of the business in the past 8 years. Actually, we actually grow also quite significantly in the pipeline of the partnerships. For example, for the regional ones, we have Standard Chartered Bank from Singapore and HSBC from Hong Kong to fuel us with the capital for regional coverage. While in Indonesia, we have our dear partner like Jago, for example, to partner with us on also the growth of the Krepinta and Atomi. And not to mention GoTo and other players, BTPM, for example. And together with all our partners, we have actually, in total, underscored more than like 80 million users with advanced AI credit scoring products, and also onboarded more than 40 million end users for both Atomi and Krepinta for the lending business and the buy now, pay later business. And together, we actually distributed more than $2.5 billion in the past year. So in a nutshell, Advanced AI, or the whole group, is actually doing two things. One is on the B2B side, which is actually what we call the credit overall. On the credit side, we have the credit bureau here, we have credit underwriting with autonomous data, and then together with the digital financial services. And underlying is actually on the AI. So, and with that, actually, we got this first place award from Singapore MS last year, and we were quite kind of honored being as the Singapore headquartered company, but with a regional expanse, with a regional coverage. Okay, so let's talk about AI. So I think this is today, right? I mean, it's a buzzword, but what exactly we're talking about when we talk about AI, right? I think I have some my personal views on this topic. So generally speaking, there are two categories. One is called predictive AI. One is called generative AI. Today, I think the most heatedly debated one is actually on the latter, on the generative AI. So what's the difference between these two? The predictive AI is actually what we call the traditional AI, right? And this AI has been in the industry for more than 30 plus years. I believe every bank, every fintech companies, actually they are using AI to build their credit scoring models, doing fraud detection, and many other things. So basically, the idea is try to use the existing data to kind of learn and predict the future patterns, right? This is actually how I define this predictive AI. So for example, a typical application is more on the credit scoring or recommendation, or like, for example, insurance, for example, how do you price someone if you're going to really issue him an insurance, right? So those are the typical applications of this predictive AI. While for the Gen AI, the idea is coming literally from the popular app called ChatGPT, launched by OpenAI on November 2022. So that actually kicked off this whole wave of new AI, right? What do we call generative AI, powered by large language model. And today, actually, if you look at this, the news, right, this large language model can actually cover not only on the text basis, but also on the videos, on images, and even so-called a combined model, which covers every stuff. And it's evolving every day. Today, actually, I just read the Twitter post from Elon. So Elon actually posted a Twitter. It says like Grok, the latest version of the Grok large language model called Grok 3, kind of like cracked this Lehman hypothesis. And this is actually one of the most difficult questions, mathematical questions in the world. I don't know how true it is, but if it is true, then this is really the milestone of like so-called reaching a certain level of intelligence of of AI. And this Gen AI, of course, can be utilized to offer hyper-personalized applications at scale. So to put it in a nutshell, basically predictive AI is more focusing on solving problems based on existing data, while the Gen AI is actually using what we call the data that can be generated, for example, synthetic data, to train the model and to learn and predict something that we have not seen before. So this can be basically complementary to what the predictive AI has today. So how to combine these two types of AIs and how to apply them in the financial industry is something that can be heatedly debated. And I do see a lot of applications going on today combining both. All right, and then about these innovations, or what we call benefits of financial AI in financial services, I just want to give some real-world examples. So for example, the first one is about how to apply AI in the credit underwriting, right? Because we do have these kind of products in this market, and what we are doing today is to really try to onboard as many data sources as possible. Of course, these data sources must be legal and compliant, has end-user consent, but overall speaking, we are onboarding, for example, telco data and many other data sources, for example, e-commerce, device, and you name it. And of course, these kind of data sources, right? The purpose is try to really serve the underbanked population, because in Indonesia, there's like a quite big population don't have the bank card, and the reason being they don't have the credit record in the bureau. So how to analyze their credit underwriting and empower them to have access to the financial services is something that we are dedicated ourselves to working on. And this credit score developed by these underlying data sources can not only be doing the credit underwriting, but can also do the recommendation, right? It can also do the collection as well. So this alternative data-based credit scoring is something that I do believe it is pretty much like a complementary to what Bureau has today. That's actually the _1 application. And number 2 is, of course, how can we optimize the user onboarding workflow by applying, for example, OCR, liveness detection, motion detection, plus some government database check. This whole process, what we call eKYC. And this eKYC workflow can really speed up this onboarding process and at the same time kind of meet the regulatory requirement for doing the KYC based on OJK's requirements. So one of our customers, which is actually one of the largest e-commerce players in this country, kind of like automated this onboarding process by cutting 75% of the manpower. So they saved the 70% manpower just for using the KYC products. And also, of course, not only on saving the manpower, but also can also detect these fraud cases. For example, deepfake. And this is more on the fraud detection side. And also, this is one bank that we are using, we are working with, to deploy our fraud detection algorithm to their so-called transaction monitoring process. So how they did that? So the first step is to really, at least deploy the model first in the so-called mission-critical kind of transactions. For example, these cross-border transactions, and then, basically using supervised learning to what we call the label, the bad users, good users, and the model will pick up, and then with the more volume goes up, the model can be more scalable and cover more use cases. So the outcome is, with this AI, with this model deployed in their mission-critical kind of transactions, the overall fraud rate being cut by 40%. So this is amazing. Lastly, is about the one use case that has been used by Bank of America. It's called Erica. So basically, Erica is using the chatbot to personalize the app. The app can be interacting with end users smoothly. It's like an agent, a small agent. But I was given like 20 minutes. Probably I have to skip this video. In case that you are interested, you can Google this American Erica online. All right, so the above are the opportunities for AI, very exciting, right? But of course, we have challenges. So So if we don't overcome these challenges, AI will do a lot of harmful things, to society. So what are these challenges? So first of all, I just read today about this golden Indonesia 2044-5 launched by ex-president President Jokowi. So I read through this vision, great vision, right? And the next 20 years. And there are some challenges to address. So first of all is on the financial inclusion. As we know, like more than 50% of the adult population of Indonesia, which is around like 180 million, they actually don't have the bank account, right? Bank account. So can we empower them? Can we grow them to be bank population? So this comes with all the technologies I just mentioned before, but of course, we need more more efforts to contribute to financial inclusion. And then on the economic transformation side, Indonesia wants to become the world's top 5 economy by GDP. And that has to be coming from the development of the high-tech industry, including AI, of course. And then lastly, right, in order to develop this high-tech industry, you have to have the human capital. And we have to invest on the skilled, educated workforce, really by investing in education, all this healthcare and the latest, and the AI tech. And based on the study, basically Indonesia needs like 9 million digital talents, and how to grow them, right? So first of all, I think we actually want to define some policies that can attract worldwide AI talents. As you know, OpenAI has like this 1,000 plus world-famous, top-notch AI researchers. However, Singapore comparatively has basically also much lesser AI talents. But as a country, Singapore is trying very hard, right, to define this national AI strategy, for example, to define all these kind of grants to attract those talents from everywhere to be in Singapore. So I think Indonesia probably want to follow similar kind of experiences as Singapore did, And then, of course, we're going to grow talents, local talents as well, by kind of working with industry players like OJK, Jago, for example. They have a lot of real-world problems. So can we kind of let our PhDs in, for example, University of Indonesia, to be engaged and in these real-world problems and see whether we can develop our AI capabilities by working with these industry players, and some exchange programs, of course, with the other countries. And this is about deepfake. Again, due to time, I want to play this full video, but the idea is, can we also be mindful about this deepfake thing, right? I think this thing has been real for a while, especially with this Gen AI. People can create images, videos, text very easily, right? And it's even like today, right? It's even difficult to tell if the picture is being generated by AI or by human. And can we detect that? And this is an open question. I think the industry has been working really hard, to develop some algos to fight against AI. AI fight against AI. But who will win, right? It's kind of like a cat and mouse game. So we are also dedicated ourselves to work on that problem. Sorry. And let's see, with all these challenges, with all these benefits of AI, without a proper governance, probably like, a lot of applications cannot work for the society. So we need a proper governance framework defined. So for example, in Singapore, we have this AI ethics. It's called a FEED program. The key 4 keywords means fairness, ethics, accountability, and transparency. So these keywords are pretty critical for Singapore government to make sure the AI models that are going to be deployed in the financial industry can pass these 4 keywords. And they even launched this toolkit. It's called AI Verify. Basically, this toolkit is an open source toolkit. And for every company who actually wants to work with the banks, they can basically test their models with this toolkit and see whether they meet these basic principles of the FEED. And of course, like like UK, US, they also have this AI Enact, AI Act, basically they are based on the risk-based model. So the high risk, of course, the government wants to enforce the most strict policies against these models, while the less strict one, less risky one, they're going to put less strict policies. So they are risk-based model. So different jurisdictions, they will adopt different kind of government policies. In order to build AI as a whole, we basically need 3 things. One is data, one is compute, one is also the algorithm, right? But above that, we need like a super good talent pool and also innovative kind of ecosystem to grow the AI industry. And of course, we need some research labs as well, as a leading power to grow this AI. And on the right side is more on the governance, on the security, on the capability side. So basically, these 2 sides need to work one by one. Otherwise, AI will create some harmful to society. So that comes to the end of my presentation. Thank you.
Thank you.
Yeah.
Thank you, Mr. Dong. I think Mr. Dong have put a lot of information in a very short presentation. Too bad we don't get to see the video of Barack Obama in AI. All right, Mr. Dong talked about core AI fundamental, which is predictive and generative. Mr. Dong also talked about how AI helps financial services in the area of credit underwriting, how to increase operational efficiency and also enhance risk assessment. Mr. Dong also talked about AI challenges in Indonesia, which is very interesting. He talks about financial inclusion, economic transformation, also human capital. Last 2 topics about AI ethic, and the last one is about strengthening AI infrastructures. Thank you very much. Let's move on to our 4th speakers. For the 4th speakers, we have Pak Dimitri Mahayana. Pak Dimitri Mahayana is a lecturer at School of Engineering and Informatics, Institut Teknologi Bandung. He is also a subject matter expert in sharing vision Indonesia. Pak Mahayana holds doctoral degree in electrical engineering, Institut Teknologi Bandung. He has master degree of engineering in Waseda University, Tokyo, and also he had a Bachelor of Engineering from Institut Teknologi Bandung. Pak Dimitri, the stage is yours.
Thank you very much. Good afternoon, ladies and gentlemen. There is a recent survey from Finbold and Fidelity Investment that at about 60% people globally has not understand yet about digital asset and cryptocurrency, and 32% of them is stating that because of that they are hesitating to invest in cryptocurrency. But it is very interesting that 78%, according to CFP board, 78% of US and Europe investors, they are still see that digital asset is their future, very great potentiality. These numbers underline that the trust and awareness, these 2 factors are really are very important to encourage the development of digital asset in Indonesia. Despite cycles of speculative search and major drawdowns, the cryptocurrency market cap has seen impressive growth, very impressive growth. Recently, Bitcoin's price hit an all-time high after US election, climbing over, I calculate, at about 100 million times from its initial valuation in October 2009. when the Bitcoin was invented by Satoshi Nakamoto. This long-term growth reflects both the increasing interest in an adoption of crypto asset despite the inherent volatility in the market. Indonesia also, Indonesian market has seen a notable surge in the adoption of cryptocurrencies. By September this year, the number of registered investors reached at about 22 million people. And Indonesia ranks among the top 3 countries globally for crypto adoption this year. So we are number 3 in the world. And for other digital asset services like DeFi, we are the first in the world, first rank. I mean Indonesia. And according to Sharing Vision survey, Sharing Vision is my company, the survey was held on at about 2 years ago. 10% of our respondents own cryptocurrency coins, tokens, and wallets. If the netizen number is at about 210 million netizen in Indonesia, it means that the number of digital asset investors at that time in Indonesia is at about 21 million people, 21 million investors. And according to our survey, 32% have utilized the crypto as a transaction tools. This is a very interesting fact that Gen Z, they are very active in transaction and they use crypto as tool of transaction for many things. This data indicates that the cryptocurrency is becoming an integral part of Indonesia's economic landscape. The government is anticipated to implement more rigorous regulation and uphold legal standards in these sectors. It should be noted that this growth is mainly driven by millennials and Gen Z. They are dominant investors in cryptocurrencies in Indonesia. I think this is due to the increasing financial awareness among the younger generations. I am a lecturer in Bandung Institute of Technology. When lecturing, sometimes I ask my students, majority of them are investing in crypto. Very young, yeah? 20 years old, 21 years old, very young, but they are very optimistic about this kind of investments. The NFT market in Indonesia is quite volatile, but actually the user growth is expected to continue rising. We know the Ghazali every day, very famous, was very famous. Ghazali is, I think, the first NFT market in Indonesia that was very famous, and also Syahrini, Denny J.A., etc. Furthermore, Bank Indonesia now is developing central bank digital currency, CBDC. We call it the digital rupiah. as a part of the 5 key initiatives outlined in the BSPI, Blueprint Sistem Pembayaran Indonesia 2030. If we see around the world, there are only 3 countries who are successful in CBDC. But the digital rupiah is anticipated to positively impact the economy by driving increased investment and fostering overall economic growth. So if we are talking about digital asset, which is my session is about digital asset, actually the definition of digital asset since the invention of Bitcoin and blockchain technology has been changed. Today, virtually any digital thing can be tokenized. So we have digital money, tokens, we have digital rupiah, central bank digital currencies, stable coins, cryptocurrency, security tokens, utility and commodity tokens, NFT, etc. All of them are digital assets. It is interesting to see that there is a tug of war between high awareness and difficulty in truly trusting, since digital assets are first volatile and then quite vulnerable in terms of fraud and cybersecurity. The appetite to invest in crypto, especially in the younger generation, is very big. And also the influence, the endorsement of social influencers, very strong, globally and also in Indonesia. So the idols of my students is Elon Musk. So 2 years ago, many of my students and also my children also, yeah, they did everything for crypto. Every of them have mining computer, so you see that they should pay a lot of money for their power, and they have some problems in their family because of actually the computer for mining is very hot. And we heard also in some countries that mining has been prohibited because it needs a lot of electrical power and so on. But the beginning of last year, actually the crypto is done, and also at that time Elon Musk is not the richest man in the world because he lost a lot of his wealth. So the endorsement and the influence of social influencer actually is very strong in this case. So the slide after that is about the dark side of crypto and digital asset. Something that makes it is very difficult for us to build trust and awareness. The rapid growth of cryptocurrency market has also attracted many hackers, many fraudsters. Has resulted a surge in scams costing investors millions of dollars and eroding trust in the digital asset ecosystem. There are some common cryptocurrency fraud like Bitcoin investment scam like Ponzi, ransomware and extortion scams. In the case of the dawn of Pusat Data Nasional, at about more than 100 Indonesia institutions down, and the solution is somebody, I heard, send some crypto at about $8 million to the fraudsters. And the third scam is rag pull scams. It's actually very dangerous. Scammers pump up new projects, new crypto projects. Usually rag pull scams is for a new crypto project, a new digital asset project. And then abruptly drain funds, bring the funds, and disappear. So, for example, OneCoin, founded in Bulgaria, stands as the largest cryptocurrency Ponzi scam and also rug pull scam to date, amassing at about $5 billion. Another source record that at about $15 billion, not only 5. The founder, Ruja Ignatova, actually is a PhD. She has a PhD degree. Last reported that she boarded a flight to Athens and has not been seen since. There is a news that she has been murdered by the criminals, Bulgarian organized crime. Not only in Bulgaria, Turkey also, Todex, $2 billion. Turkish exchange disappeared 4 years after founded. Users had trouble accessing their accounts, and many were unable to withdraw their funds. Faruk Fatih Ozer abruptly fled Turkey, taking an estimated $2 billion worth of cryptocurrency with him, leaving at about 4,000 users with nothing. And Ozer was sentenced to at about 12,000 years and 10 months in prison. Yeah, 12,000 years. This is also one of the largest scams and fraud by Sam Bankman-Fried, Future Exchange. As reported, Bankman-Fried used the FTX customer deposits to fund high-risk trading activities. Actually, this was violating the fundamental principle of segregation of customer funds. Very basic in traditional financial industry. In traditional financial industry, like traditional commercial bank, that the fund of the customer should be used very properly, very prudently. Recently, at about 2 months ago, I myself, because I am the customer of Indodax. So, has suffered a devastating cyber attack. This is real cyber attack for one of the largest crypto exchange in Indonesia. resulting in the loss of approximately 18.2 million US dollar in digital asset. But the CEO, Pak Oscar Darmawan, is really a good man. They pay for everybody. No customer loss at all. I didn't lose also my money. But the story of the cyber attack is actually an Indonesian engineer took freelance job quickly to set up a server, and using a company laptop that he thought was immune to malware, the engineer unknowingly downloaded a malicious application as instructed. So it is very dangerous to click also in our mobile phone. It is very dangerous to click a marriage invitation in our mobile phone if the form is APK or something downloaded. And we should be very, very careful. And I think it is the obligation of all of us and also OJK to increase the awareness of the people about this. And also the deepfake technology is progressing rapidly. There is some people has been cheated by the deepfake of Elon Musk, but the case which is the third case and the rightest one, it is the most interesting one, that an employee in Hong Kong, the chief financial officer called him to transfer 25 million US dollar. And the employee has thought that it may be a deepfake. But after that, the fraudster make a video conference, make online meeting, and the employee saw all of his friends, complete. He saw all of his friends, so he believed that it is real, and he transferred 25 million US dollar. And it is actually a fraud, and it was a deepfake. We can imagine how come. So we cannot differentiate between while it is real or fake. And according to the latest research, the deepfake detection performance is still very low. Show that the residual risk of deepfake, even we use the recent detection tool of deepfake, is still very large. In addition to the potential misuse of deepfake technology, there are several areas where AI could be used for malicious purpose, including cyber attacks, privacy violation, and the manipulation of public opinion. It is therefore essential to monitor this closely. So the capability of LLM now, so we can use the LLM to make to do automatically hacking and rewrite the code by using LLM capability to write software code. According to Sundar Pichai, 25% of code in Google now is written by AI. So if it is used for cyber attacks, it will be very, very dangerous. Okay, I see this. There are 3 other risk factors which weaken trust in digital asset. First is high anonymity. Second is very easy access and high negotiation. The third is real-time transaction and easy withdrawals. So this make, if there are cyber attacks, the fraudster can transfer the money very fast, and it is not held by Bank Indonesia of OJK, so the money will disappear very fastly, as fast as possible. Our survey show that nearly more than 90% Indonesian people or Indonesian netizen reported having received fraudulent from SMS and WhatsApp. And at about 20% of them having fallen victim to such scams. 35% reported a loss of money. So this fact is very important to us. Therefore, we have some recommendation. First is public awareness program that the government needs to collaborate with various stakeholders in digital asset ecosystem to raise public awareness of the risk and benefit associated with digital asset. To support this goal, one of initiatives is integrating investment education into school curricula. Not only AI from elementary school. According to Professor Abdul Muti from elementary school, they will teach AI. I think investment is also important in junior high school. And also engaging communities and influencers. The second recommendation is strengthening regulation and alignment, at least equivalent to standard of traditional financial institution. That the players in digital assets should be regulated at least in the same level as commercial banks, like OJK 11 and also digital resiliency guidance, etc. And the third recommendation, it is crucial to reinforce security key standards such as NIST, ISO 27000, ISO for AI 42000, and disaster recovery standard like ISO 23000 to guarantee the security, resiliency, and continuity of digital asset services operation in the event of potential disruption to foster the trust of the people toward digital asset. Thank you. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Pak Dimitri. Pak Dimitri has mentioned about current development of cryptocurrency in Indonesia. He also explained to us that cryptocurrency has become an integral part of Indonesian economy, and also about millennials and Gen Z, who are the major investors of cryptocurrency in Indonesia. The last part of his presentation, he talks about downside of cryptocurrency, including cyber attacks and fraud, which he is also a victim of it. Well, unfortunately, he then lost his money. A recommendation, he talks about public awareness, strengthening regulation, also cyber security. Thank you very much. We move on with the last presentation today. We have Ms. Jae Young Han, who is the head of Southern Gyeonggi Province of Regional Division, Korea Inclusive Finance Agency. She was also the head of Financial Consumer Protection Department in Korea Inclusive Finance Agency. Ms. J holds a Master of MBA from University of Wisconsin-Madison. Ms. J, the floor is yours.
Yeah, can I sit? Actually, I arrived last night and found out Bali is the best place with great nature and great people with beautiful smile and the intellectual talents. But I don't see your smiles now.
You're not Bali people.
Yeah, I'm so sorry that I arrived last night and I'm leaving tonight. But definitely I come back for my vacation. It's a beautiful place. I'm privileged to introduce Kim Fa's experience with designing innovative finance products and services to improve financial inclusion in Korea. I briefly talk about financial challenges and microfinance status in Korea. Also, I want to share with you Kim Fa's integrated support and its new platform, enhancing social economic welfare. In Korea, almost every others have access to former savings and credit, thanks to great advance of technology and innovation. When the foreign currency crisis of 1997 and the global financial crisis of 2008 hit the nation, Korea's economy quickly bounced back. But the poor were plunged furthermore into poverty. It is more becoming unequal than it used to be. Access to basic financial services. In today's world, while many financial companies offer various financial products and services for individuals who need financial support, the lack of accessibility of these services is a major issue. Scoring criteria of traditional banking. In traditional banking, for instance, score determines who is eligible for financial support. The issue is the system, however, is that many hardworking people, despite best effort, can easily fall just short of that scoring criteria. As a result, be ineligible to receive the support they need. Credit loans for low credit individuals. In Korea, an individual's credit scores are evaluated by credit rating agencies. The credit scores ranging from 1 to 1,000 points are widely used by financial institutions when assessing loan applications. It ranks the level of risk for loan applicants. The higher your credit score is, the better your credit status is. As you can see in this graph, about 1/5 of the other population, which is about bottom 20%, around 8 million people are financially distressed with low credit score. They are not eligible for conventional bank loans due to their low credit scores. Here is a snapshot of the credit loans for low credit individuals. The total credit loan supply grew by 10.6% year over year from January to September 2024. For those in the bottom 20% of credit scores, that growth was only 3.5%. Loans for low credit individuals account for just 23.6% of the total credit loan supply, whereas only 7.6% of credit loans for low credit individuals come from traditional banks. Essentially, the people that need financial support the most are not receiving it. And if they do, that rarely comes from bank. Thus, this is where KINFA's work becomes crucial. I think due to the limitation, I'll skip this ones. Yeah. KINFA is a public institution dedicated to meeting the financial needs of those who are excluded from the mainstream financial system. KINFA was launched in September 2016 under the Act of Support for Microfinance. KINFA is a public institution dedicated meeting the financial needs, integrated elected institution microfinance program to serve as a comprehensive control tower of microfinance in Korea. By supporting microfinance, KINFA aims to improve the stability of ordinary lives and aid the balanced development of economy and society. As an agency under the Financial Services Commission in Korea, we focus on three key things. First, financial support. We provide financial support in the form of loans and guarantees to people who are not able to get help from financial institutions. KINFA has developed tailored products for the underserved people and opened up banking benefits for them through close partnership with financial institutions by providing credit guarantee programs. And for young people just starting out, specifically those with little or no credit history, we are not offering low interest loans. We are helping them build assets and financial stability for their future. Expanding microfinance service is a growing field. Let's look at this graph. Some numbers that illustrate our financial support. We are more than doubled our microlending supplies from 3.5 trillion won in 2017 to 7.2 trillion won in 2023. Next, we focus on empowering individuals through financial education and support. For many low-income, low-credit individuals and their families, understanding how to manage their finances, control debt, and plan for the future can be overwhelming. Going beyond financial aid, KINFA provides a wide range of the consultations to help improve credit and lower the financial cost. Also, we offer personal credit and debt management consultations. And in particular, small business owners who use micro-lending from KINFA can get free business consulting services. Lastly, protecting dormant depositors with dormant accounts. It's very interesting. We provide services to help people find and claim their dormant accounts that unpaid insurance payouts. Dormant accounts are the deposits of the bank account that have been inactive more than 5 years. Under the agreement between financial institutions and KINFA, dormant deposits are contributed to KINFA after the right of claim of dormant deposits expire. We are dedicated to helping the original holders search for and claim unclaimed savings and insurance payouts. In particular, we aim to assist those who may not be aware of the funds or insurance they are entitled to. KINFA operates microfinance support centers, delivering in-person comprehensive consultations that help low-income households and over-indebted individuals in find the tailored financial solutions they need. For those who need more support, we connect them with adequate methods such as government welfare programs and debt adjustment services using the system at the microfinance support centers. Korea has a range of welfare programs at the national and local level, but getting the right support to the right people at the right time has been a challenge. Sometimes we come across a heartbreaking story on the news. Let me share one with you today. There was a loving family living a peaceful life until the family suddenly fell ill and was hospitalized. His 2 daughters, doing their best to support his medical bills, were unable to find jobs because their credit card went unpaid and their credit scores plummeted. The mother worked tirelessly at the restaurant for 10 long years to keep their family afloat. The father eventually passed away. The mother, while working so hard, suffered an accident, injuring her arm. Unable to work anymore, the family was left in a complete despair. They made a heartbreaking decision to end their lives together. But before they did, they left a note to their landlord. To our dear landlord, we are deeply sorry. Here is the last payment for the rent and the utilities. We are truly sorry. Can you imagine? They are thinking of others, even in their darkest hour, trying not to leave debts behind. This tragedy could have been prevented if they had known about the financial and social support system that available to them. Things could have turned out differently. Unfortunately, too often, people in need don't know where to turn or how to access to help they deserve, and the cost of that lack of awareness is far too high. So, KITNER partner with local governments, create this two-way network system that bridges the gap between financial assistance and welfare services. If our visitor needs welfare services, we connect them with local government welfare offices through the integrated network system. Likewise, if someone visits the local welfare office and needs financial support, they are directed back to the center. This year, we launched a new initiative, Financial and Employment Support Program, together with the Ministry of Employment and Labor. This initiative provides a one-stop solution for citizens who need both job placement and financial assistance. I skip. This year, we took another bold step. This June, KINFA launched the new platform, Microfinance Connect app. It's a non-face-to-face platform that allows users to access comprehensive support for finance, welfare, employment, and debt adjustment without having to step into a center in person. Let's see our Microfinance Connect, please. So I brought the video clip, but they need to switch into a video clip. Yeah. Let's explore what it can do for you. It offers a wide range of personalized solutions. Please log in to begin with Microfinance Connect. Ready to get started? Please agree to the terms and proceed with identity verification. Documents needed for the review process will be gathered. Through automated information gathering, smoother data collection is made. Next, input any additional information if necessary. Matching services to your needs. Internal review is in progress. Now it is searching for the ideal financial, employment, and welfare services that matches your profile. Review complete. It will display a customized results based on the individual's review process. Comprehensive searching to help relatively low score applicants search for employment, welfare, and debt adjustment services before considering financial products. Everything can be completed in one smooth flow. Once a guarantee agreement is signed, you can find a check loan eligibility with financial institutions. From guarantee insurance to loan eligibility check. For a customized guarantee for a healthy financial life, it guides you through tailored service based on unique situation. Lastly, manage all your applications in My Page. All financial products available next service altogether, Microfinance Connect. More specifically, Microfinance Connect application available and convenient. Microfinance ensures that products accessible to low credit, low income individuals are available right here. Previously, users have struggled to choose the right financial services for themselves due to limited information. Despite the variety of finance products on the market, many people don't know what's available and which product right for them. Now, Microfinance Connect users can now search for every available product, even the private policy-backed products apply for loans remotely from anywhere at any time. Secondly, it's simple and precise. From selection to loan application to approval, it's all streamlined in Microfinance Connect. No more scattered steps. With enhanced connections to financial institutions, everything can be completed one smooth flow. Get the information tailored to you. We are streamlined information collection by introducing a public My Data feature in the app. Before, if automated information gathering scraping failed during the application, users had to input data manually and submit additional documents such as income or employment details in person. With a smoother, reliable data collection system, information is captured instantly, reliably, with almost no error. Lastly, support doesn't stop after the loan. The application helps the users with credit maintenance and overdue management as well. It monitors for any changes, financial status, like shifts in credit scores or new delinquencies, and proactively offer financial education, credit counseling, and debt management advice when it's needed most. Let me share the impact we are already seeing with our new platform. It's early, but the results are clear. Over 518,000 people are using our comprehensive microfinance platform each month, finding the support they need right when they need it. When our finance employee connections making around 1,000 successful matches every month, while finance welfare connections are steadily growing. This isn't just a platform. It's a bridge that links the people what they need when they need it. It's tailored to unique circumstances, whether need financial help, job support, or welfare resources. We are here to continue improving, adding functions to meet the needs of everyone who relies on us. Supporting those in need is not easy. It takes time, resources, and a lot of patience. But think about the impact. When it helps someone move toward financial stability, when it helps improve their day-to-day life, we are not just making a small difference. We are transforming their future. KINFA is going beyond traditional financial support through financial inclusion. With more people facing financial hardship and debt issues, the role of our microfinance support centers and the Microfinance Connect platform is more essential than ever. As a comprehensive financial support agency in Korea, KINFA is committed to adapting to market changes and social need. We will continue innovating financial products and services for social economic welfare. Thank you for inviting me to be a part of this wonderful forum. I want to deliver sincere gratitude to OJK for providing this great event where I'm share valuable insights and practice of financial innovations. Thank you.
Thank you. Thank you, Ms. J. Ms. J mentions about financial challenges in Korea, such as accessing basic financial services, about scoring criteria for traditional banking, about credit loans for low credit individuals. Ms. J also explained to us about KINFA, or Korea Inclusive Finance Agency. I think it's a sign of how serious is this Korean government about financial inclusion, that they set up a separate agency for that. And also, Ms. J explained to us about microfinance Connect app, which is an app for the underserved, low-income, low-credit score individuals to get access to suitable financial products. Ladies and gentlemen, we have finished with each presentation from 5 different speakers. Honestly, I find the presentation very interesting, and it seems to be unfair to give you only 25 minutes to deliver a presentation. We should give you 1 hour, but like Anong said, we will finish after midnight. All right, now we entering the Q&A session. For this Q&A session, we have audience on the floor, offline audience. We also have online audience. I'll try to, get all the question answers. So what we try to do is to get 3 questions from the floor right now, and then after that we go back to the our online participants, if any. And then after that, we see if we have some more time, then we go back to the audience from the floor to have more questions coming in. All right, with that, I would like to invite all of you to ask questions to our speakers. Please raise your hand, state your name and your organization. Please, gentlemen on my right, left-hand side. And then after that, Pak Iman Shah. And okay, the third one, I'll give to Pak Hanif. Danu maybe later. Please.
All right. Hi, everyone. My name is Gasim. I'm handling product managers, designers, and researchers at Amar Bank. My question is how to drive financial innovation for better financial life sustainably. Because as we know, financial innovations requires cost, and it has a lot of costs, like the infrastructure costs, the talent cost. And one of the strategy typically is to reduce the switching cost of adopting new technologies. And when we reduce that, we need to move it to somewhere else, right? Whether it is on the company, and we need to create a revenue. So basically, what I want to know is how to do it sustainably. That's my question.
Thank you. Maybe we go on to the second question, Pak Iman.
Thank you, Pak Hari, for the opportunity to raise some questions for the speakers. Well, actually, I take note already a lot of questions, but I think at this moment, I think just 3 questions for the speakers. One I'm addressing to Pak Karim, second one to Pak Kumar, and the third one to Pak Dimitri Mahayana. So Pak Karim, on this, the issue of digital banks under current regulation is still required that digital bank is attached to the physical bank. there must be some head office that considered as a head office of digital bank. So to your view, when you compare the practice, I think, to the Korean's banking, indeed, they really introduced fully digital banks, right? So when we are moving towards the fully digital banks, can you see any type of risk that may be embedded into that type of practice when we are fully loosening the regulations that digital bank is not required anymore another physical bank as its head office? That's one question on risk for the fully digital bank in Indonesia. And I think that also related into how we are building the profile of, I think, the standard for bank writing and also the good governance, including as well risk management for the digital bank. I think it's, to some extent, maybe very much different from what we have right now under the current regulations, right, for the digital banks. And the second one for you, Pak Harim, is about this RegTech. You mentioned about RegTech. Any consideration that we can build RegTech on national basis, not bank-on-bank basis, because I think it's more efficient, right? So you have this standard that everybody can access to RegTech, and then can utilize the RegTech for the purpose of individual banks. Rather than every bank building their own RegTech, I think to some extent maybe you are overlooking some regulations when you are assessing kind of regulation that you need to do this assessment on the product or whatever you are offering to the public. That's my question to Pak Karim. For Pak Kumar, I think it's really interesting for the parameters that you put into this SME finance, the 8 parameters, just to have your view on that. Whether that all parameters you put as well as the credit scoring system, then you know about the credit worthiness of the potential debtor for the SME, because I think, in particular, the legacy technology, because I think it's quite, burdensome for some of these, these fintech to develop their own, or the SME, or even in our case, the rural bank, to develop their own credit scoring. But when we have these 8 parameters becoming standard, so it will be more easier for them to adopt that 8 parameters into their credit scoring systems, and it is very helpful for them to assess the credit worthiness of the SME. And the last one for Pak Dimitri, well, I think I got some impressions from colleagues from the international standard setters, questions about these cryptocurrencies practices. So because you are digging the crypto and you need some electricity, right, for that, some power. So in the case of Indonesia, I think that happened to that particular country when everybody doing these cryptocurrencies. So this country previously is surplus of power, but after everybody doing the cryptocurrencies, this country imported power from foreign countries. So with that type of risk, will happen into Indonesia when everybody move into cryptocurrencies investments. That's one question. And the second question is about this, that you mentioned about more rigorous regulation and legal standards, right, in your presentations. Are you also kind of like concerned with consumer protections? Because like doing the valuations of the crypto, something is very sophisticated, right? People that do this kind of transaction, to some extent maybe they are also being exposed into, in particular our supervisors, on the next stage will be questions about the consumer protections, whether there will be also consumer protections, like yourself as well, suffering because of losing some of your wealth because of this kind of transactions. So I think, I don't know whether you're also concerned about consumer protections in cryptocurrencies investments. So, Pak Hari, that's all my questions. Thank you. I return it to you. Thank you.
Terima kasih Pak Imansyah. Next, we have Pak Hanif, please.
Ya, terima kasih Pak Fahri. My name is Hanif. I'm now chairman of the Indonesia Investment Manager Association. Recently, there's some regulation issued by OJK. For example, now we can cooperate with gray, so-called gray. So I want to ask Pak Kumar ya, because you have the PayTM ya. I guess the PayTM like gray lah here in Indonesia. I've already engaged with one of the gray, the e-wallet ya. In the 6 months, the KYC through e-KYC already like 1 million people. Yeah. But now the homework is on the transaction because converting from the people or client who already register into the transaction is different thing. The problem is I know I learned from basic yeah. So we have to prepare like middleware or e-KYC via Dukcapil, transaction via S-Invest, Kase, but also the I think a lot of banks here about the custodian banks. The maximum of the custodian banks transaction for e-transaction like sub-redeem and switching. I spoke to several custodian banks, limited only 50,000 transactions per day. So we are not promoting education aggressively because of this, because we do not want a lot of transaction, like 1 million transaction, but custodian bank cannot proceed. Please give us the advice. Yeah. In India, I know a lot of progress there's. How can solve this kind of problem? Yeah. And also for Pak Dimitri, because now the PDP, pelindungan data pribadi already issued also, and with penalties, yeah, especially to asset management, we are very worried. I see that there's some certification in PDP, you mentioned. If we get that certification, is it already okay or not enough? Or what else we have to prepare? Yeah. Yeah. Thank you.
Thank you, Hanif. We have 3 questions or 3 individuals actually from the floor asking a number of questions to the speakers. The first one, I'm sorry I didn't get the name. Yes? Gatib. Gasim is asking about financial innovation, how to do it continuously. We've talked about challenges and opportunity about financial innovation, but the thing is how to do it continuously. I think this is more a general questions and anybody can jump in and contribute. Maybe we'll start. Anybody want to start? Pak Karim, silakan.
Yes. Yeah, I think they'll do. Thank you for the question, Maya.
Can we help with the microphone?
Yes, okay. I think it's okay now.
Okay.
So yeah, thank you for the question. Yes, and, how do it sustainably? This is actually everybody's secret, this is how actually can you do sustainably. But if you remember from our presentation from Bang Jago, right? When we when we started in the beginning, there were 3 main fundamentals that we always have to fulfill. Number 1 is balance sheet management. And then you have regulatory management, and then you have risk management. So definitely number 1 for balance sheet management. Therefore, it is very imperative that even the digital banks has to identify in the beginning where their revenue stream is coming from. For Bank Jago's case, even before we actually launched our digital app in April 2021, but we actually already launched our lending in 2022. Because we understand that definitely for banks, the revenue comes from lending, and therefore our lending engine has to start earlier. Now granted, since we do not have the Jago app at the time, how we do that, actually that is why we work very closely with partners, so partners can actually disburse loans and channel it actually to Jago. So that is how we actually did it, and if you see from the presentation as well, that is why we, after 6 months already can become profitable. Because if we do not get that traction upfront immediately, when we actually do the investment for the other, in this case for the Jago app, the cost will actually rise. And if we do not have a strong balance sheet at the time, it's going to be difficult. It's like kejar-kejaran gitu loh, Pak. So that's why part of the bank really has to focus on the building a strong balance sheet, and part of the focus has to building the new product and the digitization. Yeah. Hope it helps.
Any other, Ms. J? Please.
Yeah. It's good question to consider the cost as well as the benefits for the people in need. Financial innovation in product services is very important in this stage, but sometimes you can do it just for your organization. You need to collaborate with other organizations and see what's the benefit and what's the cost behind of it. For our case, we applied my data information free of charge. It's very useful information. Just connection with the government, the Ministry of Interior Safety, we could use that selected database, and it was just function to connect that information, and it was not that costly. It was just out there. So we saw the opportunity when my data in financial sector became available in 2022, and I think innovation occurs in just in your organization, not I mean. Elsewhere, you can find that you need to see the market trends that the customer that needs at most. So we made this innovation at last.
Maybe any more addition from?
Maybe I can add one more thing. So I think learnings from us, PTM in India, is when you are innovating, I think you should innovate for like scale. So whether it was on consumer payments, merchant payments, or any other things which the intent was to solve for scale, because scale gives you like better cost structures, better economies. Second thing is you need to have like alternate monetization structures. So like in India, you can't make money on payments, and that's why you do cross-selling of financial services, cross-selling of commerce to actually make money. And that's how the idea is that you are innovating to bring scale, you are innovating to say bring on acquisition of customers and merchants, and once you have that sizable base, then you're able to monetize them by doing cross-selling. And that's all has worked for us in India, and the intent remains same, that once we innovate, we should solve for the industry and not just solve for like small use cases with small population segments.
All right. Okay. If no more question, we move to a question for Pak Imansa. Pak Imansa has two questions for Pak Karim. One regarding the fully digital bank and one regarding RegTech. Please, Pak Karim.
Thank you, Pak Imansa. So the first one is digital bank is still attached to headquarter, but I'd like to sort of like broader. It means that whether digital bank needs a physical presence. Sorry. From our own experience, because actually we started with a license of Bank Umum. We actually already have 6 branches, but so at the time we already have 6. But I would like to, I think from this aspect, it really depends on the readiness of our customers. When we first launch, customers always ask where is Bank Jago headquarters, what it is. And therefore, back in 2021, for us, it was quite important to have a presence so that we can point out to customers who, it was still a novel thing back in 2021. Yes, we have a branch presence so that the customer knows that, you know, we are not abal-abal. Because at the time, if you remember, there was this song, Ayo Bank Jago or something. Right? So they said, hey, is Bank Jago real or not? So they sort of like were surprised. They downloaded the app and then, oh, it's a real bank. You know, they asked for your KTP, etc., etc. So yeah, I think at the time it's sort of a lot of customer education. But I do believe right now we have sort of like passed that phase. The current segment, if I say, is already ready for a fully digital bank. And therefore, we do not foresee that you especially need it. But we also want to expand our services to, let's say, more like wealth management and SMEs. And I believe for SMEs, they still need to have to come to the relationship managers. We, Bank Jago, actually opened a branch this year in Surabaya, again for presence that, you know, the customers in Surabaya see that Bank Jago is there. Another important component actually is to how to serve the customer and give them the confidence that our contact center, which we call Tanya Jago, can really resolve their problems, so, or their questions, etc. Once we can prove that, then the customer can really understand that there's actually no need to have to face-to-face or come to a physical branch. And so far, we see that there is no more questions of whether they need to come to a physical branch. Maybe still for specific things, let's say if you want to apply for a visa for overseas, right? You still need to have a statement of account. So we still need to come to the branch, you need to print it out and then have the stamp of the bank. But other than that, I don't see any specific ones. So that is number one. The second one is RegTech on a national basis. I fully support this, Pak Iman, but we call it the Complio bot in our case, the RegTech that we create. But it's actually a combination of two things. Obviously, the regulations of OJK, POJK, and PBI, etc. To me, that part we can obviously share, but there is an area where our Complio bot is a combination between regulation of POJK, PBI, and others, plus our internal banking process. So our internal SOP, we call it. So our SOP is also there, and therefore when you develop, the questions for this bot is actually a combination of both external policies and internal SOP. And obviously our internal SOP is different for other banks, but I believe that if there is a need for us to quote-unquote share the Complio bot, so to speak, that has the content of POJK and PBI, then we will gladly share. But the problem is, again, is the accountability. Because we made it, and then we come, if a person asks, okay, what is the limit for a certain transaction, because it's our bot, then if it's wrong, then our internal, we will obviously be liable for that. But if we share with other banks, although we definitely would want to do that, then there is this liability piece that still needs to be addressed as well. So I think that's it for me.
Yes, Mr. Kumar, I think Mr. Imansa has one question for you about the parameter.
I think that's a great question in terms of how do we leverage like alternate data coming from, say, payment providers or fintech companies to kind of create like an alternate credit score which could be leveraged by other players. This is something which is already in the works in India. So we're working with the regulators to create something called a digital payment score. So it is analogous to a bureau. If I talk about, say, India is like 1,400 million people, but less than 200 million people have bureau scores. But more than 800 million users actually use payments. And if you are able to kind of understand the payment behavior of consumers paying on merchants, consumers paying their utility bills, consumers paying their telephone bills, and a lot of these understanding, because payments is like an everyday use case, then we are able to kind of create that alternate credit score, which we would like to kind of publish it so that the whole industry can leverage that, the whole industry can constantly improve that credit score also, because the whole topic is financial inclusion, and if say less than 200 million people have access to credit bureau, then you can't leave the next 800 million because they don't have access to credit bureau. So a great suggestion. I'm sure that under the leadership of OJK, we can also consider this to be made this in Indonesia, where you're able to leverage payment transaction data, then behavior on various fintech and banking apps to kind of create that alternate score which could be leveraged by all participants in the industry.
And last, Pak Dimitri, I think Pak Imansha has 2 questions for you.
Okay. About the power for mining, in my opinion, it is very big probability that it will happen again. So I think at least 3 or 4 strategies for Indonesia. First is campaigns to use the power efficient computation devices. The second is Indonesia now all of the electrical generation is 93 gigawatt, and it will be at about more than 200 gigawatt in 2060. So Indonesia should build a lot of renewable energies. And the third one is to audit the using of green energy and energy for all institutions in Indonesia. And the fourth, I think if they use it for mining, maybe PLN should think about another billing rate. The last is important, I think. This is for the power part. And sudah ya, customer protection. Yeah. Consumer protection, according to the OJK guidance on digital resiliency, it has been explained very good for the context of commercial banking. I think OJK can adopt this kind of guidance also for digital asset industry. And maybe one of the most crucial one is to educate the customers to differentiate between the fake and the heaven. I mean that they should understand statistics, they should understand confidence interval and so on. They can differentiate between Ponzi and non-Ponzi, and etc. Like this one.
All right, we move on to the last question from the floor. Mr. Hanif has a question for Mr. Kumar, I think about e-KYC and the maximum capacity of custodian banks in Indonesia. If there is any insight from Indian custodian banks.
Yeah, so on KYC, I think one interesting lesson from India is how do we create real-time APIs with government infrastructure for doing KYC. Like from what I understand, even for in Indonesia, if you have to onboard a merchant, then you don't have real-time APIs. A merchant's document has to be collected, and the merchant gets only live tomorrow. While in India, we have real-time APIs to verify individuals' KYC, whether it is their tax credentials, their identity credentials, and similarly for business, you have business KYC. Again, for business KYC also, we have real-time APIs to verify the business document of the business. And because you have this real-time APIs available with the government infrastructure, you're able to do instant onboarding. And we're able to do instant onboarding, then the confidence of the customers and merchants is more because they know that I provided my documents and I am able to do transactions instantly. That kind of really helps kind of grow the momentum. So I would again urge OJK under their leadership to kind of consider how do we create those real-time APIs for identity verification, for business proof verification, so that onboarding and KYC process becomes much more seamless. And the second point is once you kind of create those real-time APIs, we also need to use what our friend has worked or ensuring that we are able to create the right kind of identity verification, fraud preventions, so that there is no identity abuse also when you're doing onboarding of users real time.
All right. I understand there's one more question for Pak Dimitri from...
About PDP, Pak, ya. About PDP, I think that CIPP, Certified Information Privacy Professional, is very good, but it is not enough, definitely. Because the weakest point actually is in all people, not only the private officer, but all people. The weakest point is in all people. I have an experience in survey in the agent banking, and we can see all of the private information everywhere in their desk. Nowadays in Indonesia, there are thousands or maybe million agent banking. So I suggest that the large agent banking should also standardize by using ISO 27000 series. And the second one, the technology, at least the company should use DLP, data loss protection, or information privacy protection that can follow all of the private information whenever and wherever transacted. Like this part. People, process, and technology should be completed. Thank you.
All right, we finished with the participant offline. We move to question from all our online participants, but due to time constraint, we only accommodate 2 questions. Question number 1 from Hana Tasha from Universitas Airlangga. The question is intended to Mr. Karim. The question is, what are the challenges faced by fintech sector or banks in its implementation in digital economy? Mr. Karim?
Thank you for the question. Obviously, this is a very broad question. There are a lot of challenges, obviously, of which the first 6 that I mentioned is the main one. But going forward, I believe is that the main challenge is that the speed and the acceleration of new technology coming in is so fast that for us in the financial industry, at least, to be abreast with all this new technology coming in is very, very difficult. And not to mention also, I can also understand from the regulatory point of view, because how we can always be aligned in implementing new things while ensuring that, yes, it can make it easy for the customers, but also for us ensuring that we are still compliant. But as a part of what we are discussing here as well, that the risk is fully controlled. And therefore, I definitely am very confident that going forward, the technology in the financial sector is keep on creating new benefits, but it has to be always aligned with what we do in terms of the compliance and the risk. And that actually is the challenge for us in the financial sector overall. Yeah.
All right. We move on to the second question from Isna from Allianz. The question is intended to Ms. Jae Young Han. The question is, how does the guarantee support for microfinance work in Korea? Mr. J?
Oh, yeah. Actually, as you know, guarantee is an agreement that a guarantee adapt will be repaid lender by another party if a borrower defaults. Korea's public credit guarantee programs are designed to help individuals and small business owners with limited access to credit by reducing the risk to lenders. The government or public institutions in Korea step in to act as a guarantor, making it easier for borrower to secure loans. So actually, policy-based financial guarantees in Korea are very effective in driving financial inclusion and also effective growth. So individuals with low incomes can gain access to loans or financial services. And if the guarantee program steps in the vouch for the borrower, it reduces the risk for the lenders and makes it easier for the people who secure the loan. Actually, that guarantee program pose a risk because basically guarantor should repay to lender that if borrower defaults. So applicants should go through eligibility check. So depending on the income level, credit history, and other kind of factors relate to will of the guarantee. So we approve whether that guarantee should be applied or not.
Thank you. Thank you for the answer, Ms. J. Before we go on, I would like to ask the committee, is that time is up, or is there any one or two more questions? Okay. Okay, one more session. So I would like to, we'd like to have two more questions for the last session. The lady from the left-hand side, and Danu, as I promised. I keep my promise. Can we have the microphone around, please? In the middle section. Please don't forget to state your name and your affiliation.
Good evening to all the speakers. I am Astri Yunvia from Bank Syariah Indonesia. I have two questions for Mr. Dong. The first question is, what is the company you think is most successful in implementing AI? And for commercial bank like us, what is the most feasible and cost-efficient AI implementations that we can adopt? Thank you.
Thank you. Very straightforward question. Danu, can we have a microphone, please?
Thank you, Pak Fakhri. My name is Danu from Central Kalimantan OJK Representative Office. I have two questions. First question is for Mr. Karim. I've came across an article saying that one of the biggest challenges faced by digital banks is operational cost inefficiency. You mentioned before about the challenge also, and it says that the ratio between operational cost and income, or BOPO, for the digital banks is still higher than that of conventional bank. And it is also estimated that the customer acquisition cost for digital banks were nearly 40% or even higher than conventional bank because of the high interest savings and time deposit. Would like to know your views on this and how technology can leverage these challenges. And the second question is for Mr. Dong. You mentioned before about the use of AI, and we want to share that here in Indonesia we have so-called regional development banks, or we call it Bank Pembangunan Daerah, a type of bank which is owned by the local provincial government. So my question is, maybe it also applies to other panelists. In your jurisdictions, maybe you have kind of a success story of local banks that use AI in their operation or other forms of digital innovations, and where to start for them for using these technologies, and what are the challenges and how they use technologies to leverage those challenges. Thank you.
Thank you, Danu. We have two questions, or probably three questions for Mr. Dong, and we have one question for Pak Karim. Mr. Dong, please.
All right. So how about I answer your question first? So the question is, for regional banks, what are the suggestions to so-called start application of AI? I think overall, right, we want to go ahead with low-hanging fruits first. So what are those low-hanging fruits? So I would say, for example, like customer service. This has been proved that this generative AI has been proved to be very successful and effective to implement a kind of a bot or agent to replace human to do the Q&A, right? So I think customer service could be something that definitely be improved by AI. And the second is still on the risk side. I would say, for example, if rural banks want to target those underbanked population, you probably want to adopt any, like, for example, machine learning based credit scoring to serve those underbanked population. So I think these are two scenarios that I think these regional banks can think about. Come back to your question. Sorry, I forgot your name, but forgive me.
Bank.
Yeah. So the first question is how to define success. Or can I understand, if you understand question correctly, like the success criteria for adopting AI? I would say, honestly, this is also a very generic question. I think overall, I'm more pragmatic, regarding these kind of adoptions, right? So always we're gonna really calculate ROI, meaning return of investment. So look at cost, look at the return, and see whether it's the right timing, for you to really think about it, because it really has some cost. You need to hire people, you need to buy softwares, and you're gonna really calculate this return on investment stuff. And this is actually the only metric that I have in mind when I think about these AI applications. And then for the banks, I definitely want to also copy from what Pakar mentioned, three metrics. One is on the balance sheet, second one is on the regulatory requirements, and third one is on the risk management. So basically, these three aspects I think are common for banks to consider AI applications. Yeah.
Thank you. Pak Karim, I think Danu has one question for you about the operational cost.
Thank you, Pak Danu. Operational cost efficiency or BOPO. Okay, why is it still higher, right? This is an interesting question. I believe we need to put it a little bit into perspective. If you see like Bank Jago and the Catalyst journey, right, we didn't have anything in 2021. It means that within 3 years, we need to catch up to all the feature and functions that actually current banks already having, right? So I didn't have a chart there, but I have a chart of what each year we actually new functions we introduce. For instance, at the moment, Bank Jago is still working on its foreign exchange capability because we didn't have that, right? And if you look at that, then if you compress it in the first 3 years, clearly our capex is higher because we need to build all that from nothing. Time deposit, you name it, right? I mean, we will come from banks. So you understand, that's why our BOPO is higher. Now, so then, how do we know that we are on track? We actually benchmark ourselves also against global leaders. I can name, let's say, there's Nubank in Brazil, there's Kakao Bank in Korea. They have what we call the growth in terms of the BOPO is similar. In the first 5 to 7 years, it's obviously higher, but then after that, they can immediately go lower their BOPO significantly because clearly the capex is not there anymore. It's already been done. If I actually rephrase your question, is actually how much would be the cost of a conventional bank to, in this case for Jago, acquire 15 million customers in 3 years? And then compare the BOPO. That should actually be the more apple-to-apple comparison. And then there we can see that, oh yeah, whether we are right on track or not in terms of BOPO. But yes, internally our OKR is definitely year-on-year reducing the BOPO. And obviously from OJK, there's also a requirement. The customer acquisition cost, this is very, very interesting. Our customer acquisition cost has come down significantly. And if you see from the two ways that we actually acquire customer, one is actually through partners, and the other one is direct. I can't share the numbers because I don't know whether actually Jago has shared it, but I can tell you it's very, 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 very low compared to a conventional bank. And also you can really see that the benefits of working together with a partner is the ratio is 1 to 4. Let's say if you acquire directly, it's called 4 rupiah, but if you, for the customer acquisition through partners, only 1 rupiah. So that is why the bulk of what we do is actually working together with partners on how we can both get benefits by cross-selling our products. Yeah. So that would be from me. Thank you.
Okay. Thank you, Pak Karim. Thank you, all the speakers. I think this is the end of the session, and I would like to invite you to give big round of applause to all speakers today. I think in the second session we talk about vast array of spectrum of issues, from digital bank, from payment services, to AI, to cryptocurrency and financial inclusion. I just like Pa Anong mentioned this morning, I don't want to make any conclusion of this vast array of subjects we talked this afternoon. I just hope that you have taken away some of the points from this afternoon's discussion. I hope you find this discussion very fruitful and useful in the work that you do. Thank you very much. And over to you, Ms. Gorda.
Thank you very much, Bapak Fahri. Now have a big round of applause once again, ladies and gentlemen, to all the panelists. And could you please remain on the stage to receive the token of appreciation? And I would like to invite to please come up on the stage to deliver the token of appreciation, Ibu Kristrianti Puji Rahayu. Kami persilahkan. So the token of appreciation will be presented by Ibu Kristrianti to Mr. Karim, Mr. Kumar, Mr. Dongshu, Mr. Dimitri, and Ms. Jae Hyun-an. Kami persilahkan Ibu untuk dapat menyerahkan plakat kepada para narasumber. So once again, we'd like to thank all the panelists for sharing their valuable insight and also experiences and expertise today. And of course, your perspective have made the discussion incredibly rich and also thought-provoking. Thank you very much to all the panelists. Thank you to Mr. Karim, Mr. Kumar, Mr. Dongshu, Mr. Dimitri, and Ms. Jae Hyun-an. And now we'll have the photo session together, along with Ibu Kristrianti and also Mr. Fahri. With the panelists, official camera ready in the center. Please come closer. Yes, get closer to each other in the count of 1, 2, 3. One more time. 1, 2, 3. Thank you. May I have a big round of applause once again, ladies and gentlemen. Thank you to all our panelists. You may return to your seat. Thank you very much. So once again, we'd like to also extend our gratitude. Thank you very much to all the participants. Of course, thank you for all of you being a part of this fruitful discussion. And distinguished guests, ladies and gentlemen, from our second session, we know that financial innovation has transformed the industry and bringing greater accessibility and efficiency, but also it presents challenges like regulatory gaps and also cybersecurity risk, and also collaboration between stakeholders, government institutions, and also startup is crucial for sustainable progress. And also we'll learn about the importance of adaptability and continuous learning to navigate the rapid change in this space. And ultimately, innovations offers immense potential, but it requires responsibility, foresight, and also partnership to ensure the benefits are fully realized. So distinguished guests, ladies and gentlemen, after this, please don't go anywhere because we are going to have the conclusion. We are going to hear the closing speech that will be soon delivered by the head of OJK Institute. But before that, ladies and gentlemen, we would like to remind you that after this, we have some important information. Please kindly don't go anywhere because I'm going to let you know the information in the end of our session for today. So distinguished guests, ladies and gentlemen, now without further ado, to deliver the closing remarks, we would like to invite the head of OJK Institute to please come up on the stage. Ladies and gentlemen, I present to you Mr. Agus Sugiarto.
Assalamualaikum warahmatullahi wabarakatuh. Santi Santi yang kami hormati, ladies and gentlemen, the honorable ladies and gentlemen, Bapak Ibu yang kami hormati, we would like to say thank you very much for your participation today from the beginning in the morning until late afternoon today. First of all, I would like to say my apologize if there is anything that you cannot expect better than what you want. That's my apologize. And secondly, we would like to tell you that any material will be sent or can be got by the link after this after this seminar. So any information about the seminar, so you can quote for any other purposes. Third, after completion of this course, please scan the evaluation form. This is very important for us because we may need to make any improvement for the International Research Forum from OJK Institute. And as appreciation for your serious attendance, your time, for those who participate in this room, there will be goodie bag outside, so you can pick the goodie bag. And last but not least, thank you for the committee, thank you for the research group, thank you Bu Ida, Pak Bayu, Pak Setiawan, Pak Ivan, Pak Mulia, and anybody in the research group, Mas Danu, Mbak Sulis, Mbak Widyaningsih, and any others that I cannot mention one by one. And also thank you very much untuk Ibu Puji Rahayu. Yeah. Thank you for Ibu Puji Rahayu as the host that allow us to have the seminar here and supporting us on the logistic area. Again, thank you also for senior advisor yang saya hormati Bapak Anung dan Mbak Fahri, who moderate the speakers from the beginning until this afternoon. And also thank you very much Pak Irnal as Deputy Commissioner who supervised this seminar. Bapak Ibu, terima kasih banyak. Again, thank you for your coming, and my apologies if there is anything wrong or you cannot meet your expectation. And thank you for the speakers who fly from everywhere, from US, from Korea, from Singapore, from India, who fly to Jakarta, and tonight, maybe tomorrow, fly back to your country. Also, the speakers from Indonesia who fly back to Bandung or Jakarta. Again, thank you for your participation, Pak. Mr. Dongsu, Mr. Owen, Mr. Kumar, Pak Dimitri, also Mr. Richard Su, yeah, from TikTok, yeah. You already here. Thank you very much. And thank you again for everybody who have been having the seminar offline here. Thank you. Terima kasih. Wassalamualaikum warahmatullahi wabarakatuh. Santi Santi
Terima kasih. Thank you very much, Mr. Agus Sugiarto, for the closing speech. And as Mr. Agus already mentioned before, ladies and gentlemen, that as a requirement to get an e-certificate, please kindly make sure that all the participants online and also offline fill and also submit the feedback. So you can scan the barcode. Could you please give the barcode on the screen one more time? Show it one more time, please. So ladies and gentlemen, this is the barcode that you can scan for our feedback. So you can get the e-certificate for that, and also all the materials can be downloaded right over here. So you just need to scan the barcode that we have already prepared for you on the screen. And also please kindly complete the form before the webinar and also the seminar ended as a requirement to get once again the e-certificate attendance for today's webinar or seminar. And ladies and gentlemen, as Mr. Agus already mentioned also, that today before leaving, you can exchange the souvenir, the vouchers that you get in the reception desk. So please kindly make sure that the reception desk that you went is the same like the reception desk that you are going to redeem your vouchers for today as well. And also once again, ladies and gentlemen, we are extend our heartfelt gratitude. Thank you very much once again for attending our special event. May I have a big round of applause, ladies and gentlemen. Thank you very much for the energy. And we look forward to seeing you in the next future. So ladies and gentlemen, have a pleasant stay in Bali. I hope that everyone's becik-becik always in here. And I hope that you are creating a very good memories with all of us. Once again, thank you very much. My name is Putri Gorda. Wassalamualaikum warahmatullahi wabarakatuh. Om Santi 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 Om. Terima kasih dan sampai jumpa.